Hello students, this is your Mr. GST CA Vishnu Vardhan. So before going to watch this marathon, please make sure you're watching this introduction part for just few minutes. I'm just going to cover the key points in this marathon. So what I'm going to cover all that. First of all, what are the topics going to be covered here that I will be discussing. Next, regarding the book I'm using, the material I'm using here, and the Telegram channel, the part 2 of the marathon and the amendments video. So listen to this carefully. First of all, in the CA Inter GST syllabus there are 15 chapters, and mainly the majority of the syllabus is covered in this 5 chapters: supply, charge, place of supply, value of supply, and input tax credit. These 5 chapters have covered in this particular video, and along with Jan 2025 amendments also. So please make sure you are watching this marathon for these chapters. This is number 1. Number 2, the very important thing, for this Oh My GST revision series, I am coming up with a Oh My GST quick revision notes, a color book which actually is for sale, and as a part of Diwali offer I have given for 100 students the book free of cost. So that is over. Now the 50% discount offer is going on. If you are willing to buy that, you can buy it. Otherwise the soft copies are available in Telegram channel, which are like I have used during the lectures discussion. So coming to that book part, please understand that book is going to be a color book which I am covering the entire syllabus in just 150 pages. That is front and back put together 150 pages. That means it is going to be like a 75 papers thin book which is going to be like covering 100% syllabus, and trust me, it is going to be at top notch quality and will be best in the industry, and I'm 100% sure about that. And it will be easy for you to revise even one day before the exam also. That book is available, that you, if you want, you can buy that, and for that the registration link is also given below this video. You can check that. Next, so the material used here, the soft copy, whatever I have written, all that PDF will be available to you in the Telegram channel. The Telegram channel description link is also given in the description. So stay tuned with the Telegram channel for all the upcoming updates regarding the part 2 of marathon, etc., everything, and for the material also. So just join the Telegram channel. And next one, coming to the part 2 of this video, I'll be uploading the balance chapters. So remaining most of the balance chapters are small chapters. I will be covering them in one single video, and I will be uploading part 2 of the marathon that you can just watch. And finally, yes, whatever the marathon I'm uploading, I'll be uploading them with the amendments as well, but a separate video for just covering the amendments for your Jan 2025 exams also will be uploaded in the YouTube channel. So I need not say, stay tuned to the YouTube channel. That means please like, comment, and share that to your friends also, and subscribe the YouTube channel. I'll be seeing, or I'll be waiting for your support for this first marathon video which I'm uploading. Thank you so much. Yes, you can continue with the marathon. So good afternoon everyone. So we are going to start the revision of CA Inter, and this revision series I want to call it as Oh My GST. So in this Oh My GST series, what we are going to do is we are going to quickly revise the topics, like all the chapters from exam point of view. So in our regular classes, regular batches, we'll be discussing the logic of all the provisions, why that provision, all that stuff. But in this is a series, we will not be discussing any logics, all that stuff. We will be discussing the provisions, and with the help of the provisions, the conceptual clarity, what you get here, you practice the questions in the question bank, and also the ICA study material, all book back questions, whatever it is, so that you will be thorough for the exams, right? Without wasting further time, let us proceed. So I am not touching the first chapter, the introduction chapter. It is up to you. You can just go through that and you can revise. So I am straight away going to this chapter number 2, supply, right? So now coming to the point. In this chapter number 2, supply, we are going to see only 2 sections, section number 7 and section number 8. So these 2 sections will be discussing in this chapter. And section 7 is what? Section 7, everybody respond in the chat box. Chat box is open for you. So in this video itself, we'll be discussing along with the amendments applicable for Jan 25 exams, and also we'll have a separate video uploaded in YouTube also regarding the amendments, that also you can refer if you want, right? Fine. So now guys, listen. First, in this particular section, what we are going to see, section 7 is all about supply. In section 7 supply, sir, it is mainly about subsection 1, which is talking about supply, and subsection 1 is having clause A, AA, B and C, which are talking about supply concept. Correct. So section 7 subsection 1 clause A, what it needs to call it as a supply. Now first of all, from this chapter please understand which type of questions they are testing in exams. In exam they are giving a scenario and they are asking whether it is supply or not, sometimes whether it is taxable or not. When they are asking whether it is supply or not, we should be seeing section 7 subsection 1 provisions along with schedule 3 also, right? So question is whether it is supply or not. For that we should have a knowledge of section 7 along with schedule 1 and schedule 3. So first, section 7 subsection 1 clause A, what it says. Section 7 subsection 1 clause A says, sir, to call a transaction as supply, fundamentally there should be supply of goods or services or both, obviously. And you know, supply is a taxable event. To levy GST there should be supply between you and me, right? So between you and me there should be supply of what? Goods or services or both, and that should be done for consideration. And there should be, obviously, it consideration can be what? Monetary consideration, non-monetary consideration. It can be something in return, like I am doing something for you or I am abstaining from doing something for you. That means consideration, if you know, we have already seen the meaning. Sir, it can be in money or it can be otherwise. It can be cash or it can be kind also. Or it can also be monetary value of doing something for you. For example, I am filing your income tax return and in return you are giving some healthcare services to me. So anything, you are doing something for me or you are not doing something for me. So there should be consideration and there should be business. If all these conditions are satisfied, then we can call it as supply. For this, sir, the important thing is we have to know meaning of certain points. One is goods, the other is service, the other is consideration, the other is business. Goods, everybody knows, sir. Goods means what? Every kind of mobile property. In this goods definition, the important thing is we should understand money and securities are excluded from goods definition. So if you are purely dealing with money, or if you are purely dealing with securities, that means buying and selling this shares, debentures, all these things. So if you are purely dealing with money, for example, I give you 1 lakh rupee and take 1 lakh rupee, then there is no goods involved here. So goods excludes. The important thing here is exclusion, money and securities, right? So another important thing here in goods definition is, in goods definition, sir, we have included actionable claims. And if you remember, actionable claims, our whole agenda of adding actionable claims in the definition of goods is to tax lottery, betting, gambling kind of events. So that is why we have seen in schedule 3 also specified actionable claims. The whole agenda of adding actionable claims word in goods definition, I repeat, it is purely to tax lottery, betting, gambling, casinos, online money gaming and horse racing. These 6 activities only will be treated as supply of goods which are satisfying the word of actionable claim. Any other transaction which is satisfying the meaning of actionable claims will not be treated as supply because of schedule 3. Again, in schedule 3, let us take that point right now. Just continue. Goods definition, simple one. Every movable property, even though it is attached to land, if you can separate it from the land. For example, see here, Mr. Pushparaj is selling 10,000 red sandalwood trees to Mr. Billa. Whether the trees are attached to land and forming part of land? Yes, but still you are able to separate it from the land. You are able to separate it from the land. So obviously we call it as goods. Am I clear with that? So that is one story. Now, so goods definition, as we are discussing, goods means every kind of mobile property, even though it is attached to land, we call it as goods if you can separate it from the land, right? So now you tell me here, Mr. Hulk is selling Stark Towers to Dr. Strange. It is attached to land, but can you separate it from the land without destroying it? Unless, of course, even if Hulk is moving it also, he will destroy, he has to destroy it. So because it is immobile, even though it is attached to land, we cannot separate it, we cannot call it as goods. And you know, we cannot call it as service also. Clear? Right. So that is what all about goods definition. Goods means every kind of mobile property, even though it is attached to land, if you can separate it, it is goods. And also it excludes mainly money and securities, but it includes actionable claims. If you see example, Mr. Ranbir is transferring 1 lakh equity shares to Ms. Krashmika, equity shares of Animal Private Limited for 25 lakhs. Please understand, this is purely transaction in securities. Transaction securities are neither goods nor services. You know service definition also. Goods doesn't involve securities, so this transaction is not goods. Sir, service we cannot treat it as service. The loss is service definition. If you remember, service definition says, service definition itself is starting with service means anything other than goods, other than money, other than security. That means, I repeat, money and securities are not included in goods also, not included in services also. Am I clear with that? So this is not at all a supply. So we write SOG, SOS. SOG means supply of goods, SOS means supply of services. So this transaction is neither supply of goods nor supply of service. Clear? So that is what the point, right? Next, imagine there is a stockbroker who is helping Mr. Ranbir. So she is connecting Ranbir and Krashmika like to sell these securities. So she is providing services as a stockbroker. Can I call it as supply? Yes, she is not selling any securities to Ranbir. She is not selling any money to Ranbir, or she is not doing anything like that related to, like, she is not giving money or she is not giving securities, but she is giving advisory services related to securities, or she is connecting the buyer and seller. That is supply of service. So please understand, money is not good, money is not service. Securities is not good, securities is not service. That doesn't mean that whatever related to money and securities, for example, I am giving advisory services related to whether you can buy certain securities or not. I am giving some documentation for buying their securities. Or you can take here, the sale of land is neither SOG nor SOS. That is neither supply of goods nor supply of service. That means it is not good, it is not service. But you tell me, if there is a real estate agent here, we have discussed in the class also, if you remember, Spider-Man is a real estate agent. That is why he is jumping from one building to another building. For what? To search whether there is to let boards or for sale boards are there, and any buildings are for sale or land for sale are there. He will be checking. So he is a real estate broker in this case, and he is charging 1% commission out of 100 crores. He is charging 1% commission. Is it goods? No. But is it service? Yes. Sir, land is not good, not service, sir. But whatever related to land is also not a good, not a service. Sir. We should not think like that. We should see that independently, right? So he is providing just advisory services whether you can buy that land or not. He is providing some documentation charges. He is providing some legal services, anything. So we should see that independently. Land, yes, immobile. Surrounding to land, whatever you are providing, that is also not a supplier. No, sir, it is not like that. We should check that independently. Same way here also, securities is not goods, securities is not service. But whatever related to securities, is it not service? We have to check that independently again. So surrounding this immobile things or securities, all that stuff, whatever you are providing, that we should check independently. So that is why here stockbroker activities are services, sir. Here they are not selling the securities. So that is what the concept. And as I told you, sir, anything attached to land and you are able to separate it, that is also goods, and it is supply of goods. Suppose you take, for example, Urta Punjab National Bank Mumbai head office is transferring cash 250 crores to its Chennai branch. This is money. Money is not given in definition of goods. Money is not given in definition of services also. So this is not supply at all. This is not supply at all. Am I clear till now? So we have seen goods definition. So goods definition says, goods means everything which is movable but excludes money and securities and includes actionable claims. Fine, super. And also incidentally we have seen service definition also. What is the definition of service? Service definition says the service means anything other than goods, other than money, other than securities. Are you understanding the point? Service means anything other than goods, other than, if something is already classified as goods, don't classify it as service. And money and securities obviously excluded from goods definition also, and you don't bring them under services by using your creativity. They are not even services also. It is neither SOG nor SOS. That is neither supply of good nor supply of service. But sir, money is not supply of goods, money is not supply of services. But the interesting thing is, in the inclusion, that anybody is allowing you to use money. or anybody is converting money from one form or mode or denomination to another form, mode or denomination for a separate consideration, then it is service. I repeat, sir, money is not service, but if you are allowing somebody to use your money, or you are allowing somebody to convert the money from one form currency denomination to another form currency or denomination, that is what? That is service. So that is the reason why when Urta Punjab National Bank is transferring cash to its branch, we are not calling it as supply. But the same Urta Punjab National Bank, if the same Urta Punjab National Bank is providing a loan of 500 crore to Mr. Ajay Malia for an interest of 9.75% per annum, sir, there is a separate consideration of 9.75% per annum. I am allowing you to use my money, for which I am charging some extra consideration. Then it is supply of service. The same way, sir, the same bank is providing to some a person converting dollars into rupees and charging a commission of 0.05%. So you allow somebody to use your money and take consideration, or you convert money from one form currency denomination to another form currency denomination and collect some consideration, extra consideration. That extra consideration part alone is service. Am I clear? Right? That means you imagine you are having a savings account in SBI, or you are having a fixed deposit in SBI. Sir, SBI is paying you interest. Why they are paying you interest? You are allowing SBI bank to use your money. Are you understanding the point? That means you are providing service to SBI bank. Clear? So that is what the concept here. Money is not goods, money is not service, but allowing somebody to use your money and you charge extra consideration, then only it is service. Or convert money from any form to any form and charge extra consideration, that extra consideration alone is service. Right? So hope that is clear for you. Right? So service means anything. Okay, service means anything but other than goods, money and securities, but includes what? But includes use of money or conversion of money, for which a separate consideration is charged. And third point, we have also seen, sir, anybody facilitating or arranging transaction securities, that is also service. We have already seen their example, Joya stockbroker, right? So there we are done with goods and services definition. Am I clear till now, my everyone? Now coming to the next one. Consideration. As we have already seen, consideration can be, sir, consideration can be monetary consideration also, it can be non-monetary consideration. And also I am doing something for you, sir, instead of paying money. So I am filing your income tax return and you are giving me healthcare services. So like this, agreeing to do something or agreeing not to do something is also taken as consideration, right? So that is the point. Apart from that, nothing else is relevant here. Let us not worry about that. And deposits, whenever we talk about any security deposits or refundable deposits, any kind of deposit, whether deposit is to be treated as consideration or not, it purely depends upon the intention of the supplier. If the supplier intends to treat the deposit as consideration, then only that will be treated as consideration. Otherwise deposits will not be treated as consideration. That means, in simple words, if the deposit is a refundable deposit, he is not treating it as consideration, hence it is not a consideration, because he will refund you tomorrow or in future. But if it is a non-refundable deposit, that means his intention is to adjust that amount as consideration, so that is treated as consideration, right? That is one more thing. And sir, consideration can come from any person. That is a normal common one, you know that. Coming to this subsidy part, I will discuss at value of supply chapter. Here it is not relevant, don't worry. Shall I continue? Now here we have to understand, sir, as we were discussing, to call it as a supply, section 7 subsection 1 clause A, this is the main thing which covers mostly all the transactions. So section 7 subsection 1 clause A, it says there should be supply of goods or services and it should be for consideration. That means, understand, if something I am doing without consideration, can I call it as supply? No, obviously. So simple rule is no consideration, no supply. No consideration, no supply. But you know there is an exception, schedule 1. Sir, in schedule 1 there are 4 activities which we treat as supply even though they are done without consideration. Now everybody listen carefully. See, in exam, if there is any question given to you asking you whether it is supply or not, or any problem when you are doing also any transaction, if it is given without consideration, straight away you should not jump into the conclusion this is not supply. Please understand that straight away you should not jump into the conclusion this is not supply. Sir, you should check schedule 1. In schedule 1 there are 4 activities. In that 4 activities, if you are able to fit that particular given transaction, then it will be treated as supply. So if you are not able to fit that in schedule 1, then only it is not a supply. So if any transaction is given without consideration, then you should see first what you should see, schedule 1. And in schedule 1, out of that 4 activities, if you are not able to fit that, then only it is not supply. Otherwise, if it is fitting somewhere in schedule 1, any of the 4 paras, it is very much treated as supply, even though done without consideration. But what is the general rule, everybody? What is the general rule? The general rule is no consideration, no supply. If there is no consideration, there is no supply, but still there are exceptions for that. Exceptions are given in schedule 1, right? So we are done with consideration definition also. Now coming to the point. Sir, the interesting thing is whatever you are doing here, that should be done in the course of business, and business definition is given in such a wide manner that it covers almost anything and everything, sir. Whatever the trading activity I do, commerce I do, manufacture, profession, occasion, out of all these things, sir, the interesting thing is whether or not you do it for monetary benefit. That means whether you are doing it with intention to make profit or not, it doesn't matter. It is business for me. Sir, I am a charitable institute. Sir, I am doing it for charity, sir. All these stories you go and tell to income tax department, they will give you some exemptions. But under GST, we won't give you any benefit. So for me, if you are a charitable institution also, you are doing it for charity also, whether you have profit intention or not, all these things doesn't matter. For me, you are doing business. I am calling central government, state government, local authorities, which are engaged as public authorities and doing their activities itself, I am calling as business. Then how will I leave you people? So business definition is so wide enough, it covers anything and everything except one activity. What is that except one activity, Ra? What is that one point? Except what you do, that is individuals in their personal capacity. That alone will not be treated as supply. Now see, for example, here I guess you are clear with business definition. Business definition, first of all, the point is, sir, whatever you do is business, sir, whether you have an intention to make profit or not. I don't worry about the volumes, or in what volume you are doing. And one more thing, not only your main activities, sir, whatever you do incidental or auxiliary to the main activities, that is also supply, sir. That is also supply. Am I clear? Now see, for example, MSD, a cricketer, is endorsing a brand. Is it his regular profession? The professional brand ambassador? No, sir, he's a professional cricketer, but still we call it as business. Isha Foundation conducting a winter yoga campaign for 100 rupees per person entry fees. Why 100 rupees per person entry fees? Just because, sir, to cover their expenses, sir, for organizing all these things. Then are they doing it for profit? No, but still I call it as supply. Right? Now, next, because it is business. Next, JKSC providing coaching to students is their main business. But giving them the books, conducting the test series, selling the old furniture, all these things, is their main business activity? No. But still understand, they all are incidental for the main activity. That means buying and selling, like disposing the old furniture, old assets, are also nothing but what? Incidental for my main activity. So please understand, not only the main business activities, but also what and all are incidental for your main business activity, that is also to be treated as business. You cannot escape that. No, sir, this is not my main activity. Right? So that is one thing. Next, as I was telling you, government doing their duty. For example, let us take Tamil Nadu State Police Department is providing security for your 4th wedding. For an additional consideration, you might have paid to commissioner office some challan amount you have paid, or leave that also, sir. You want to construct a house in your panchayat or municipality, you are going and getting building plan approval for that, and you are paying a challan amount. You are paying a challan amount for the local authority. Local authority is doing their duty, but for some small consideration. Doing their duty is also business. That is what the concept, right? So these are the important things in business definition. Now coming to the interesting part, as I was telling, which is not covered in business definition. See, in business definition, what is not covered is you do anything in your personal capacity. That will not be covered under business definition. That means it will not be treated as supply. It will not attract GST. So now, for example, let us assume you are an employee of Google company. And you are using a BMW car. Now there is a latest luxury car released in the market, and you want to buy that latest car. So what you are doing, you are selling your old BMW car which you have been using for your personal purpose, all that stuff, to Vishnu. I am buying it for 25 lakhs. You tell me, is this done in the capacity of an individual as a personal capacity, or is it for a business purpose? Can you say there is business here? No sir, there is no business here. Please understand, business definition covers almost anything and everything, but the only one area where we can escape is where we are doing the activities in our personal capacity, that you cannot call it as business. Clear? Right. So that is not a supply. Now the same old BMW car, what if you are selling to Cars24 Private Limited? What if you are selling to Cars24 Private Limited, which is a second-hand car dealer? Sir, you are selling it to Cars24 Private Limited, a second-hand car dealer. We should be seeing from whose point of view, whether there is business activity or not. We should see from supplier point of view, not from the recipient point of view. We should see from supplier point of view. We should not see from recipient point of view. So here Cars24 Private Limited, yes, for them it is business, but you are selling car to Cars24 Private Limited means we should see whether business element is there or not from your point of view, not from Cars24 point of view. Am I clear, everyone? Shall we proceed? But if Cars24 Private Limited is selling that car to Vishnu, sir, for Cars24 Private Limited, selling the second-hand cars is business only, no sir? Then obviously it is supply only. Am I clear till now? Shall we continue, everyone? Respond in the chat box. See, first of all, understand, watch the video till the end. We will cover some small concepts also, important concepts also, amendments also, everything. But the only thing is you should watch it till the end, then only the purpose of revision will be fulfilled, right? Yes. So the next one. So we have discussed even business definition also, my dear friends. I repeat, business definition is so wide enough. It covers almost anything and everything. Whether you do it for profit or not, still we call it as business. Whether you are doing it as your main activity or incidental activity, we call it as business. And whether you are a government also doing your duty, still we call it as business, right? So that is the point. And whatever we do in our personal capacity, that we cannot call as business, so it will escape the ambit of business and it cannot be treated as supply, and hence it is not GST. And one more thing, please understand here, sir, whether there is business element is there or not, we should see from whose point of view. Here in the law it is clearly given, in the supply shall be made by a person. Supply shall be made by a person. Supply shall be made by a person. Clear? Supply shall be made by a person in the course or furtherance of business. That means we should see from whose point of view? We should see from supplier point of view whether business element is there or not in section 7 subsection 1 clause A, because they are talking about supply made by a person. That means what? We should see from supplier point of view. Am I clear, everyone? So can I assume 7.1a is done here? 7.1a is done here. So 7.1a, when you are looking at a transaction, whether it to be called as supply or not, we should see various aspects. Number one, whether there is goods or service, whether that is done by a person, and whether it is for consideration and it is done in the course of furtherance of business. We have discussed goods or services definition, we have discussed consideration, we have discussed person also, and coming to business also. Coming to person definition, do you remember person definition under GST? Person definition under GST, it is very simple under GST, because whatever the person definition is there in income tax, for that if you add central government and state government, then we can call it as person under GST. So the only difference is, see, in income tax you will be seeing individual, HUF, AOP, BOI, artificial juridical person, body corporate, all that stuff, local authority, everything. Here the only difference is, for the same definition you add central government and state government. 7(1)(a), very simple. The basic things to be there in 7(1)(a) to call it as supplies. For example, Greater Chennai Corporation is maintaining a park. To enter into the park, everybody paying 20 rupees and entering into the park. Now, Greater Chennai Corporation is a local authority person. So, person is there. Allowing you to premises is a service. And there is consideration also, 20 rupees entry ticket. Allowing anybody into any premises for consideration is covered in business definition. That means service is there here, consideration is there, person is there, and it is done in course of furtherance of business. When all these elements together they are present, then we can call it as supply. Am I clear? That means 7(1)(a) needs what? As we have discussed, as we have started the discussion, 7(1)(a) section 7 subsection 1 clause A needs goods or services or both for consideration in the course of furtherance of business, of course by a person. That is what all about 7(1)(a). We are done with 7(1)(a). Hope you are clear till now. So that is 7(1)(a) for you. Sorry, 7(1)(a) for you. Let us move on to 7(1)(a). Next one. Right. So 7(1)(a). So what is 7(1)(a)? Now listen, 7(1)(a), normally to call a transaction as supply, there should be two persons. But normally, if there is any unincorporated body providing something to their members, so the unincorporated body providing something to their members, this unincorporated body will not enjoy the status of separate legal entity. So, if you see, there is an unincorporated body providing something to its members. Please understand here, sir, this unincorporated body does not enjoy separate legal entity status in the eyes of law. So this unincorporated body and members are one and the same. There are no two different persons. So to call it as a supply, there should be one supplier and there should be another recipient. Correct? I cannot trim my beard and put 100 rupees in the pocket and say this is supply, pay GST. So here in one judgment, Honorable Supreme Court has identified, when there is unincorporated body and its members, anything provided between them, there are no two separate persons, so you cannot call it as supply and there cannot be GST. So now what? Please understand, the crazy thing is, when our taxation departments gets some judgment against them, and if they don't like it, their ego will get hurt, correct? So they will make an amendment in the law. So they have made an amendment in the law, brought 7(1)(a) into picture, saying that any transaction or activity made by a person other than individual. With individuals, we don't get this problem. As I was telling you, I cannot trim my own beard and put 100 rupees in the pocket and say, supply, let us pay GST. So this problem comes with some associations or any AOP, BOI kind of things. So here they are making the provision now in such a way, they are covering every type of organization, whether registered, unregistered, whatever you call it, HUF, partnership from AOP, BOI, everything. Any person other than individual, to their members or constituents, sir, they are providing anything between them. It can be goods or services, vice versa, whatever it is. Sir, we call it as supply, and that doctrine of mutuality, there should be two persons, all that logic will not apply here, because they have inserted a wonderful explanation below that clause saying that such persons or members are there. No, that is that body, all the stuff, and its members. The body, that is the person we call other than individual, and its members, will be deemed to be treated as two separate persons, and anything happening between them is deemed to take place from one person to another person. That means simple, 7(1)(a) is overriding the Honorable Supreme Court judgment, saying that in case of any unincorporated bodies or anything, sir, anything happening between them, there are no two separate persons, you cannot charge GST. What we are saying here, we will assume that there are two persons now. So any AOP providing something to their members, any partnership from providing something to their partners, or vice versa, even though they are not treated as two different persons, they are one and the same as per any other law, as per doctrine of mutuality or anything for that matter. All those provisions will not be applied here. It is only what we will assume there are two persons and we will charge GST and we call it as supply. Clear? So that is section 7 subsection 1 clause AA for you. So understand, my dear friends, normally when the law was made, section 7 subsection 1 clause A, B and C were present, and later on through amendment what we did, we wanted to override the honorable Supreme Court judgment and we brought a clause in middle, clause AA, right? So that is what the logic behind clause AA, and we have understood what is clause AA. Now you tell me, we are left out with what? Clause B and clause C. So what is clause B, what is clause C? So clause B, and you know clause B says section 7 subsection 1 clause B, you know clause A needs business and consideration without any doubt to call it as a supply. But clause B says I am B, I don't want B, that is I don't want business. And clause C says I am C, I don't want C, that is consideration. That means, sir, clause A needs business and consideration, but clause B says I don't want B. That means this is an exception to business. This is an exception to business. What clause C says then? What clause C says then? I am C, I don't want C. That means this is an exception to consideration. This is how you can remember the clauses also. Clause A needs business and consideration, B and C for sure. Clause B needs just consideration, no need of business. Clause C says I need business but I need not have consideration. So clause B is an exception to business. Clause C is an exception to consideration. So what is clause B saying? Clause B is saying, sir, importation of services, if there is consideration, and whether or not it is in the course or furtherance of business, I don't care about that. Whether or not it is in the course or furtherance of business, I don't care about that, sir. It is supply. And one interesting thing here you have to understand is, sir, we are importing services. That means we are talking about recipient here. We are talking about recipient. I am importing services means we are talking about the person in India. We are not talking about the supplier. We are talking about the recipient. Please keep that in mind. Okay, whether or not in the course or furtherance of business. So we are talking from recipient's point of view. Clause A we talk from supplier's point of view, but clause B will talk from recipient's point of view. Everybody clear? Clause A we will talk about supplier's point of view. Clause B we are talking from recipient's point of view. Am I clear? Shall we proceed, everyone? So that is the story here. Clear? So for example, if you see, sir, Mr. Sallu Khan is importing some services. How to remain as a bachelor for life from a lady called Miss Ivanka Trump from USA. Okay, she is providing advisory services to Sallu Khan, and she is charging 1 lakh US dollars. You tell me this is personal purpose. This personal purpose. But sir, there is consideration, no sir. Whether it is personal purpose or business purpose, we call it as supply. In September 2024 exams, in MCQ questions, there was something related to this concept. So importation of service, if there is consideration, no matter whether it is business purpose or whether it is personal purpose. Here you see Donald Trump is giving some advisory services to Shah Rukh Khan for 10 lakh US dollars for business purpose. But sir, if there is consideration and if there is importation of service, I need not check whether it is business purpose or not. Whether it is for consideration or not, that's all. That is sufficient for me. If there is consideration, straight away blindly I can say this is supply. Am I clear, everyone? So with this we are done with 7.1b also. So what is 7.1b ma? 7.1b is importation of services for consideration whether or not in the course or furtherance of business, right? So that is 7.1b. Now coming to next one, 7.1c. 7.1c read along with schedule 1. So 7.1c, as I was already telling you, so 7.1c says any transaction which is given in schedule 1. In schedule 1 how many transactions? 4 transactions. So these 4 transactions, if you are doing with, one second, if these 4 transactions, if you are doing, even though without consideration, sir, we still call them as supply. But general rule is what? No consideration, no supply. But this is an exception, sir. As I already told you, if there is no consideration in the transaction, check whether they will fall within schedule 1. So what are the 4 transactions? What are the 4 transactions? Let us proceed. The 4 transactions. Number 1, you have purchased something for your business purpose and you have recorded it as business asset. And that business asset, when you have recorded, you have also availed ITC on that. Sir, when you have availed ITC on that, why I am giving you ITC? Assuming that you will use it for business purpose. But what you are doing here? You are permanently transferring or disposing that. That too without consideration. Guys, understand, I have purchased a laptop and I have taken ITC. Now if I sell this laptop also, this is supply. If I sell this laptop also, that is supply with consideration, no doubt about it. But what if I gift this to my brother or gift this to my friend? I permanently transfer or dispose this. Government give me ITC not to permanently transfer or dispose this. So if you permanently transfer or dispose any business asset on which you have taken ITC without consideration, if you do this, that is permanently transfer or dispose of it to somebody, then still I call it as supply. So I repeat, any business asset on which you have taken ITC, if you permanently dispose that, for consideration also supply, without consideration also supply, simple. For consideration 7-1A it covers, without consideration schedule 1 we are covering. So we are just making sure anybody misusing the concept of ITC, you buy something, for example, you buy an AC for your house, but you record in the books of accounts like business asset, AC purchased, AC account debit, ITC account debit to bank. You have taken ITC, and after taking ITC, what you are doing? You are taking that AC for your personal purpose. That means business asset, whatever you have purchased, sir, you are permanently transferring or disposing of that without consideration. That means you are misusing the concept of ITC. So to stop that, we are bringing this concept, sir. Permanent transfer or disposal of business asset without consideration is also supply. Hope it is clear for everyone. Okay. So that is para 1 for you. Next, para 2. What is para 2? This is what we need a detailed discussion. So para 2 is nothing but, sir, any supply made between related person or distinct person without consideration but done in the course or furtherance of business to be treated as supply, sir, even though there is no consideration. Please understand here, when we are talking about supply between related person or distinct persons, we are talking about, sir, the supply is from one related person to another related person, or the supply is from one distinct person to another distinct person. So we are talking about that. It is not from related person to distinct person or distinct person to related person. No, not like that. It is either between related persons or it is between distinct persons. Am I clear? So for that, what we should understand? We should understand the meaning of, sir, what do you mean by related person, sir? We always call our friends like Mamu, Macha, all that stuff. So we'll be calling them with some relations. So in that case, whether they will become related? No, they have given the meaning of related person. So related person meaning says, I will call you related person. I will call two of you. Okay. So let us assume there are two persons, Vishnu and Vamsi. Sir, when we can call them as related person? Vishnu and Vamsi. Sir, Vishnu is director or officer of Vamsi's business. Vamsi is director or officer of Vishnu's business. Then you can call Vishnu and Vamsi are related. Now please understand, related person means there are two persons. We are talking whether they are related or not. When they can be called as related? If they are officers or directors of one another's business, or they are partners in a business, they are legally recognized as partners. Let us assume we and Co, we have a partnership. Vishnu and Vamsi are partners. Then Vishnu and Vamsi are related because they are legally recognized as partners. Are you understanding the point? Or, sir, I am the employer, you are the employee, you are my employee. Still we are called as related. Here regarding employer employee, we'll have a detailed discussion again, so just mark it important because there is in-depth discussion on this employer employee concept also. Now employer employee can be called as related. Okay, next, when you can call them as related two persons. Sir, here look at the fourth point. In fourth point, they are talking about any person. Imagine Vishnu. Any person directly or indirectly owns, controls, or holds 25% or more. What do you mean by that? Greater than or equal to 25% of outstanding voting stock or shares of both of them. That means Vishnu is holding 80% shares in Boys Private Limited, and also Vishnu is holding 30% of equity shares, 30% of equity shares in Girls Private Limited also. Boys Private Limited, Girls Private Limited are not having any single share between them. That means Boys Private Limited is not holding any shares in Girls Private Limited, Girls Private Limited is not holding any shares in Boys Private Limited. But sir, Vishnu Vardhan is holding 80% here, Vishnu Vardhan is holding 30% here. In both of them, I am holding greater than or equal to 25%. That means, can I say here, I enjoy or they enjoy a common owner? They enjoy a common owner. Can I say common ownership here? Because of that common ownership, now Boys Private Limited and Girls Private Limited are called as related. So in this point, there are not two parties, there are three parties. One fellow is holding 25% or more of the voting stock in both of them. So these both of them are becoming related. Simple. Okay. If you see, leave fifth point aside. If you see sixth point, what they are saying? Sixth point, they are saying both of them are directly or directly controlled by third person. So fourth point is about ownership. Sixth point is about control. Control will come even through business agreements also. So control. Fourth point, common ownership. Sixth point, common control. Common control. Am I clear? Now, if you look at the fifth point, one of them directly or indirectly controls the other fellow. Best example, holding and subsidiary company. Holding company and subsidiary company. Sir, one of them directly controls the other. So they are related. So holding company, subsidiary company are called as related. Why are we discussing this meaning of related? If you remember still, sir, we are discussing the meaning of related because when you call them as related, anything happening between them is what? Without consideration also supply. Imagine holding company is having some stock, some raw material, sending it to the subsidiary company without consideration. We call it as supply, even though there is no consideration. Even though there is no consideration, we call it as supply. Am I clear now? So that is the relevance of related person, and of course together they directly or indirectly control a third person. See, that means what? The inverse triangle of sixth point. Earlier I was controlling Boys Private Limited, I was controlling Girls Private Limited, so they became related. Now Boys Private Limited is also controlling me, Girls Private Limited is also controlling me. So you both of them are becoming related now. So this is just an inverse triangle of the previous things. And if you are a sole agent or a sole distributor or sole concessionary of another person, I am manufacturing, let us assume furniture, and you all are distributors, but I have only one distributor, let us assume called Pawan. Sir, that one distributor, I have sole distributor, I have only one distributor called Mr. Pawan. So Pawan and Vishnu will become related because Vishnu is having only one single distributor. Imagine now, when whatever the stock I am manufacturing, sir, that stock I am just sending it to Pawan to sell it and bring money to me, and I am sending that stock without consideration. That is treated as supply. Are you understanding the point, ma? So these are the points of related person. So if that is the case, anything happening between you without consideration, then it is supply. But it should happen in the course or furtherance of business. One point which we have left here is members of the same family. So here, for the purpose of that, they have given definition of family. If you remember, sir, if you fit within the meaning of family definition and between you anything is happening without consideration in the course of furtherance of business, it is supply. Sir, what do you mean by family, sir? First of all, if you remember family definition says, simple family definition says spouse and children are your family no matter whether you like them or not. I mean, whether they are dependent on you or not. Clear? Spouse and children are always your family, but your parents, grandparents, brothers and sisters are your related only when they are your family only when they are wholly or mainly dependent on you. I repeat, spouse and children always they are your family, but parents, grandparents, brothers and sisters are your family only when they are wholly or mainly dependent on you. So please understand that. Now if you see the interesting point from my point of view, if you see the family definition, all that stuff, for me, my mother, so she is a parent, she is not wholly or mainly dependent on me. That means she is not my family, we are not related. Are you understanding the point? From my point of view, if you see, my mother is not my family because she is parent and she is not dependent on me. But if you see from my mother's point of view, for my mother I am the child, whether I am dependent on her or not, whether I am dependent on her or not, sir, I am her family because I am the child. So from my point of view, if you see family definition, my mother is not my family, but from my mother's point of view, if you see family definition, I am her family. That is something interesting you should keep in mind. And as I was telling, sir, let us assume there is a father who is buying a mobile phone and gifting to his son on Diwali. Can you call it as supply? Can you call it as supply? Because related person, father and son. So from father's point of view, son is related only. And father is buying a mobile for Diwali and giving it as gift to son. Whether we call it as supply or not. Respond. Respond others. Correct, Ra. Next others respond. No. Why? Because there is no business. There is no business itself. It is not done in the course or furtherance of business. It is not done in the course or furtherance of business. Am I clear? Everybody? So, if at all father is a distributor of mobiles and son is a retailer of mobiles, son is a retailer of mobiles, father is sending the stock to the son. The stock is sent by the father to the son. Whether it is supply or not, without consideration is sending. Yes, it is supply because it is done in the course or furtherance of business. It is done in the course or furtherance of business. So I repeat, you should satisfy the meaning of related and also it should be done in the course or furtherance of business. Am I clear? Shall we proceed? And whatever the doubts you are getting now, like what while watching the lecture, etc., please note down them separately, and you have my Insta ID, all that stuff, and number also. You just message me, I'll just clarify your doubts. Don't worry. Clear? Shall I continue? So the related person meaning we have understood. Anything happening between these related persons, it is even though done without consideration is supply. Till now clear up, everyone? So now we have understood the meaning of related person. That if they are related and they are doing anything between them, goods or services, without consideration but in the course or furtherance of business, it is still called as supply. Right? Now as I was telling, sir, for us the most important thing is this employer and employee concept. Now you know that employer and employee are related and anything happening between them without consideration will be treated as obviously supply. So here you also know that employer employee services are given in schedule 3. First of all, what is schedule 3? What is schedule 3? Schedule 3 will give list of activities, list of goods or services. Sir, whatever is given in schedule 3, whatever is mentioned there, those transactions will not be treated as supply of goods, as well as it will not be treated as supply of service. That means, I repeat, schedule 3 is a scenario where, sir, the supply definition is so wide enough, 7(1)(a) is so enough that it almost covers anything and everything except whatever you do in your personal nature. So anything you do here is supply, because the definition is so wide enough to cover. But government doesn't want to treat certain transactions as supply. So what the government did, sir, they have made the law in such a way, they have given one list, and in that list they have added all the transactions which they don't want to call as supply, and they have given name for that list as schedule 3. And that schedule 3, they said in the law, the transactions given in schedule 3 are not to be treated as supply of goods and also not to be treated as supply of services. They are neither SOG nor SOS. That is what the point, right? So whatever the transactions given in schedule 3 should not be treated as goods, should not be treated as services. That means it is not at all a supply. In schedule 3, if you remember, first entry itself is services provided by employee to the employer. So employee providing services to the employee in the course of employment contract is neither SOG nor SOS. That is neither supply of goods nor supply of service. That means, please understand, sir, I am joining in your company as an employee. I am providing my services to you. Yes, for that I am getting consideration, and I am a person. See, I am a person. I am providing services to you, and I am getting consideration. And also, sir, whatever any person is doing as a holder of an office, that means I am holding an office of internal auditor in your company, or I am holding an office that is a post of manager in your company and rendering my services. Any person holding a post or an office and providing his services is also given in business definition. Sorry. So in that case, it will very much satisfy the meaning of supply. And you imagine all the salaried employees has to take GST registration, file GST returns and pay GST. Is it possible? Of course, sir, it is not possible. Of course, it is not possible. So what the law says? Law says employee providing his services to the employer in the course of employment contract is neither SOG nor SOS. So if we analyze schedule 1, that related person meaning, and also schedule 3 together, we'll understand certain things. What are those now? Sir, employee and employer, between them, if you see, what is the work employee is doing? Sir, employee is doing the work which is mentioned in employment contract. For example, I am running a sole proprietor business and you have been appointed, you have been taken as my CFO. So you are the CFO of the business, of Vishnu's business, and I told you should take care of all the finance related operations, etc., etc. For that I am paying you salary. I am paying you salary, and I am also paying you some perquisites. You have seen rent free unfurnished accommodation, rent free motor car, all that stuff. And sir, during Diwali or during New Year or during this monthly appraisals, etc., etc., I'm giving you some gifts, best employee of the month, or Diwali gift, New Year gift, like that. So here I'm also giving certain gifts to you. Please understand, this salary and perquisites, whatever I'm paying you, is for the work you are doing. But this is mentioned in employment contract already. These things, salary and perquisites, are mentioned in employment contract already. So these are not treated as supply of goods, not treated as supply of service. It is neither SOG nor SOS. But sir, the gifts whatever I'm giving you, that monthly best, like maybe best employee of the month or Diwali gift, New Year gift, all that stuff, these are not mentioned in the employment contract. I mean the payment. I am giving you gift for what purpose, Ra? As a charity, yeah? I want to retain the employees. In the course of furtherance of business only, I'm giving you certain gifts to motivate you to work further for the organization, for the betterment of the organization. I'm just motivating you. I'm giving you something. Employer is giving something to the employee. Employer and employer related person, if you remember. Employer is giving something without consideration to the employee in the course or furtherance of business only. Sir, this is nowhere covered, sir, in Schedule B. So this is supply. This is supply. I repeat, salary and perquisites, whatever we give to the employee. Employee is providing services. I am giving salary. I am giving perquisites. This is also mentioned in the offer letter. So simple, remember, sir, whatever is mentioned in the offer letter, that I will pay you basic, DA, HRA, bonus, rent-free and furnished accommodation, car, maid, housekeeping, gardener, all these things are neither sock nor sauce, because they are already given in the offer letter as per our employment contract. And also you are providing the work as per that, not a supply at all. But I am giving you some, apart from this salary, apart from the perquisites, I am giving you something extra. That means it is not there in the employment contract. I am talking about the gifts, etc. I am giving to you. Sir, this I am giving to you, and these gifts I am giving to you to make sure I am retaining you. I am retaining you. Correct? So this is also done in the course of furtherance of business. So this is also what? Supply. So here there is a relaxation. Any gifts given, understand, gift is not defined in GST law. Okay. So they are saying any gifts given, aggregate value greater than 50,000 per month per employee is fully supply. But if it is less than or equal to 50,000, not a supply at all. This is the relaxation. Sorry guys. Here it is not per month, it is per annum. Sorry, extremely sorry. It is, yes, per annum. Correct. Per annum per employee. If it is aggregate value of the gifts, whatever given in that entire financial year. Sir, if it is greater than 50,000, then it is fully supply. Suppose if aggregate value of gifts is 75,000, 75,000 is supply. But if it is less than or equal to 50,000, I repeat, aggregate value is less than or equal to 50,000 per annum per employee, then it is not a supply. It exceeds 50,000, fully it is supply. Yes. yes, everybody correct. Kapilesh, yes. Am I clear, everyone, till now? So that is what the concept of employer and employee. Listen. We are not yet done with this. Whatever the work you are doing is as per employment contract, and for that work you get salary, is not a supply. You get perquisites, not a supply. Apart from that, anything you get is gift. Gifts aggregate value per annum per employee exceeding 50,000, fully supply. Not exceeding, that is less than or equal to 50,000. I repeat, less than or equal to 50,000 aggregate value of the gifts. That means once I would have given you 10,000, later on some 5,000, later on 7,000 worth gifts I have given. All put together aggregate value is less than or equal to 50,000. Then it is not a supply. If it exceeds 50,000, then fully, let us assume I gave once 10,000 worth gift, 20,000 worth gift, again 10,000 worth, 20,000, like this. If at all I have given total 75,000 worth gifts to one employee in that financial year, entire that itself will be called as supply. Now one interesting point is, sir, the work whatever you are providing to me, you are an employee, but you are not providing something to me which is mentioned in employment contract. I told you, see, for example, you are my CFO, but I also came to know that you are doing trading in stock market. Sir, I also came to know that you are doing trading in stock market. So I am asking you, you please maintain, I'll give you some 50 crore fund. You maintain that fund also, and you be the portfolio manager or fund manager, whatever you call, and you make some profits by doing trading in stock market. Whatever the profits generated, out of that I will give you 10% share or 20%, you take it. So this is something which is not as per employment contract, not as per employment contract. That means this is fully supply. Even if it is 10,000 rupees, even it is 5,000 rupees, even it is 1 lakh, 2 lakh, whatever it is fully supply. That means, I repeat, listen carefully everyone. You are my employee working for me, you get the salary, you get the perquisites, not a supply at all, no matter what is the value. Apart from that, if I give anything extra, that is like gift to you only. But this I am doing without consideration in the course of furtherance of business. Schedule 1 says we both are related, employer and employee, so it is called as supply. But there is a relaxation. What is the relaxation? If the aggregate value of gifts is not exceeding not exceeding 50,000 per annum per employee, then you enjoy the relaxation. It is not a supply, so no GST. But if it exceeds 50,000, fully taxable, fully supply and liable for GST. But sir, what if that services, whatever you are providing itself to me, you are my employee, but whatever that you are providing to me is completely out of employment contract, then it is supply. Obviously it is not covered in schedule 3. Please understand, employer and employee services only covered under schedule 3, but anything which is given not as an employee is not covered under schedule 3. That means it is very much supply. It is very much supply. Hope I am clear with this. Shall we proceed, everybody? Right. So that is what the concept. So with this we are done with related person meaning. So here I have given a flowchart properly. So employer, employee, salary, perquisites, other gifts, all that stuff. So the notes is clearly given here. So for your understanding. So this is the flowchart. Right. So let us proceed. So we are done with related person meaning. Guys, understand, we are discussing schedule 1. In schedule 1 we are done with para 1, para 2, para 2 related person only we are done. We are left out with what? One more point, that is distinct person. If you understand the meaning of related person and distinct person, please understand, the moment you know the meaning of this, the moment you know the meaning of related person and distinct person, anything happening between them without consideration is supply. So what is the meaning of distinct persons? And you know distinct persons, before going to distinct persons, and distinct persons, you know, the meaning distinct person is given in section 25. Section 25 says distinct persons means that distinct persons is given in section 25 subsection 4 and subsection 5. See, in distinct person concept, the difference between related person and distinct person is, in related person there are actually two persons and we are talking about the relation. But in distinct persons, there is only one fellow. We are treating him as two separate establishments or two separate persons. That is why we call as distinct persons. Am I clear? So Vishnu Vardhan, when Vishnu Vardhan is treated as two persons, Vishnu Vardhan is having two registrations. Vishnu Vardhan is having registration in Tamil Nadu also. Vishnu Vardhan is having registration in Tamil Nadu, Andhra Pradesh also. Vishnu Vardhan is registered in two states or registered having two registrations. These two registrations are belonging to whom? Two registrations. Vishnu is having a restaurant business. Vishnu is having a chartered accountant office. Both he is running. For chartered accountant office, I am having a separate registration. For restaurant also, I am having separate registration. But both registrations are belonging to Vishnu. But GST law says these both registrations are belonging to two different persons. Anything happening between these people without consideration will be treated as supply. That means, sir, I have registration in Andhra also, I have registration in Tamil Nadu also, sir. From Andhra to Tamil Nadu, I am sending stock, sir. Obviously, you tell me whether I will take consideration from my Tamil Nadu branch. It is like I am taking my money from front pocket and putting in this back pocket. Please understand. So the point is, sir, generally it is quite common that the stock transfers will happen between, like among them branches itself or the within the company also. Because of this provision, what is happening? You have two registrations, where same state or different states, I don't care, but you have two separate registrations. Yes sir, these two separate registrations, now I will not treat them as they are belonging to one person. I will treat them as they are belonging to two different persons. So whatever is happening between them without consideration, I will treat as supply. Are you understanding the point? I repeat, sir, I am having two registrations, sir. Same state or different state, that doesn't matter. Two different registrations I am having. Subsection 4 says, I am having two separate registrations, maybe in the same state, maybe in the different states. These two registrations, even though they are belonging to same person, we treat these two registrations are belonging to two distinct persons. So now anything happening between them obviously will happen without consideration. That also we call as supply now. That also we call as supply. Hope it is clear. And next one, the 25 subsection 5. 25 subsection 5. 25 subsection 5 says, sir, there should be two states. You are in two states. 25 subsection 4 needs two different registration. 25 subsection 5 needs two states. 25 subsection 5 says you are in two states, in Andhra and Tamil Nadu. In Andhra you are registered, Tamil Nadu you are unregistered, but both the places you are doing business. Then I will treat them as distinct persons. So I repeat, 25 section 25 subsection 4 needs two registrations. 25 subsection 5 needs two states. Subsection 4 says two registrations belonging to same person, will treat them as different persons belonging to two different persons. 25 subsection 5 says there are two states. In one state you are registered, another state you are registered. One state you are unregistered, another state you are registered. Then also you will be treated as distinct persons, and anything happening between you people will be treated as supply, even though it is done without consideration. Even though it is done without consideration. Am I clear? So now please understand here. Look at this example. Vivard Notebooks Private Limited is a company. Vivard Notebooks Private Limited is a company. Vivard Notebooks is Private Limited is a company. One person. Sir, they are located in Chennai, Tamil Nadu registered, and they are located in Andhra Pradesh, Tirupati registered. And now the stock is being transferred from Chennai, Tamil Nadu to Tirupati, Andhra Pradesh. Without consideration. Now you tell me, there are two registrations. 25 subsection 4 will come into picture. They are distinct persons. Anything happening between them without consideration is a supply. Are you understanding that? You see the second scenario here. Chennai, Coimbatore, we are in two places, but both are in Tamil Nadu only. Both are in Tamil Nadu only. But they are not having two different registrations. They are having one registration, same registration. Sir, as per 25 subsection 4, you need two registrations, but here there is only one registration. You cannot be called as distinct persons as per section 25 subsection 4. That 25 subsection 5 says you should be there in two states, but here you are in only one state. Only one state, Tamil Nadu. So 25 subsection 5 also you will not satisfy. That means what? Sir, you are not distinct person as per section 25 subsection 4 also, 25 subsection 5 also. If you are not distinct persons, anything happening between you without consideration is not a supply. You are not satisfying the condition. Understand, you cannot call them as related person, because the difference between related person and distinct person is what? Related persons, sir, there are two persons. Here how many persons are there? Here only one fellow, Vivard Notebooks Private Limited, one single company, no two persons. You cannot call them as related persons. And of course, distinct persons meaning also they are not satisfying. Without consideration, anything happening between them will not come within the scope of schedule 1 para 2. That means this cannot be called as supply. If you see case 3 here, same state but two registrations. Tirupati, Vijayawada, both are in Andhra Pradesh, but both are having separate registrations. In that case, anything happening between them? supply, because 25 subsection 4, they are distinct persons, two different registrations. Anything happening the stock transfer without consideration is a supply. Clear? Next, sir, situation 4, if you see here, Vijayawada, Andhra Pradesh registered, Trivandrum, Kerala unregistered, two states, one state registered, another state unregistered. Again, 25 subsection 4, no. 25 subsection 5. So 25 subsection 5, they are distinct persons. Anything happening between them without consideration is supply. Am I clear with that? So that is what the concept. That is what the concept. Till now comfortable, everyone? Distinct persons, we are clear. So that means we are done with para 2 also. So everything notes is properly given right here. So distinct persons, sir, there is section 25 subsection 4, 25 subsection 5. So 25 subsection 4 needs 2 registrations, 25 subsection 5 needs 2 states. Okay, with all examples, everything we have clearly given here. So hope the discussion is clear for you, right? So we are done with para 2, and of course this gifts, GST on gifts between employer employee, all the stuff also we have discussed, and the relaxations also we have discussed. So we have seen this employer employee concept along with schedule 3 also we have discussed here. So hope that is clear for you. Next, simple. Next, para 3. What is para 3, ma? Everyone, if you remember para 3, what is para 3? Para 3 is nothing but, sir, there is a principal and there is an agent. So from principal to agent, sir, goods are being supplied without consideration. Whether we call it a supply or not, we call it supply, sir, but only one condition is there, sir. One condition. What is the important condition? Na? Invoice should be raised by the agent to the customer in his own name. Then only the movement of goods between principal and agent is supply. You know, for example, for example, Vishnu is a principal and Mr. Spartan from Coimbatore is agent. Vishnu is in Chennai. Vishnu is sending some notebooks. Vishnu is sending some notebooks to Spartan, the agent, to sell the notebooks from Coimbatore. Sir, obviously when I'm sending stock to my agent to sell them, my agent will make any consideration payment to me? No, obviously he will first sell the goods, and then whatever the payment is realized, he will then transfer me the amount. That's all. When I send the stock to my agent, sir, he is getting it without consideration. Whether this movement between principal and agent, is supply or not is the point. For that, sir, the triggering factor is whether agent is raising the invoice to the customers, that is the local bookstall owners in that Coimbatore, in his own name or not. If the agent is raising the invoice in his own name, to the people in Coimbatore, then only the movement between Vishnu and the Spartan is supply. But sir, if Vishnu is only raising invoice to the local bookstall owners there in the Coimbatore, agent is not raising the invoice, then in such case, the movement between Vishnu and Spartan is not a supply. So I repeat, sir, principal sending goods to agent. This movement is called supply. Only when agent raises the invoice to the ultimate customer in agent's name only. Then only movement between principal to agent is called supply. I repeat, movement of goods between principal to agent is called supply, provided agent raises the invoice to the customer in his own name. Am I clear? So that is what para 3 for you. So movement of goods between principal and agent is supply, provided agent only raises invoice to the customer. If principal raises the invoice to the customer, then this movement is not supply, this movement is not supply, simple. So the example is clear for you, you can just go through that. Okay, so this is what example. Hope we are done with para 3 also. My repeat, if principal is only raising invoice to the customer, there is supply between principal and customer, obvious. But if agent is raising invoice to the customer, there is supply between agent and customer, and also principal and agent. Hope it is clear for you. So we are done with para 3 also. We are done with para 3 also. So let us move on to para 4. So what is para 4? Para 4 is nothing but importation of services. Again, see, last September 2024 exam, again there was a straight theory question on importation of services. Importation of services, if you see, sir, importation of services is covered in both the cases, 7 subsection 1 clause B also, 7 subsection 1 clause C, read along with schedule 1 para 4 also. So if it is done with consideration, we should see 7(1)(b). And if it is done with consideration, guys, understand, I repeat, importation of service, whenever you see that, we should see from recipient's point of view, not from the supplier's point of view. Whenever we see importation of services, sir, we should see from recipient point of view, not supplier point of view. So first of all, if there is consideration, you need not worry about anything else. 7(1)(b) says it is supply. There was one MCQ question also regarding this, and there was one straight theory question also. So the same concept, September 2024 exam attempt. So I repeat, if there is importation of service, and if it is for consideration, sir, no matter whether it is for business purpose or personal purpose, it is straight away supply. We are not discussing whether it is taxable or not. We are discussing whether it is supply or not. Sir, it is supply only, sir. It is supply only. Am I clear with that? But when you come to 7(1)(c), read along with schedule 1 para 4, sir, we call it as supply for two conditions. First thing, if it is without consideration only, you will refer this, correct? And if it is without consideration, sir, when you are going to schedule 1 para 4, first thing we should check is whether I am importing this service for business purpose. If I am importing it for business purpose only, then this will come. So first condition, business purpose. Next condition is I should be importing this from related person or my own establishment located outside India. I repeat, I should be importing this from my related person or own establishment located outside India. In the last exam, they have given you are importing some service from your ex-employee located in USA. Ex-employee located in USA. Whether it comes under this or not, whether he is your related person or not, respond everyone, chat box mein. You are importing some services from your ex-employee located in USA, ma? Can I say that I am imported from related person? Everybody? Sir, related person meaning says employer and employee. That means current employee, not ex-employee. No matter how much you love your ex is your ex. That means not related anymore. That is the reason why we call it ex. Okay, not current. So the point is ex-employee is not a related person. So I repeat, if you are getting it without consideration, sir, it should be in the course or furtherance of business, and it should be from your related person or own establishment located outside India. Clear? If all these conditions satisfied, then only we can call it as supply. So importation of services, you should be clear with both these provisions. Shall I continue? Everyone. So hope this is clear for you. Now, if you see an example, see here in this example, Mahendra Bahubali, lawyer in USA, who is son of Devasena. Devasena is in India, mother. Mahendra Bahubali is a son in USA. He is a lawyer. Mahendra Bahubali is giving some legal advisory services to his mother regarding filing a divorce suit, and also regarding filing a suit against Mr. Balal Dev with respect to her business Mahishmati and Co. Here there are two services. One is related to her personal purpose, one is for her business purpose. First of all, Sir, there is without consideration. Both are without consideration. Sir, whether Mahendra Bahubali is related person, we should see here related or not, from whose point of view. I was telling so many times, we should be seeing importation of service from whose point of view? From recipient's point of view, recipient's point of view, recipient's point of view. So we should see from Devasena's point of view whether Bahubali is related to her or not. I repeat, you should see from recipient's point of view, because we are talking about importation of services here. We should see from Devasena's point of view whether Bahubali is related. Yes, Bahubali is son of Devasena. Son is obviously related. So she is importing services without consideration from a related person located outside India. But sir, here in this case, she is importing for her personal purpose. So whatever she is importing for her personal purpose, you cannot call it as supply, because it is not schedule 1 para 4 condition. But sir, in this case, if you see the next case, she is importing the services for her business purpose only, sir. So importation of service without consideration for business purpose from related person, all the conditions are satisfied. Hence, it is supply for you. Hope it is clear. But if you look at this example, same story, just the characters changed. Kattappa, father of Devasena in USA. He is also a lawyer, providing legal advisory services, one for personal purpose, one for business purpose. So one for personal purpose, one for business purpose. But sir, whatever is used for business, then it only supply. But here one interesting point what we have to see is, sir, importation of services without consideration is happening. But we should see what? We should see whether Kattappa is related to Devasena or not. Sir, Kattappa is related to Devasena or not? How do you see? You see from Devasena's point of view. Sir, for Devasena, Kattappa is a father in USA. Father means parent. Parent is your relative. Parent is your family member only when they are wholly or mainly dependent on you. When Kattappa father is lawyer in USA, how he is dependent on Devasena? That means from Devasena's point of view, Kattappa is not a family member. That means he is not related. He is importing service without consideration, but she is importing from a person who is not related. So no matter whether it is for personal purpose or business purpose, sir, it is not a supply. That is one interesting scenario. There was one past exam question also on this, but not of course Bahubali Kattappa names, but there were some different names, all the stuff. They have given brother and sister related question. So that way you should be focusing whether related or not, or whatever. When you see importation of service, all the conditions you should be seeing from recipient's point of view, not from the supplier's point of view. Generally we should see from supplier's point of view. But in case of importation of service, from recipient's point of view, that is what schedule 1 all about. So I repeat, we are done with schedule 1. So section 7 we have completed subsection 1 along with schedule 1 also. Schedule 1, 4 paras. We have covered 4 paras. First one, permanent transfer or disposal of business asset, on which ITC was availed. Number 2, supply between related person and distinct persons. We have seen related person meaning also, distinct person meaning also. Para 3, supply between principal and agent. Para 4, importation of services again. So we have covered schedule 1. So without wasting much time, let us move on to schedule 2. If you remember schedule 2, what is schedule 2? Schedule 2 is nothing but, sir, if something is treated as supply, whether we should treat it as supply of goods or supply of service is what the concept. If something is treated as supply, whether it should be treated as supply of goods or supply of service is what given in schedule 2. In that you can manage the things there in schedule 2. So I am not touching greatly schedule 2. I will just focus on this building. So I just want to bring to your notice that, sir, any under construction buildings, if you are buying, it is supply of service. If it is fully constructed, fully completed, then it is neither SOC nor SOS. So here the triggering factor is the completion certificate. If you are having, after the completion certificate, if anybody comes and make full payment, guys, I repeat, in schedule 2 I will just touch 1, this building activity. Number 2, there is a clarification that I will touch. These 2 things I will discuss in this. Remaining things you can manage. Now So first coming to the point, schedule 2. In schedule 2, sir, whether the transaction to be did as supply of goods or supply of service, in that one interesting or important one is, if you are buying an apartments, under construction apartments or flats, if you are paying advance booking amount, all that stuff, and you are buying that, whether it is supply or not, please understand, you just imagine there is an apartment under construction. You are going and paying some advance, a small token advance. That means what? You are appointing that fellow to construct your house. That means he is going to provide you services. Sir, construction fully over, sir. How you know construction fully over? Sir, because there is completion certificate, sir. We got a completion certificate from the competent authority. Okay. That completion certificate is there, sir. That means building is fully ready. Ready-made building. Now you are going and buying it. You never paid any advance. You never did any advance booking. You are going after completion certificate and you are paying the full amount. That means you are buying a ready-made building which is not movable, which is neither good nor service. That is what even schedule 3 we see. The sale of building is neither SOG nor SOS, except in this case. Except in this case, what is that case? If completion certificate is given, after that if you make full payment, it is neither SOG nor SOS. But before completion certificate, if you pay 1 rupee advance also, the entire transaction will become supply. Now see for example, see, there is an apartment we are constructing 7 flats. In these 7 flats, sir, first 2 flats you have booked by paying advance 10 lakh. Actually cost is 50 lakhs, but you have paid 10 lakhs advance and booking the flat. But this is before completion certificate. Because before completion certificate you are doing this, sir, what will happen? This will become supply of service. Supply of service is for 10 lakhs or 50 lakhs. 10 lakhs or 50 lakhs. Supply of service is for 10 lakhs or 50 lakhs. Supply of service is for 10 lakhs or 50 lakhs. 10 or 50. Respond. Sir, it is for full 50 lakhs. What is the consideration I want for constructing your house? I want 50 lakhs. You give today 10 lakhs, tomorrow 5 lakhs, day after tomorrow another 10 lakhs. But you give 1 rupee before completion certificate. You give 1 rupee before completion certificate. Also, the entire transaction will become supply. So 10 lakhs you have paid by giving advance booking. After completion certificate, if you pay balance amount also, fully 50 lakhs is liable for GST. And 4 flats, what you did? You came and purchased fully. But construction is over. Completion certificate is not received. Construction is over, but completion certificate not received. Then also, sir, for us, the triggering factor is completion certificate, sir. So construction is over. You should not say that. Competent authority should say that construction is completed. That means you should give the completion certificate. Sir, construction is over. Completion certificate not given. Now I am coming and buying. Till it is supply of service. One flat, last flat, whatever was there, that was sold after completion certificate. Then it is neither SOG nor SOS. I repeat, sir, 2 flats were sold immediately when we started construction by paying advance. So the entire value will become supply of service. 4 flats have been sold after completion. Construction is over, but completion certificate not given. Then also it is supply only, because the triggering factor is completion certificate. And finally, one last flat, whatever was pending, that was sold after completion certificate was received. Completion certificate was received means now it is a ready-made building, neither SOG nor SOS. So it is not a supply. Hope it is clear for you. That is the point which I just wanted to highlight. So in schedule 2, remaining things you can just manage. There was one clarification released by the department with respect to liquidated damages, compensation, penalties, all that stuff, sir, whether these things are supply or not, all that. Okay. See, the clarification I have clearly given the notes here. I'll just explain you the logic. And I have clearly given which is taxable, which is not taxable. First, I will explain you the logic, and fatafat will discuss everything like whether it is supply or not supply, all that. Now you tell me, sir, you are driving a bike. and you are driving the bike without helmet. Police has caught you and imposing a penalty. Let us assume some 1,000 rupees. Can I say that is consideration? Can I say that is consideration paid for violating the law? Obviously no, sir. Then why are you paying the 1,000 rupees? To punish you for violating the law. Yes or no, ma? To punish you for violating the law. Please understand, there is no consideration for violating the law. It is like, okay, I am agreeing to tolerate you violating the law, but pay me 1,000 rupees consideration, like the department is saying to you. Or there is a contract, you are breaching the contract and you are paying me damages. You tell me whether it is like I am agreeing to tolerate you breaching the contract, but pay me damages. Is it that way? No. Please understand everyone. Please understand everyone. Sir, first of all, there should be an agreement. There should be an agreement. Agreement means it is not like something in writing, all that stuff. Don't imagine that way. Agreement, you know, it can be oral, written, or it can be even implied. Sir, agreement should be regarding to do something or to tolerate something or agreement to refrain from doing something. That means I am agreeing to do something for you, I am agreeing to take lecture for you, I am agreeing to tolerate you people putting up some shop in front of my shop, footpath, all that stuff for common payment. I am agreeing you to put up your stall, all that stuff, or roadside food counter, something like that, food court, something like that. Or I am agreeing to refrain means stop myself, I am agreeing not to join the competitor for some consideration. So like this, I am agreeing to do something, I am agreeing to tolerate something, I am agreeing to refrain from doing something. And also for that, what I need? Consideration. Need consideration. Are you understanding the point? Sir, in that cases, then only it is supply, sir. Otherwise, then only it is called supply of service, sir. Otherwise, you cannot call it. You tell me like traffic police is taking 1,000 rupees from you as a fine, and is it like they are agreeing? Okay, I'm agreeing to tolerate you driving the bike without helmet with a for a consideration of 1,000 rupees. That is the story, yeah? No, sir. Sir, whatever the liquidated damages we pay because of there is breach of contract, it is like an agreement to tolerate the breach of contract and you are paying the consideration. No, that is not the case. There is no agreement to tolerate your breach. So it cannot be called as supply at all. That means no GST, not taxable. Are you understanding the point? There should be an agreement and there should be consideration. Here, where is agreement? Okay, you tolerate, you breach the contract, I will tolerate. Like that, are we agreeing? No, I am agreeing to fulfill the promise. You are agreeing to fulfill the promise. We are entering into the contract, and because you breach the contract tomorrow, I might have suffered some loss. That loss you are compensating. You are not paying any consideration to me. You are paying compensation to me. Both are not same. Point. So that is not taxable. So compensation for cancellation of coal blocks. Government of India has allotted coal blocks to certain people. Later on, Government of India has breached the contract and paid compensation. That is also, I am repeating, it is compensation, not consideration, so not taxable. Next, check dishonor, fine or penalty. Because you have given a check without sufficient balance, they are collecting check bounce charges, etc. That is to punish you, not for not for consideration for the bank. Okay, you have given the check without balance. You are also jobless. We are also jobless. Pay us some consideration. That is not that way. They are punishing you not to repeat the same thing. Penalties for violating the law. I repeat, that is not the consideration for agreeing to violate the law. Okay, or to tolerate the violation of law. Right. So that is not the case. So they are not taxable. Next, you are entering into an employment contract and you are leaving the employment contract even before the contract is over. Let us assume you are joining the job for 2 years employment, you have signed the bond. Before 2 years you are leaving. For that you are making the payment. So we are forfeiting your salary. That is to punish non-serious employees. Not like employer is okay, you leave the job, no problem, I will hire another fellow, I will train him and I will like make him ready perfectly. For that I will incur some loss, all that stuff, no problem, you leave, but pay me some consideration. Like that we are agreeing. No, we are punishing the non-serious employees. So that is not consideration. That is again what? Punishment or compensation, whatever you call. See, the logic is simple. Is it compensation or is it punishing somebody? That is not consideration for tolerating something. Clear? So it is not a supply at all. That means there is no GST. There should be consideration for me because I'm tolerating something, or there should be consideration for me because I'm agreeing not to do something. Clear? Next, fixed charges for power, electricity charges, right? If you see, minimum charges they will give for you. For example, you are not there in your house for 3 months, you have locked the house. At least for that 3 months, monthly 150 rupees minimum balance you will pay, you know that. At least minimum balance you will pay like 150 something like that. Sir, that is the minimum fixed charges paid. What about that, whether it is taxable or not? Sir, that is not, we are punishing you, we are not punishing you for not using this much electricity at least. No, for giving you at least 100 units, I want this 150 rupees consider. It is not like I'm punishing you, you have used only 20 units, still pay 150 rupees. No, it is not like that. For me, standard price is 100 units, 150 rupees. Beyond that, whatever you use, pay extra. That's all. That is consideration. But these electricity charges are exempt under GST. So obviously, whatever the fixed charges or whatever are there, they're exempt from GST. I repeat, minimum charges collected, minimum fixed charge and variable per unit charge. Both are consideration for providing you electricity, which is exempt under GST. Clear? And that minimum fixed charge is not punishment or penalty I'm imposing on you not using this minimum electricity. This consideration I want. Minimum use 100 units, or minimum you pay me 150 rupees and use up to 100 units, whatever you want. Beyond 100 units if you use, you pay me extra amount. Simple. Right? So that is what about fixed charges for power. Next, now if you see here, sir, there are some late payment charges, sir. Late payment surcharge or fees. We understand this late payment surcharge or fees, what they are doing now. Now globally what we are doing, we are allowing the customers to make late payment. You pay late consideration, no problem, but pay me something extra. Are you understanding the point? You are purchasing something from me. Let us assume I am selling a 1000 kgs of raw material to you. I told you 3 months credit period, and if you take extra also, per month you pay 1% interest to me. This is not penalty. The wordings may be anything, interest, penalty, late fee, whatever you call. But understand, I am allowing you to pay money late. See here, I am not punishing you. I am selling you time. I am selling you time. Yes or no? I am giving you goods and you should pay the consideration. You pay the consideration, I am happy. You pay the consideration late also, I am happy. But pay me something extra. I am agreeing to tolerate you making the late payment. But I want late payment charges. I want late payment fees. You call it penalty, whatever you call name, you should not worry. You should see what is happening there. Sir, what is happening there is, sir, I am allowing you to make late payment. I am tolerating you are making this late payment of consideration. But for me, what I want something extra consideration. So I'm agreeing to tolerate the late payment. For that, whatever consideration you are paying, sir, that is supply only. Yes, it is taxable. And the interesting thing is, it is taxable as principal supply. As I told you, for example, I sold you mobile. You told me, sir, within 10 days I will make payment, sir. You have purchased iPhone 16 Pro Max with me. You will say, sir, in 10 days I will make payment. You are not making payment in 10 days. Now you are feeling stressed. I am telling you, don't worry, Ra. Take 10 more days, but pay me 10,000 extra. I am agreeing to tolerate you making the late payment. Guys, understand, I am not giving loan and charging interest. That is different. Any person giving you loan and charging interest, supply of service, exempt under GST. But any person selling you some goods, selling you some services, asking you consideration, but you are not making the consideration payment on time, he is allowing you to pay late only, but he is asking you to pay something extra. That is what you call as late fees, interest or penalty, whatever you call. If you remember, you would have studied that even in value of supply also chapter. Sir, whatever that will be forming part of GST, so that will be taxable under GST, taxable as a principal supply. I sold mobile to you, you are paying the 10,000 rupees extra amount, no ma, for iPhone 16 Pro Max. You have not made payment within 10 days. You are paying after 10 days, so I am charging 10,000 extra. that 10,000 also will be taxed as what? That 10,000 also will be taxed as if it is supply of iPhone 16 Pro Max. Am I clear? It will be taxed according to the principal supply, the main supply. Hope it is clear for you. The same way, nowadays if you see any travel industry or hotel industry, you are booking a train ticket, you are booking a flight ticket, you are booking a accommodation, hotel room, etc. Sir, they are allowing you to cancel the booking, but they're asking you to pay the cancellation charges. Cancellation charges are not punishing you. Cancellation charges are my consideration. I'm happily tolerating you cancelling, but I want some consideration. I want some consideration. You understanding the point? That is also taxable, and just like the previous point here, this is also taxable as principal supply. That means train ticket you have booked, you have cancelled. For that cancellation charges they are taking. Whatever the provisions applicable for this train ticket, the same provisions are applicable for cancellation charges also. Hope you are clear with this. I repeat, you are booking a train ticket and you are cancelling the train ticket. For that cancellation charges 150 rupees you are paying. Sir, whatever you have, the tax treatment for the train ticket booking. The train ticket booking I have booked in sleeper class are exempt under GST. This 150 rupees cancellation charge is also exempt under GST. Sir, I have booked a flight ticket, sir, taxable under GST. Or I have booked a train AC ticket, sir, Vande Bharat or some AC class ticket I have purchased, taxable under GST, but I have cancelled, sir. Then cancellation charge is also taxable under GST because principal supply is taxable. That is 5%, cancellation charge is also 5%. That is 18%, cancellation charge is also taxable at 18%. Am I clear, ma? Everybody comment in the chat box. This cancellation charges, I have given example also here. The same thing what we have discussed now. Right. So that is what the point. And finally, sir, the forfeiture or earnest money by a seller in case of breach of an agreement to sell. Same like this, you are violating the employment contract. Same that way. For example, I am selling land to you. You paid advance, token advance. You said, sir, you will get registered in 30 days or 3 months. That means balance you should bring the amount and you should get the registration done. You don't have money and you are not coming for registration. What will I do now? I will forfeit that advance, token advance. Is that token advance consideration for me to tolerate you not making the payment? I don't want to like tolerate you not making the payment, not getting registered. I want to sell my land somehow or the other. Here I am putting this concept of token advance and I am forfeiting it if you are not getting it registered within the fixed time, because I want to punish the non-serious buyers. Clear? So this is not consideration you are giving to me for tolerating you breaching the contract or breaching the sale agreement. Clear? So this is also not a supply, not taxable. I repeat, simple. The summary is what? The summary is, sir, to do something or to refrain, that is to not to do from something or to tolerate something, there should be consideration. There should be consideration. Clear? Am I clear? If there is consideration, then it is supply. If you are, see, for example, if it is for compensation, if it is as compensation, or if it is penalty, or if it is for, or we can just say in simple words, compensation, or if it is punishment, in these cases it is not supply at all. Am I clear? This is not supply at all. So with this we are done with section 7. Section 7 along with schedule 1 and 2. Schedule 3 alone is pending. Let us finish schedule 3 also. Hope till now you are comfortable, clear. So let us move on to schedule 3. What is schedule 3, pa everyone? I repeat, we have seen section 7 subsection 1 what is supply, then we have seen schedule 1 what is supply even without consideration, then we have seen schedule 2, and the important clarification in that only I have discussed. Schedule 2 is nothing but whether the supply should be treated as either supply of goods or supply of service, and we have seen some latest clarification or circular. Latest means not very latest, some 2 years old, back to 2022 clarification this is, but still a good one and important one for you. Now coming to schedule 3, as I have already told you, certain transaction government doesn't want to be treated as supply, but still they are satisfying the meaning of supply. So what we are doing, we are bringing them under schedule 3, saying that these transactions are neither supply of goods nor supply of services. Am I clear? So that is what the concept. What are the transactions? Simple. So we have already seen this, and you remember, whenever you are answering a question regarding supply, sir, you should also be having a thorough knowledge about schedule 3 also. So now what are given in schedule 3? Sir, employee providing his services to employer, sir, in the course of employment contract is not at all a supply, even though it is satisfying entire section 7 subsection 1 provisions, but still we don't call it as supply because it is given in schedule 3. Am I clear? And here the interesting thing is, sir, anything provided which is not in the course of employment contract, which is on principal to principal basis, right? Employer and employee, normally what is the relation between them, principal and agent, employer and employee. I repeat, employer and employee, generally the relation is principal and agent. But if anything is done between them on principal to principal basis, then then sir, it is supply, it is not employment. Principal to principal basis means it is supply only, sir. Okay, sir, premature termination of employment contract, sir. Premature termination of employment contract, if it happens, we have made compensation, anything payment as per the employment contract only, so it is not supply. Sir, I am a casual worker, sir, who is getting the salary on daily basis, sir. Whether you get salary on daily basis or monthly basis, weekly basis, employee is an employee, so it is schedule 3 transaction, not a supply. Am I clear? Next, so as we have already discussed, anything given outside the employment contract will be treated as supply only. Okay, and anything between them is principal to principal basis is supply only. Any amount paid by employer to employee for not joining the competing business. Rasi, you are resigning in my company and I'm asking you, don't join the competitor. You are saying, okay sir, I will not join the competitor. How much you will pay? I said I will pay you 10 lakhs. Then sir, this is not in the employment contract. While joining the job, I have dreamt, okay, this fellow will be like a very key employee for us, and tomorrow if he resigns and joins the competitor, my business will get damaged. Like that I have thought and mentioned in the employment contract. This is something outside employment contract. I repeat, anything in the employment contract is not a supply, but anything outside the employment contract is a supply. Hope it is clear for you. Shall we proceed, everyone? So that is what the concept, right? Next, you know, obviously what, sir, services provided by court or tribunals, the court fees what they are charging is neither SOG nor SOS, so it is not a supply at all, hence no GST at all, right? That is the next one. And here we have seen one clarification also, sir. Court means this district court, high court, supreme court, sir. And they have also said consumer dispute redressal commission, which is actually not satisfying the definition of tribunal, but still it is having all the characteristics of tribunal, and the department has clarified this is also not liable to GST. This is neither SOG nor SOS. So here court fees or tribunal fees, whatever the applications you pay, application fees you pay to the courts and tribunals, tribunals in the sense national company law tribunal, sir, NCLT, ITAT, so GST tribunal, all these things, sir. The application fees what you pay to these people are neither SOG nor SOS. Hope it is clear for you, right? Next, next, if you remember, so para 3 again, it is having 3 points. One is MLAs, MPs, members of panchayat, municipalities or local authorities. If you remember, we have discussed in the class, sir, it is, I can say, politicians with power. The MLA, MPs, all these people are drawing their salaries, remuneration. You cannot say they are employees of public, so they are not covered in the, under first entry here in schedule 3. And whatever the remuneration we are paying to them, it is their duty, their responsibility, they are fulfilling, they are satisfying supply definition, but we don't want to charge GST on them, you know, don't trouble the trouble. Okay, so the point is, sir, we are bringing them under schedule 3. Whatever the remuneration they are taking is neither SOG nor SOS. Not only that, any person who is holding the post in pursuance of the provisions of constitution, like President of India, Vice President, Chief Justice of India, Prime Minister, Chief Minister, like this. These positions, if you are holding, which are as per the provisions of Constitution, and you get some remuneration there. That is also neither SOG nor SOS. And not only that, sir, if you remember, chairperson, member, or a director, any person acting as a chairperson, member, or a director of a government body, simple government body, if you are acting as a chairperson, member, or a director of a government body, that means which is established by central government, state government, local authority, in that cases the services provided by you is a supply. Now please understand, if you are a chairperson, member, or a director, and also the employee of the organization, you are already covered in into one here. Are you understanding the point? If you're already a chairperson, member, or a director of a body, and you are an employee there actually, because of that you got the directorship, because of that you became the chairman or the chairperson, whatever it is, then you are already covered under employer-employee relationship. So you're already covered under entry 1 of schedule 3. So it is neither SOG nor SOS. If you are not an employee, then you are covered. So here also you have the benefit enjoy. Best example, independent director of BSNL company. Independent director means he is nowhere connected to the company. That means he is not an employee. But he is independent director of BSNL, which is established by central government. So it is covered here. That means if it is covered in schedule 3, it is neither SOG nor SOS. Hope it is clear for you. I'll give you break after finishing this chapter, maybe in another 20 minutes. Okay, so please don't worry. Let us finish this and take the break. Okay, right. Next one, what is next one? Sir, the services of what? Funeral, burial, crematorium, or mortuary, including transportation of deceased. If you remember, we have discussed in the class, sir, RIP services. Sir, at least after death, may your soul rest in peace without paying taxes. Like that, government has given the relaxation here. These are neither SOG nor SOS. Guys, understand, these are not exemptions. You cannot say these things are exempt. These are not at all taxable because they are not at all supply. Only if it is supply, it is taxable, then you can give exemption. These things are not at all supply. No, you cannot call it as supply itself. So they are not taxable. Okay, not taxable is different, exempt is different. Okay, so that is one thing. Next, sale of land and sale of building subject to paragraph 5b of schedule 2. Paragraph 5b of schedule 2, just now we have seen one diamond apartment example, all that stuff. Only in that case where you are paying the advance booking amount, all that stuff, then only sale of building is supply of service. Remaining all cases, building is neither SOG nor SOS. Same way, land is neither SOG nor SOS. Okay, actionable claims I have already discussed in the beginning itself, goods definition. Sir, actionable claim is neither SOG nor SOS, sir, but other than specified actionable claims. That means only lottery, betting, gambling, casinos, online money gaming, and horse racing, these are only supply. Any other actionable claim, see for example, unsecured loans, unsecured debentures, bills of exchange, promissory notes, bank guarantee, fixed deposit receipts, arrears of rents, all these are examples for actionable claims, satisfying the meaning of actionable claims. But still sir, only specified actionable claims are treated as supply. Anything else, any other actionable claim is covered under schedule 3. It is neither SOG nor SOS. Am I clear till now? So these are activities which are there in your schedule 3, which are neither SOG nor SOS. Am I clear? So let us proceed. With this we are done with schedule 3 also. And of course in schedule 3, through the power which is available to central government in section 7 subsection 2 clause B, they have released certain notifications saying these things are not supply. In that, panchayat and municipalities, for them, as we already know, sir, article 243G and 243W, sir, article 243G and 243W are giving some responsibilities to panchayat and municipality. Those responsibilities not only panchayat or municipality, sir, but even though it is performed if it is performed by central government, state government also. Okay, sir, the activities of this panchayat and municipality, which are their duties, if they are performed by central government or state government or that local authority itself, still we don't call it as supply of goods, still we don't call it as supply of service. It is neither SOG nor SOS. Hope it is clear for you. I repeat, panchayat and municipalities doing their duty, which is entrusted to them under Article 243W and G of the Constitution, and charging some consideration. As I told you initially, sir, I want to construct my house and I am getting the building plan approval from the local authority, paying some consideration. They are doing their duty, business only, it is supply only, but still we don't want to charge GST on that. We don't want to call it supply only, so we are bringing them under neither SOG nor SOS list. That is the next one. Next, alcoholic liquor license. Sir, liquor itself is outside the ambit of GST, and alcoholic liquor license, what the state governments give, the state governments will give liquor license to the people to run the bars, etc., etc. So that is also neither SOG nor SOS. But this relaxation is only for liquor license. Sir, this is not applicable. This is not applicable for any other license like mining rights, natural resources, or spectrum license, all these things. Further, this relaxation is not applicable, and they are very much taxable under GST. They are very much taxable under. Hope it is clear for you. Now, there are two clarifications left here, and after that we are done with section 7, and there is section 8, a simple discussion. After that there are some clarifications which we have to discuss, and out of these clarifications there are some latest clarifications which are amendments also, and with that we will discuss and finish this chapter. That is what the next agenda, so please be attentive for some time. So with this we are done with schedule 3. So actually there are two clarifications here. One clarification is regarding Pagadi system. So there is a system called Pagadi system where people will be leasing out their properties and registering their document. Sir, the doubt was, we are leasing the properties and registering the documents, paying stamp duty, registration charges, all the stuff, whether GST is applicable or not. Whether you pay registration charges or stamp duty, it doesn't matter. Understand, you are leasing the properties. Allowing somebody to use the immovable property is supply of service, so it is liable for GST. So yes, it is liable for GST, no matter whether you have paid stamp duty and registration charges or not. Okay, so this will be treated as supply of service only, liable for GST. Okay. Liable for GST. Okay. Next one. Another next interesting clarification here, actually my favorite clarification. So interstate movement of conveyances. Sir, interstate movement of conveyances, whether it is supply or not. So please understand, if you remember, one second ma. So if you understand, what is this concept all about now? Sir, there is, imagine a travel company, let us assume Orange Travels in Chennai, Tamil Nadu, and also Orange Travels, Hyderabad, Telangana registered. Normally there is a bus transporting the passengers from Chennai to Hyderabad, Hyderabad to Chennai, same way. Here the doubt is, sir, passenger transportation is supply of service, liable for GST. But the point is, these two persons are distinct persons. Everybody, are you clear with that? Distinct persons as per section 25 subsection 4. And while transporting the passengers, see, the interesting thing is, while transporting the passengers, a good called bus, this bus is being moved from one distinct person to another distinct person. Yes or no? This bus is being moved from one distinct person to another distinct person. That means, can I say supply of goods between distinct persons, schedule 1, and that too without consideration? You tell me, Orange Travels in Chennai will give money for the bus coming from Hyderabad to Chennai. We are not discussing about transportation of passengers. We are not discussing about transportation of goods. We are not discussing about repairs and maintenance. But sir, when you are transporting the passengers, when you are transporting the goods, when you are sending vehicles for repairs and maintenance from one state to another state, from one distinct person to another distinct person, there is a movement of goods is happening, movement of these vehicles is happening, correct? So this vehicle movement from one state to another state, from one distinct person to another distinct person, will satisfy schedule 1 para 2, supply of goods between distinct persons. whether that movement of conveyance, we are not talking about transportation of goods and passengers, we are talking about movement of that conveyance from one distinct person to another distinct person, movement of that bus from one distinct person to another distinct person, whether it is supply or not. If you make this as supply, please understand, what about Indian Railways train moving from one state to another state? How many trains, how many flights, how many aircrafts, how many buses, how many lorries? So they have clarified, sir, movement of bus, movement of train, movement of aircraft. Why it is happening, sir? Because they are transporting passengers. Transporting passengers is supply. But for transporting the passengers, this bus is moving, no, that is not supply. Transporting goods is supply. But for transporting the goods, this lorry is moving, no, from one distinct person to another distinct person, that is not supply. Sir, for repairs and maintenance is supply, sir. But for repairing or maintaining it, sir, I am sending my vehicles from one state to another state. Maybe I am close to the border, sending it to the repair shop or a mechanic in the another state. So distinct persons. There, the movement of vehicles is happening for transporting the goods, for transporting the passengers, for repairs and maintenance. That movement is not a supply. That movement is not a supply. Am I clear? So that is what the concept. So if that movement is happening, for example, if that movement is happening for what purpose? If the movement is happening for further supply of such conveyances from that particular distinct person, that means I am sending cars from my Tamil Nadu registered office to Kerala registered office. Why? Because I will sell the cars from Kerala. That means if the movement is just for transporting the goods, just for transporting the passengers, no problem. But if the movement is for supplying that vehicles, further supply of such vehicles, then it is supply only. That movement is a supply only. I repeat, I am sending my vehicles from my one distinct person, one registration to another registration. Why I am moving them? I am moving them while transporting the passengers, transporting the goods. Then this movement is not supply. I am moving them for what purpose? To sell them from another state or from another registered entity. Then this movement is supply. Hope it is clear. Shall I continue? Everybody clear? Ara? So this is the notes for that. Hope it is clear for you. So that clarification is also over. Next, let us move on to the next one. So we are done with the clarifications. So the same logic applies not only for the vehicles but also for the spare parts also, sir. The rigs, tools and all, and the spares. So for that also the same logic, the same clarification applicable, equally applicable, right? So that is what the concept. So next, section 8. You know section 8 simple, sir. Section 8 is nothing but what? Composite supplier, mixed supplier. I repeat, simple. Section 8. When will you apply section 8? So section 8 I will apply only in one situation, sir. What is that one situation? I am buying certain goods or services bundle. That means 2 or more supplies are coming. I repeat, listen carefully. 2 or more supplies are coming to me. That entire bundle I am getting only for one single price. Guys, listen carefully. Listen carefully, sir. One second. I am getting bundle of supplies, 2 or more supplies for one single price. I am getting them all for one single price. In that case, 2 or more. Okay. So you will refer section 8. Section 8 is applicable only when applicable only when bundle of supplies are received for what, ma? Single price. That means you don't know the breakup. If you know the breakup, you need not go for section 8. If you know the breakup, you just assume you are going to supermarket buying everything individually. Whatever the tax rates are there, whatever is there, the prices, everything is given clearly. Accordingly, we will be charging GST. But sir, I am buying a mobile, getting charger also, headphones also, back case also, everything. But I don't know the breakup. You're coming and attending the classes. Sir, you're getting the classes, you're getting the books. So two supplies, more than one. But you don't know the breakup, what is the book price, what is the class price, all that stuff. So you go to a hotel, you book the room, you get the accommodation, you get the Wi-Fi, you get the swimming pool, you get the complimentary breakfast, everything. This bundle, what is the breakup, you don't know. So if that bundle you don't know what is the price breakup, then you see if they are naturally bundled, composite supply, not naturally bundled, mixed supply. Naturally bundled na, you call it as composite supply. Out of that bundle, what is the predominant supply, that is what is the principal supply that you identify, entire transaction will be treated as supply of such principal supply. That means you go to hotel, accommodation, booking a room, what is the predominant supply? Sir, they are naturally bundled in the ordinary course of business. Predominant element is hotel, accommodation, room. So the entire consideration whatever you pay will be treated as accommodation services. GST will be charged accordingly. But if they are not naturally bundled, for example, you are buying a surf excel powder and getting a bucket free, or you are buying a hair oil, they say face wash free. They may say free, but according to us in GST, what it is, sir, I am paying one price, sir. I don't know the breakup. For this one price, I am getting more than one supply, sir. That means two or more supplies I am getting, sir. Then, if they are not naturally bundled, identify the supply which attracts highest rate of tax, and you tax accordingly, right? So that is what the concept. So I repeat, just look at this. Just look at this, sir. Composite supply. Sir, what we will do? If they are naturally bundled, we will take the main supply, and whatever the GST rate applicable to that main supply, for that we will entirely apply for the entire transaction. Sir, if it is mixed supply, what we will do? The entire value of supply we will take as the supply which is attracting highest rate of tax. No, sir, in other cases, that means if separate consideration is indicated against each supply, then section 8 itself will not come. Composite supply, mixed supply, all this nonsense will not come. Sir, at respective rates applicable to that supply, you charge it and close it, sir. Simple. Clear? That is what the concept. Section 8. So simple one, you can revise it. My help is not required here. And hope if you have already read that, the revision is obviously over now. Right. So that is what section 8, composite supply and mixed supply. So we are left out with finally some small clarifications. So first clarification here, you're going to printing press. Another 5 minutes will be finishing this, don't worry. So printing services. Sir, you are going to a printing press. You are giving them a content. Sir, print me this book and give. They are printing and giving. Whether it is service or goods is what the doubt. See, for example, I am going to a printing press, giving some content and asking them to print the brochures. I am going there not to buy the brochures. I am going them to get there to get the printing services. Or let us assume I am going to a shop to purchase tissue papers. There they are saying, sir, we will also print your company logo and give to you, sir, on the tissue paper. I said, okay. There I am going to buy the tissue papers, not to print the logo. So, sir, printing services, whether it is goods or service, it purely depends upon the intention. Which one mainly you are going to buy there? Sir, predominantly I went there to buy printing services, sir. Predominantly I went there to purchase some goods like tissue papers or office stationery or envelope cover, something. On that, incidentally, they are printing my address, printing my logo and giving. Then I am buying goods only, sir, mainly. Printing service is incidental. So, it is supply of goods. No, sir, here I am going to get my brochures printed or leaflets printed or books printed and I am getting them, sir. Then main activity is getting printing. So that will be treated as service. So you should be focusing on what is the predominant element. Predominant element is printing, not the transfer of property in paper. Then it is supply of service. No, sir, predominant element is to supply the envelope covers, letter cards, etc., like tissue papers, office stationery, all that. Then it is supply of goods. What is the predominant element? Simple. That is what the concept. What is the predominant element? Am I clear? So that is first one. Next, sir, bus body building. Is it supply of goods or services, sir? It depends upon the facts, sir. I have purchased various spare parts, all that stuff, and I'm doing the bus body building, and then I'm selling it. That is supply of goods. You are bringing everything, and I'm just doing that body building of that bus and giving to you. Supply of service. Same logic for retreading of tires. Retreading of tires, sir. I am buying the old tires, doing the retreading process and selling. Supply of goods. Or you are bringing your old tires. I am doing retreading and giving. Service. Food supplied to the patients. Sir, food supplied to patients in the hospitals. If the patients are admitted patients, that is inpatients, which are provided to the inpatients. That means those who are admitted in the hospitals. Sir, they are provided based upon the advices given by the doctors or nutritionists. It is part and parcel of healthcare services. So it is not separately taxable. It is exempt under GST. What about patients who are not admitted, sir, or the visitors? Normally, when somebody are admitted in the hospital, their friends will go there only for eating. Then, sir, in that cases, what? It is taxable. It is not part and parcel of healthcare service. Okay, so that is what the point. Sir, what about taxability of free samples and gifts, sir, and buy one get one offer? Then, sir, free samples and gifts and buy one get one offer. See, understand, you call it free sample, you get call buy one get one offer. Simple. Here first, let us assume free samples. Free samples means no consideration. No consideration, no supplier. Sir, no consideration, no supply. Number one. Except if it is covered in schedule 1. So free samples given, no consideration, so automatically no supply. But sir, buy one get one offer. Here the point is, buy one get one offer, we should see, sir, buy one get one free you say, but for me it is like 2 or more supplies I am getting. You are buying 5-star and getting 5-star free. What is the tax treatment? What is tax treatment, sir? Simple, sir. There is no two different products. Only quantity column is changed. Only quantity column is changed. So what should I do now? Because quantity column is changed, sir, supply is same. There is no tax treatment, nothing. Same, whatever is like GST return 5 stars, the same thing will apply. 10 rupees 5 star, you buy one 5 star, you get another 5 star free. Means 10 rupees will be subjected to normal GST rate only. What the chocolates are subjected to. Quantity column, instead of 1, you will put 2. Simple. But you say buy hair oil and get face wash free. Then we should see composite supply, mixed supply. For me, it is mixed supply. I will see highest rate of tax. Or I will say buy classes and get books free. These are naturally bundled. That means we should see composite supply. That means buy one get one free is not always mixed supply. Please understand, buy one get one free is not always mixed supply. It can be composite supply, it can be mixed supply. Buy hair oil, get face wash free, mixed supply. Buy lectures and get books free, composite supply. Right? So that is what the tax treatment here. Buy one get one free. Next one. This 7, 8, 9 are amendment parts. I'll discuss them later. And this 10 also, 7, 8, 9, 10, 11, sorry, 10. So these are amendment parts. I'll discuss later. So with this, we are done with the supply topic. So that amendment parts, whatever is the portion, we'll take it up later. Or I mean, let us take it after the break. And there are 2 more clarifications also pending here. So these 2 clarifications and that amendment parts we'll take after the break. So if you see, we are discussing this clarifications in supply. Like we are left out with the clarifications, and the clarifications which are mainly important for you for the upcoming items, which are latest clarifications. Right. So first one, this we have already discussed in the class also. Actually, these 2 clarifications, 7 and 8. The tax treatment of the food and beverages supplied at cinema halls. Understand, in cinema halls, obviously when they are supplying food and beverages, if that food and beverages price and the ticket price are clubbed together and given to you, obviously we should go with section 8, composite supply or mixed supply. So it is composite supply only. The sale of ticket is the predominant supply, so you tax them accordingly. So food and ticket billed together, composite supply, that is ticket is a principal supply, tax it accordingly. No sir, they are billed separately. Ticket is sale of ticket, that service, and this sale of food and beverages at cinema halls also to be treated as restaurant services only. That is what the concept. Clear? Food and beverages sold at theater, the price is clubbed with the ticket price and sold. Composite supply, section 8, ticket is the predominant, so treat it accordingly. No sir, they are separately billed, then treat happily the food and beverages as restaurant services and close the transaction. Clear? Next, taxability of shares held in a subsidiary company. Just understand, the question was, there was a doubt, sir, whether holding shares in a subsidiary company by the holding company. Holding company is holding shares in subsidiary company. Is it supply or not? Is it taxable or not under GST was the doubt. Sir, holding shares, how does it be a supply? Are you providing any goods? Are you providing any services? No. Then how can you call it as supply? So there is no GST implication. So it cannot be treated as supply. Simple one. Now, This is very, 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 very important clarification. Please understand, these two are amendments which are given for May and September 24 itself. May and September exams. This is the brand new amendment for you. This is for Jan25 amendment. Okay, this is the brand new amendment for you. So listen carefully. One second, let me check something else is there or not. Okay, here below we have given that composite supply, mix supply examples and that flowchart. So I think I should place them after these, but still fine. So coming to this clarifications. Okay, one second ma. So what is this amendment? What is this clarification actually? See, generally when you are buying any goods, so there is a warranty period, correct? For example, I am purchasing a mobile. When I am purchasing the mobile, there is any problem in the display. Sir, the display, if it is within warranty period, I go to the showroom. They will change the display and give it to me at free of cost. The tax treatment for that is what we are going to discuss here. Now listen carefully. As I told, important for you, the latest amendment for you, for your Jan exams. So now, sir, what is the GST treatment on the warranty replacement parts and the repairs done during the warranty period? Obviously now, sir, in the warranty period, what will happen? Sir, either the manufacturer of the mobile or the distributor from whom we have purchased the goods originally, sir, what they will do, they will provide us this replacement or repairs etc during the warranty period free of cost. But please understand, even though it is said as free of cost, at the time when they are selling the goods, they would have included that price. Yes or no? They will say, like when I'm buying the car, they will say first 3 services free. But in the car price also, they would have included that 3 services, the price of the 3 services. So the point is, sir, the original supply will be along with the potential cost of replacement and repair services during the warranty period. While going with the replacement, see, replacement of parts is now done without consideration, and hence no GST, because already you have paid consideration for that and you have paid GST on that. Now are they charging any extra consideration? No sir. So there is no GST. Sir, if there is no GST, they are doing it freely. No sir. Should that fellow, that is the manufacturer distributor, should reverse ITC sir on that parts, what the spare parts they are using, the display, mobile display or something like that, they would have purchased it or they would have manufactured, they should reverse ITC on that. What is the need? As I told you, sir, they are already, while selling, they would have added the price of this replacement cost, repairs and etc cost in the original price of the goods. That means for you, for namesake, it is free, but actually it is not free. You have paid consideration earlier itself. But now they are doing the replacement. Now they are doing the free service, all that stuff. So there is no GST, and also for them there is no requirement to reverse any ITC. Also for them there is no requirement to reverse any ITC also. Everybody clear? Respond. Sudarshan, if that is like charged separately, it is that where if they are clubbing it and giving them in the same price, then only composite supply. If the prices are charged separately for ticket, how much food and beverages, this is not applicable. Don't worry. Everybody respond. This clarification is clear till now. It is little bit lengthy, but still easy one only. Just tell me whether you are comfortable till now. Everybody respond, others. So point is, sir, I repeat, when I am buying a mobile phone, they said, or I am buying a car, simple, or let us take mobile only, I am buying a mobile phone, sir, they are saying that free replacement, warranty period, any problem comes, the display problem came, sir, they are giving me free replacement of display or any some spare parts etc. They said free, So now when I'm going for warranty period, during warranty period, I'm going, they're changing the mobile screen, etc., and giving. Now they did not take any consideration. So no GST. Simple. So that is what we have discussed here. But the one more doubt is, they are giving it free, no sir. That means this display, when they have purchased, they would have paid GST, they would have taken ITC, no sir. The manufacturer or the distributor. Should they reverse ITC on that or not, sir? Not required. For you, they are just saying it free, but it is actually not free. All these cost, etc., they have estimated, and they would have distributed that into the cost sheet, and they would have determined that in the sale price itself. For namesake, they are saying it free. Actually, it is not free. So don't worry. There is no need of reversal of ITC also. Others respond. That Vandana will see later. That will be there later. Yes. Because warranty is free. No, they are not charging anything consideration. Correct. What you said is correct. Here we are talking first initially, you are going during the warranty period and getting the things done. During the time, are they charging consideration? No. That means no GST. And for using that goods and services, they would have purchased something. No sir, should they reverse ITC because they are giving it for free? As I told, that is for namesake free, but actually that cost is already included in the price. So they also need not reverse any ITC. Clear? Vandana, clear ma? Everybody others clear? Shall I continue? Okay, now the interesting thing is, sir, in the above case, whatever you have discussed, if the distributor is providing, guys, understand, not the manufacturer, the distributor is providing the spare parts to the customer, because during the warranty period, you are coming and asking, sir, I purchased from you only, so this is the problem in the mobile, so please look into this. Distributor is changing the mobile display. Actually, whose responsibility is this? Manufacturer's responsibility. But who is giving that spare part for free and doing that service, everything, and giving? Distributor. I repeat, on behalf of the manufacturer, the distributor is giving that replacement of the parts or providing service, etc., during the warranty period. The distributor to customer or manufacturer to customer? Listen carefully, look at this point, sir. Manufacturer from that distributor from that customer. Either from manufacturer something is going to customer. This is free. So no GST. Okay. What if on behalf of distributor? Okay, even if on behalf of manufacturer, sorry, on behalf of manufacturer, distributor is only giving to customer. This is also free. So no GST. Are you understanding the point? But listen carefully. If distributor is giving it to customer on behalf of manufacturer, then sir, there should be something between manufacturer and distributor, no? Are you understanding the point? Distributor is giving on behalf of the manufacturer. That means distributor is doing something which manufacturer should do. That means, can I say distributor is supplying to manufacturer some service, some goods? Yes or no? So for that, what they have told, na? Hope you are till now clear. Shall I continue? Everybody just respond. For that, what they are saying, na, sir, there are four possibilities. There are four possibilities. What are the four possibilities, na? Distributor, what he is doing, ma? Everybody listen carefully. Distributor, he is giving the spare part to the customer free of cost or doing the service free of cost. Customer went home. Customer, we are not at all bringing here. Customer is happy. Now the problem is with the distributor and manufacturer. Distributor, what he is doing now? Distributor is going to the manufacturer and charging consideration. They manufacturer, see, these are the things I have done: free service or free repair or free spare part given, all that stuff. Now this is the invoice. Take the invoice. You pay me. Like that, distributor is raising invoice to the manufacturer. That is one possibility. So he will issue a tax invoice. So in that case, obviously GST will come into picture. Not understanding which color will better here. GST would be payable here. And anybody should reverse ITC here? No sir, nothing is Required. No reversal of ITC by anybody here. Not required. Everything is properly placed. Am I clear till now? Please be little bit more attentive, because new amendment, that is why I'm just asking so many confirmations so many times, because this is the concept first time you are hearing. If already heard concept now, okay fine, I would have proceeded. Everybody please be more attentive, respond in the chat box. Tell me here. So is it clear till now? Manufacturer duty, distributor did, customer went home. With customer we are happy now, because he did not pay any consideration, no GST, nothing, and even though it is set free, customer has already paid to the manufacturer, got money for all these things, so nothing is free. So manufacturer also no need to reverse ITC, anything. Now distributor is doing no on behalf of manufacturer all these things. Distributor is raising invoice to manufacturer, that is supply, you pay GST, and no ITC reversal, nothing will come here. Obviously again you are charging GST here, manufacturer still can avail again extra ITC here. Okay, that is first scenario. I hope this is clear. If it is clear, everybody please send message letter C, type letter C. Clear up? Just type letter C enough. Be little bit fast, ma. Be little bit fast. Just type C if you are clear. So customer is coming to repair, distributor is doing repair using manufacturer to distributor, customer. Okay, sir, distributor did all the spare parts or service, everything to customer, and customer went home. Okay, now the point is, distributor is asking money, he is raising invoice to the manufacturer and asking, sir, pay me that money for that free spare parts I have used, because spare parts are with distributor, right? He has purchased and he has kept it, is with him, all that stuff. So he is using all that, giving service, giving spare parts, everything to the customer, sent customer home. Now distributor is asking manufacturer, Ayya, you pay me the consideration. So now distributor is raising invoice on manufacturer, so there is GST on this. This is first one. Okay, this is one way. Okay, they will pay GST. What is the another way? Another way is manufacturer himself is sending goods, the spare parts, to distributor. Hey distributor, you don't use whatever you have, all the stuff, and again there is invoice to me, all that. Another possibility can be manufacturer is only sending the spare parts for the replacement during the warranty period without separately charging any consideration at the time of such replacement. So what happens, second possibility is manufacturer will, this is first possibility, this is second possibility, manufacturer will send the spares and then distributor will use them to the customer. This sending the spare parts manufacturer to distributor free, he is not selling, he is just sending, Ray, take the spare parts, use in that replacement and close it. So this is free, so there is no GST. Am I clear? Second case clear, ma? C in the chat box. Second case clear. First possibility is distributor, he is having spare parts, all the stuff, he is using them and sending the customer home, and now asking manufacturer, sir, my money, sir, take this invoice, sir, give me my money. Manufacturer is paying, GST will come, yes, done, over. But next case is what? Next case is another possibility is manufacturer is saying first only, Ray, anybody coming for free replacement or all that stuff during warranty period, you just contact me, I will send the spare parts. Don't worry, you use that spare parts and send him. So I am sending the spare parts. Manufacturer is sending the spare parts to distributor. Manufacturer is sending the spare parts to distributor, and distributor is using them and going. So now, while sending the spare parts, manufacturer is charging any consideration from distributor? No, sir. It is free, sir. Then there is no GST. Close it. Clear, everyone? This is another possibility. A simple concept only. They are just discussing various scenarios, possibilities. That's all. Please be little bit more active so we can just cover it fast. Next one is what? Sir, distributor is third possibility is what? Distributor is what? Replacing the parts, sir, under the warranty out of supply, out of the supply already received by him from the manufacturer, and the manufacturer issues a credit note. 1 second, ma. Here some typing mistake is there or what? I will just check. So listen. My everybody attentive. Listen. Now, what is the first possibility? First possibility, distributor using his own stock, whatever it is, all that stuff, using sending back customer, all that, raising invoice to manufacturer, manufacturer pays. Consideration is that GST will come. Second one, manufacturer is sending freely the goods, the spare parts. They use these spare parts only there, and distributor is using, no GST implication, nothing. Third variety is, listen. Third variety is, guys, look at this carefully. Third possibility is, manufacturer already made a supply. That means there is already a sale of spare parts. So distributor has already purchased some spare parts from the manufacturer. Sir, already purchased from the manufacturer, and who should do this replacement? Actually, manufacturer should do. But who is doing? Distributor is doing. Correct? Distributor is doing. Now, distributor will ask money from the manufacturer for the replaced parts. Correct? First case, that is what we have seen. Or, sir, you have already sold the spare parts to me. That time, manufacturer has given an invoice to distributor. 100 displays, take this invoice. But out of that 100 displays, what distributor did? 5 displays he used for a free replacement during the warranty period. Everybody be attentive. The 100 displays manufacturer has sent. In that, 5 displays have used for free warranty. What should I do with this free 5 displays now? What should I do to a distributor? Distributor can straight away ask money. That means what he should do? Raise invoice on the manufacturer. First case. That is what we have seen. First possibility. Or one more possibility is also there. Sir, you have raised invoice for already 100 displays, correct? That invoice is there. Original invoice. Now, distributor has to pay for that 100 invoices, correct? 100 displays, correct? For that 100 displays. But 5 displays, what I did, sir? I used for your free warranty only, which is your responsibility, I fulfilled. Then what should be done? Then 100 displays you have raised invoice, no sir. For 5 displays, please give me credit note, sir. Please give me credit note. I am supposed to pay you only for only how much? Pay for only how much? Online students respond. Pay only for how much? Pay only for how much? Exactly. Pay only for 95. Super. Am I clear? Sivaram, you need not do that because distributor will not raise invoice to the customer because it is done free of cost. There is no GST. Understood, Sivaram? Your doubt is clear, I guess. Others clear? So 95. Simple. Am I clear? So this is option 1. This is option 3. Possibility 1, possibility 3. Am I clear till now? Shall I continue? I am going it so slow because it is an amendment. Because you never read this. Shall I continue? Others respond. I repeat, sir, distributor is using displays for free warranty. Free warranty displays I am purchasing, sir. Manufacturer should give, sir. But I am giving. What will I do now? One, I will go and ask manufacturer, sir, I have used 5 displays for your free replacement. Give me money for that 5 displays. So I will raise invoice and take money. Or second thing is what? Sir, you have sold me 100 displays, no sir. In that 5 displays went for free warranty only, sir. I will pay only for balance 95 displays, sir. For that 5 displays which I used for free warranty, give me a credit note, sir. Give me a credit note. I will take credit note from the manufacturer. And when I have purchased, guys, listen. When distributor has purchased, sir, when distributor has purchased, he would have taken ITC on 100 displays, sir. ITC on 100 displays. But now what he should do? He is getting credit note for 5 displays. So distributor should reverse ITC on these 5 displays or not? Distributor should reverse ITC on these 5 displays or not? Everybody clear? Please respond. Please respond. PC C this option. Please respond, ma. Please respond. Super. Respond, others. I'm just waiting for your response. Fourth possibility. What is the fourth possibility? This is nothing but, see, first possibility, third possibility connected, second possibility, fourth possibility connected, similar type of things. Second possibility, what has happened, ma? Everyone. Second possibility, what has happened? Manufacturer only first he will send, hey, use this spare parts in the free replacement, free warranty period. Then distributor will say, okay, sir, I will use. Fourth possibility is, I will not wait till you send the goods. Time is not there for me. First, what I will do is, I have some stock with me. I will use the goods. Then I will send a request. Hey, I have used for your free replacement warranty period. For that I have used this. Send me the stock. So then what the manufacturer will do? Then manufacturer will send. Are you understanding the point? So simple. Everybody look at this. Sir, during this replacement, first what I am doing? Sir, first what I am doing is, sir, manufacturer sells the spare parts. Okay, what I am doing? I am either using them and raising invoice on manufacturer, correct? That is one option. Or otherwise what I can do? Use them and and ask manufacturer to raise credit note. Manufacturer to raise credit note. Am I clear? Or second option is what is the next one? Sir, I can directly ask manufacturer, send the goods, not sell the goods, send the goods for using in free replacement during the warranty period. You send the goods, I will use them. Whatever I have purchased, see, I buy, I use them, I raise an invoice separately again on you. Okay, or I buy, I use them, and whatever the invoice you have given on me, I will ask you to raise credit note. This is clear? Yes. This we are talking about only during warranty period. Free services and free replacement cost. For free services, nothing to discuss. Service, it is service. Nobody gives anything to anybody. Just we work on it and you don't take any consideration. There is no doubt about manufacturer giving service to distributor. Distributor is giving their service to customer. There is no such situation. We are only talking about the spare parts. Clear, Praveen? Now, this is one situation. Now, next situation is manufacturer is sending the goods. Manufacturer is sending the goods and is saying, manufacturer sends the goods and then distributor uses them. This is one variety. Another variety is what? Distributor first uses the goods and then manufacturer sends the goods. Are you understanding the point? Are you understanding the point, everyone? Everyone. So we have seen here, you are using them and raising an invoice on manufacturer, you pay GST on that, simple. Sir, you are using and giving him to give a credit nota, so there is no GST now. GST will come down, and also ITC will come down. Your ITC will come down because 5 credit note has been given for 5 displays in the example. Here what will happen? Manufacturer sends the goods and asks the distributor use them. Then also there is no GST, no implications, nothing, no reversal of ITC, nothing. And here also what? First I have my stock, I will use and close it. You send me the goods. Then also what? He is just replacing the goods to your stock. So then also there is no GST. So if you see fourth possibility again, no GST, no reversal of ITC. Is it clear? Is it clear? Everybody, clear. Shall I continue? Right. So that is what the concept here. Next, others respond. I'm seeing the chat box. Please respond. So that is regarding okay. Take the screenshot. Somebody is asking. Excuse my handwriting, because lack of time. I'm just rushing through that. So please excuse me for the handwriting there. I repeat, here we are discussing only about the spare parts. We are not talking about the service. Service next point is there, if you see. Next again it is there. Okay. Right. Now, sir, the next doubt is, you spoke about spare parts, no sir. What about the service? As somebody was asking, sir, what about the services, sir? Services, you understand, distributor is providing free service only. Okay. Apart from replacing the parts, all that free service is only providing. So distributor is not charging anything from the customer. So no GST implication. But the problem is, what if the distributor is charging the manufacturer? Sir, for your customer I have did the free service, sir. For me you should pay consideration. So if you go to Honda showroom will give the free service to you, but they will collect consideration from the Honda company, the manufacturer. Sir, your company car has come, your customer, you said 3 free services, I did service, sir, but I want money, sir. Like that the dealer will ask consideration from. So in that case, obviously what? Sir, the distributor, whether he is raising a new tax invoice, I repeat, whether he is raising a new tax invoice or a debit note, both the cases, whether GST is payable na, yes, of course GST would be payable and manufacturer can happily enjoy ITC. Are you understanding the point, ma? So let us assume Honda dealer, customer, free service, but dealer will raise invoice on. Should I pay GST here? Should I pay GST here? Yes, of course GST will come. Honda can take. ITC. Honda can take ITC. Simple. Am I clear, everyone? Simple point, simple point. Let us not waste time. Is it clear? I repeat, distributor or dealer, anybody in middle, will provide free service to the customer. So then they will ask manufacturer, sir, I have provided free service to your customer, please give me money. So then, yes, the manufacturer will pay money to the distributor. There will be GST on that, and recipient is a manufacturer, distributor is a supplier. So manufacturer can take happily ITC. Response is very less. Don't be lazy to type just one letter called Sira. Okay. So Let us proceed. Let us proceed. Right. Super. Yes. Keep responding. Hmm. What is the last point, Mahir? What is the last point? The last point is, sir, it is not about free warranty, all that. We are talking about extended warranty. Now, if you see when you go to purchase a mobile, they will say, sir, 1 year normally manufacturer warranty, sir, but you pay something extra. You will get 1 year extended warranty, sir. You will get 1 year extended warranty. Have you heard about this, ma? Everyone, please respond. Have you heard about this extended warranty? You pay something extra. Normally 1 year manufacturer warranty or 6 months manufacturer warranty. You will get 1 year extra warranty, 1 year, 1.5 year extra warranty, 2 years extra warranty, like that. Extended warranty. Have you heard about that? Sir, extended warranty we are giving to the customers, sir. This you are not giving free, ra. This is for consideration. Obviously, it is supply only. Now the doubt is, listen carefully. At the time of original supply, actually when you are buying the mobile itself, you got the extended warranty. Yeah. Yes, sir. What is the tax treatment? Sir, the extended warranty, listen carefully, is given by the supplier of goods himself, sir. Whoever is the seller, that fellow only is giving extended warranty, sir. That means it is a part of composite supply only, ra. Whatever is the principal supply is mobile, sir. The entire extended warranty is also treated as supply of mobile only. GST will be charged accordingly. Are you understanding the point? I repeat, when I am buying the mobile, at the time of buying the mobile itself, seller is saying, sir, I will give you extended warranty, take it. So extended warranty they are giving. Let us assume I am placing an order in Amazon, OnePlus mobile. So the supplier itself is saying, extended warranty, you pay 5,000 extra, I will give 2 years extra warranty. This becomes part of composite supply. Whatever is there, it shall be taxed accordingly. Am I clear? Treat that accordingly. They are giving the tax treatment. Next, if the extended warranty is given by a different person, not the supplier, some third party is giving you the extended warranty, then for the third party, this is not a composite supply. This is not like as a component of a composite supply they are giving. This is a separate supply. So treat it as a separate supply and tax it as supply of service. So for me, some extended warranty, some third party is giving some extended warranty for that mobile display. Then that extended warranty is a separate supply for the third party, and I should treat it as supply of service only, pay GST accordingly. Clear, everyone? Sir, no, sir. At the time of buying the mobile, I did not take extended warranty, sir. Later on, I thought, let me take extended warranty also. So after the original supply is over, I am going for extended warranty. Then supply itself is over. Now if you take extended warranty, it is not part and parcel of the supply. So whether original supplier gives it or a third party gives it, that means it is provided by either the supplier or the third person. It is treated as a separate supply and charged accordingly. It will be treated as supply of service and charged accordingly. Am I clear, everybody? Actually, some 3-4 pages clarification was there in ICA statutory update. When I was summarizing this, I was like getting a little bit frustrated because we have to start the lecture, the time is running, all that. So I have to cut short this, make the alignments, etc., arrange that in PDF, bring everything here. So I was feeling a little bit frustrated. So till now, clear, am I, everyone? So that is what the point regarding warranties. Warranty we have covered. During free warranty period, spare parts, services, and finally we have finished extended warranty also. Clear? Okay, with this we are done with supply chapter, my dear friends. So let us move with the new chapter, charge here. So let us go with chapter number 3, charge of GST. And in this, guys, main important things are reverse charge mechanism, e-commerce operator liable to pay GST, and this composition scheme. So without wasting time, let us quickly go into that. So here I have given some applicability of CGST Act, SGST Act, UTGST Act, the small things you can just read and understand. Next, analysis of section 9 is there. You know, section 9 is the charging section. What is the charging section? The section which gives power to the government to levy tax. Section 9, very, very important. And you should actually remember section 9 subsection 3 at any cost. Reverse charge mechanism, very, very, very important section number. So please make sure you remember that 9 subsection 3 reverse charge mechanism. What is this whole concept all about? The whole concept is, sir, generally supplier is liable to pay GST, but in certain cases recipient is liable to pay GST. So what are the cases? The cases are notified by the government. So you buy some notified goods, you buy some notified services, you are liable to pay GST. You buy some notified goods, you buy some notified services, it is not supplier, it is you who are liable to pay GST. Okay. But in our syllabus, we will be studying not goods, we will be studying only the notified services. What are the notified services? If I purchase, I am liable to pay GST under reverse charge mechanism. Am I clear, everyone? So that is what we are going to see. So what are the notified services? Before, like, let us move on to that 9 subsection 3 reverse charge mechanism. What are the notified services? Sir, the notified services are, first thing. First, I will, 1 second. Let us proceed. See, sir, the notified services are, first thing. See, whenever you are going with reverse charge mechanism notification and exemptions, you should be clear with who is the supplier, who is the recipient, what is the nature of supply, what is happening between them. All these 3 conditions together should be satisfied. Then only you can enjoy RCM. Any one condition here and there gets violated, it will fall under FCM. So general rule is FCM. These selected services are what? Coming under RCM. Am I clear? So now listen carefully. Right. So first of all, sir, coming to the things, as I told you, reverse charge mechanism, we should be careful really about who is the supplier, who is the recipient, what is the nature of supply. All the conditions satisfied, then only reverse charge mechanism, otherwise forward charge straight away. So first of all, let us move on to the first notified service. What is that, ma? GTA, goods transport agencies. You know, normally GTA services, sir, GTA means any person transporting the goods by road and issuing a consignment note. If these people are providing services of transporting the goods by road, transporting the goods by road services to the specified recipients. Who are the specified recipients, ma? Factory which is registered under registered under Factories Act, society which is registered under Societies Act, cooperative society registered under the respective cooperative societies act, or any person registered under GST, or any body corporate registered, or any partnership firm registered or not, or casual taxable person. If these are the recipients, we all put these people all put together, we call them as specified recipients. We call them as specified recipients. Clear? For these specified recipients, if you are a GTA providing services of transportation of goods by road, then these specified recipients are liable to pay GST under RCM, not the GTA. Am I clear? In this, see, everybody registered except that partnership firm registered or not. Casual taxable person also registered under GST. Okay. Now, what is the meaning of casual taxable person? You might be already knowing. Casual taxable person is nothing but the person who does not have fixed place of business in the state from which he is making the supply. So any person who does not have fixed place of business from which he is making the supply. There is a clear example here, you can just check. So we have already discussed this in the class also. The point is, casual taxable person meaning is what? Sir, I am selling something. For example, Mr. Verma is having a silk saree showroom in Tamil Nadu. He is going to Gujarat, and in a exhibition there, he is having a small tent in the ground and he is selling the silk sarees for some 10 days, 15 days. The exhibition will be there. He will be selling them and coming back. Now in Gujarat, he is making the supply. For Gujarat, he is making supplies from Gujarat. In Gujarat, whether he is having any fixed place of business? No, sir, he is not having any fixed place of business. That means, sir, Verma is a normal taxpayer for Tamil Nadu, but for Gujarat, he is a casual taxable person, sir. For Gujarat, he is a casual taxable person, sir. Are you able to understand? Are you able to understand? So, casual taxable person means who does not have fixed place of business in the state from which he is making the supply. So that is casual taxable person. Okay. So the point is that GTA, goods transport agency, that they can provide services by transportation of goods by road for these people, and these people are liable to pay GST under RCM. And you also know that GTA is also having an option to go with FCM also. So if GTA is opting for RCM, GST rate is 5%. GTA is opting for FCM, it is 12%. But what is the disadvantage if you are under RCM? Guys, very important. What is the disadvantage if you are under RCM? Sir, if you are under RCM, sir, the biggest disadvantage is when I am making a supply, my customer will go and pay GST to the government. He will be happy. But the problem is for me. The problem is for me. So now what is the problem for me? For me, the problem is, sir, I cannot take ITC on my purchases. GTA cannot take ITC on GTA's purchases. Are you able to understand that? Are you able to understand that? So the point is clear. Sir, any person who is making RCM supplies cannot take ITC on his inward supplies. So same way, GTA also not an exception to that. Sir, GTA is providing services coming under RCM. Whatever GTA purchases, GTA cannot take ITC, sir. But GTA has been given a golden opportunity here. What is that? GTA, if they want to choose, they can choose under FCM also. They can go for FCM also. And if they go for FCM, what is the GST rate? GST rate is 12% only, sir. GST rate is 12% only, sir. And they can also avail ITC on their inward supplies. I repeat, GTA's customer is not having any problem. GTA is going under forward charge or reverse charge. GTA's customer will take ITC. But the problem here is for whom? The problem is for GTA. What is the problem? The problem is, sir, GTA cannot avail ITC because GTA is making outward supply which is covered under RCM. So GTA cannot take ITC. Always remember, you take ITC only when you have output tax in your hand. I am GTA. Do I have any output tax in my hand? No, sir. I am generating tax liability, but my customer is liable to pay GST. Sir, my customer is liable to pay GST on that. So what is that? That means you don't have output tax in your hand. Yes, sir. Then you don't ask ITC also. So you will get ITC in this hand, provided you have output tax in this hand. Simple. Sir, I am providing RCM supplies. Do I have output tax? I am providing. I am not receiving. I am providing. I repeat, I am providing RCM supplies. I am providing RCM supplies. Do I have output tax in my hand? That means, will you give ITC to me? But if you go for FCM, you have output tax in your hand. How much? 12%. You are liable to pay GST. Today you are generating GST liability, and also that liability you are only supposed to pay to government. So you have output tax in your hand, so you will get input tax here. Simple. So enjoy. But sir, morning I will go for RCM, evening I will go for FCM, sir. Is that possible, sir? Don't make this khichdi here. Morning RCM, afternoon FCM, again evening RCM, night FCM. Don't do all this nonsense. So for you, the simple thing is, sir, either you go for RCM or FCM, but option once exercised, it will be valid for the entire financial year. Year wise, only once you can change the option. That's all. You cannot change it here and there. Am I clear? And so now the interesting thing here is, sir, if you understand the provisions of exemptions, RCM, everything, we can come to a conclusion that GT is having three types of customers, sir. Three types of customers. Who are those three types of customers? One is those whom we have already discussed just now, specified recipients. In that case, it is taxable either RCM or FCM. That means first option is RCM only here, because generally for these people RCM only. But if you want, you can take it under FCM also. If you want, you can take it under FCM also. Are you understanding the point? So that is the option. Clear? But sir, what if GTA is providing services to any person other than the specified recipients? Who are the specified recipients other than these people? Give me some examples. There are some unregistered individuals are there. You are staying in hostels. You are shifting from the hostel to your native after the exams are over. Going to a GTA asking, sir, please transport my books, sir. I have already carried them in my head. Now you carry them in your bus. Like that, you are asking the GTA to transport your books and luggage to your native place. Now, they are charging some consideration. GST will be there or not? No, it is exempt. It is exempt. Understand? GTA, I'll tell you, providing services to any person other than specified recipients. The specified recipients, 7 people whom we have discussed just now. Or GTA is providing services to these government departments, establishments, the local authorities and government agencies who got registered under GST. These people are registered under GST, but why they got registered under GST? Sir, they got registered under GST only for the purpose of complying TDS provisions under section 51, sir. The TDS detailed concept we'll see in the next TDS related video. But please understand here that these people got registered under GST not because they are doing some business, because they have some obligation under section 51 to follow TDS provisions. To follow the TDS provisions, they are taking GST registration. I repeat, they are not doing any business. They are taking GST registration because they have an obligation, TDS obligation under section 51. To fulfill that only they are taking GST registration. For those people, if you are providing services, who are you? You are a GTA providing services. I repeat, this exemption is only for GTA services. Don't use it everywhere. We are combining RCM services and exemptions together and discussing here. So GTA services provided to specified recipients, RCM or FCM, fine. Other than specified recipients and this section 51 entities, in short, to call them. So the people who got registered under GST for the purpose of following section 51, for these people, if GTA provides services, exempt under. If it is exempt under GST, who is liable to pay GST? RCM or FCM? If it is exempt under GST, who is liable to pay GST? RCM or FCM? Respond in chat box. RCM or FCM? Person full active. Super. I'm happy that you are responding the right answers. Sir, if it is exempt under GST, who is liable to pay GST? Sir, no RCM, no FCM, sir. Nobody liable to pay GST. Right. So that is what the concept. Shall we proceed? So with this, we have understood GTA services, and using GTA services, we have understood one common point for all the RCM activities. What is that common point for all the RCM activities? For all the RCM activities, the common point is, if I am giving RCM services, I am providing RCM services, then I cannot take ITC on my purchase because I don't have output tax in my hand. Whatever I have provided is taxable only, but my recipient is liable to pay GST. No, sir, I am not liable to pay GST, sir. So output tax is not there in my hand. So input tax will not be given to me. Am I clear? That is what the concept. So that is what all about that. Next. So what are the other things? Shall we continue now? Hope you are clear with this GTA services. So now it is easy. Check, we can finish all the other RCM entries. Clear ba? So we have seen this GTA services. They have option to go with RCM and FCM. Entire 21 entries will be there under RCM. Out of that, 3 people will have this option to go with RCM or FCM, whatever they want. General rule is RCM. If they want to go with FCM, they can go with that. Clear? So fine. So coming to the point, next one, legal services. Sir, what do you mean by legal services, sir? Legal services means, sir, this individual advocates or senior advocate or firm of advocates are giving representational services, sir. They are going and representing me in the court or in front of any authorities, sir. Or they are giving me any advisory services in any branch of law, sir. Then, okay, who are you first of all? Sir, I am a business entity located in taxable territories. What do you mean by business entity? Any person doing business, including the sole proprietor. Even sole proprietor is covered here. Even sole proprietor is covered here. Don't feel anytime, sir, business entity means always a company or LLP like that, big corporates and all. Any person doing business. Even a small grocery shop next to your house is also a business entity. A sole proprietor is also covered. So in this case, who is liable to pay GST? Sir, business entity na. The business entity is only liable to pay GST, sir, if they are the recipient. Am I clear? And if you remember legal services exemptions, sir, legal services are exempt if they are provided to any person other than business entity. Do you remember that? Other than BET, it is exempt. For example, lawyer is providing some advisory services to a individual for his divorce case, exempt under GST because any person other than business entity. Or do you remember, sir, any business entity whose aggregate turnover is not exceeding the threshold limit, making it liable for registration? Small BET, small business entity we call in short. That means the legal services, if you remember, I am covering exemptions also here. Legal services to BET, that means business entity in taxable territory, and others. For others, it is exempt. For others, it is exempt. But for BET, small BET, what do you mean by small BET? Sir, they are not doing even an aggregate turnover, making them liable for registration, sir. not liable for even registration. So the aggregate turnover is less than the threshold limit, sir. For them you are providing a small startup company, for them they are providing, then what is the taxability ma? Then it is exempt under GST, sir. Small fellows, no, don't trouble them. Okay, so exempt under GST. No, sir, others not taxable. That means Geo company, Reliance company, or any other big business entities, all that. So then RCM, obviously. Am I clear? Everybody. Oh, please tolerate my handwriting, because see, I just want to finish it just like that, so I'm not wasting time in writing them neatly, all the stuff. So hope it is clear for you, the concept is clear. So I'm covering RCM also, exemption also here. Okay. Right, so let us move on to the next one. The next one is arbitral tribunal providing services to business entity. Business entity is liable to pay GST under RCM. Next, any person, supplier, Ray, please stay focused, or please be careful with supplier and recipient, and also the nature of supply. Any person providing services to body corporate or a partnership firm. What services, sir? Sponsorship services. Sponsorship service means what, sir? Generally we feel sponsorship services means the sponsor is the supplier. No, sponsor is the recipient. We are advertising the sponsor's name or his brand. So sponsor is the recipient, sponsor is the body corporate or a partnership firm, and we can be any person who are advertising their name. For example, your college is doing some events and you are going and searching for the sponsors, getting the title sponsor, etc, etc, advertising their name, and you are getting some consideration. Who is liable to pay GST? The sponsor is liable to pay GST, but the condition is what, guys? Be careful here. Sponsor is not business entity, body corporate or a partnership firm. And for the purpose of GST, understand, in GST, LLP is treated as what? LLP is treated as partnership firm. Let us not worry about the technicalities, we don't have that much time. Okay, so I repeat, sponsorship services, body corporate or a partnership firm is the recipient. Any person giving them sponsorship services, that means advertising their name, is coming under RCM. Am I clear with that? Super. Next. Entry number 5. Let us take it. Okay, let us finish it off. What is there? Why to take it at end? So now, coming to the government services, let us discuss this. 1 second. See, now understand, the next entry is government services related one. So government services, if you see, sir, government services, it is given in exemptions also, and it is there in RCM also. So exemptions and RCM, let us have a comprehensive discussion coverage here. So in this exemptions and RCM, we are combining together and reading. And I told you already, if you remember, sir, government services, if you take government services, second, government services, for government, who are the customers? Sir, for government, general public are the customers, sir, or business entities, business entity in taxable territory are the customers, sir. If you see for general public, can I say all the services are exempt? For general public, all the services are exempt. All these services are exempt for general public. But you know what are the exceptions? A, B, C. But A, B, C are always taxable, and also they are taxable under Forward charge mechanism, FCM, forward charge mechanism. That means supplier, the government is only liable to pay GST. Somebody, like some people who are watching our lecture for the first time may be thinking, sir, what is this ABC? What is this ABC? Understand, in exemptions, sir, there is entry number 6, which is talking about government services, and in that we have this ABC. You should always remember this ABC. A is Postal Department services and Indian Railway services. B is any service in relation to aircraft or a vessel. C is transportation of passengers and transportation of goods. D you just ignore. But ABC you should definitely remember. ABC you should definitely remember. I repeat, ABC. These things you always remember. A is Postal Department and Indian Railways. B, anything related to aircraft or a vessel. For example, Government of India, like Airport Authorities of India, providing some landing or parking facility for your aircraft. Something like that. Anything related to your aircraft or a vessel. C, transportation of passengers and transportation of goods. These three you should definitely remember in the same order. For various purpose, you just ignore it. Clear? So you should remember those 3 points in the same way. Clear? So I repeat, government services for general public, always any service provided by government is exempt. Enjoy exemption. Why I am discussing exemptions here? If you know whether it is taxable or exempt, then only you will understand whether RCM or FCM. Here the problem with government services is some services are exempt, some services are taxable. If it is exempt, I need not worry RCM or FCM. But if it is taxable, some are under FCM, some are under RCM. So I am discussing together government services, exemptions also, RCM also. Clear? Now coming to the point. Sir, exemptions, government services, general public is the customer for the government, and all the services are exempt. That is a general rule. But ABC is always taxable, and ABC is always taxable under FCM. That means government only will pay GST on these activities: Postal Department, Indian Railways, aircraft or vessel related services, or transportation of passengers and goods. All that they will not say RCM. Okay. Now coming to this business entity, BET. Sir, BET, that is business entity in taxable territory. Okay. So business entity in taxable territory, I am classifying it as small bet and others. Small bet and others. What do you mean by small bet, sir? What do you mean by small bet? Small bet means, as I already told you, sir, this business entity aggregate turnover, if you see, it is not exceeding threshold limit for registration, sir, for registration. I repeat, what do you mean by small bet? Business entities whose aggregate turnover in the preceding financial year, aggregate turnover in preceding financial year, PFY, preceding financial year, it is PFY, preceding financial year, not exceeding even the threshold limit. That means they are not even liable for registration. That much small business they are doing, that much small business entity they are. Nowhere in the law there is a word small business entity. This is just for our understanding. Okay. For these people, if government provides any services, for them also same provision. All services are exempt. All services are exempt. Government providing services to general public and small business entities, everything is exempt other than 6 ABC. Other than 6 ABC. Am I clear with that? Other than 6 ABC. Till now comfortable, everybody? Of course you know this already. We are just revising. Everybody respond. Clear, Amma? Okay. Guys, I repeat, quickly we can cover this RCM and all that stuff, because this is government services. You know, only this entry is little bit lengthy. Remaining all services we can just like that finish it off. Okay. Now, sir, what about others, sir? What about others? Sir, others, if you see, others, that is other business entities in taxable territory, other bet. What is the general rule? Sir, the general rule itself is what? All services are taxable. All services are taxable. All services are taxable, and that too under what? RCM. All services are taxable, that too under RCM, that too under RCM, that too under RCM. But ABC is, you know, ABC is FCM. Please understand, always ABC, always taxable, always FCM for everybody. For everybody, whether it is general public or business entity, everybody it is always taxable, always FCM. But sir, for these people, government is providing any service where consideration less than or equal to rupees 5,000, then it is exempt. But sir, this is not applicable for ABC other than ABC. Am I clear? Other than ABC. Are you able to understand? For, I repeat, other business entities, let us focus again. For other business entities, any service you provide, sir, now taxable. Any service you provide, now taxable. Now, please understand one thing. Any service you provide, taxable. Taxable under RCM. But if consideration is less than or equal to 5,000 rupees, then it is exempt. But this exemption is not applicable. This exemption is not applicable for whom? For ABC, this is not applicable. What do you mean by that? What do you mean by that? That means, sir, I mean to say that, sir, I mean to say that ABC is always taxable, sir. ABC is taxable. And that too under FCM. Is taxable, that too under FCM. That is what I am trying to tell, sir. Are you able to understand, everybody? Am I clear, ma? Everybody? Simple flowchart. Shall I continue? Simple flowchart. Right. Listen now. Everybody clear? Just one confirmation. That's all. Let us proceed. I repeat, sir, government services, general public and business entities, sir. General public, everything is exempt, sir, other than ABC. So other than ABC, that means ABC is taxable under FCM. For business entities, if it is small business entity, any service is exempt, sir. But ABC is taxable, sir. That too taxable under FCM, sir. For other business entities, everything is taxable, sir. Taxable under RCM only, sir. But if the consideration is less than or equal to 5,000 rupees, then it is exempt, sir. But this relaxation is not available for ABC. That means what you are trying to say, ABC is always taxable under FCM, no matter it is general public or business entity, small business entity or other business, no matter who is the recipient. Always taxable under FCM. What do you mean by ABC, sir? Postal Department Services and Ministry of Indian Railways. Next, number 2, sir. The number 2 is this aircraft and vessel related services. Number 3, C. Point C is transportation of passengers and transportation of goods. Clear? So that is what all about that. And here there is one special person, sir. There is one special person. Who is the special person, sir? Do you remember? We can say special service. What is that special service, sir? Renting of immobile property. To whom? To business entity. By whom? By government. Here government in the sense we are talking about central government, state government, union territory or local authority. Okay, very good, Rasivaram. So renting of immovable property, special services, renting of immovable property by government. So now, if they are providing it to registered person, then it is RCM. If they are providing it to unregistered person under GST, registered person under GST, registered person under, so it is RCM. To unregistered person it is FCM. Simple, clear. That is what we have seen. Entry 5A, if you remember. Shall I continue? Shall I continue, everyone? So that is what the concept. So that is what regarding government services. But here one more thing we have to see is, sir, this point is not applicable to Indian Railways. If you remember, this is not applicable to Indian Railways. So Indian Railways renting the immovable property. Indian Railways renting immovable property. Renting immovable property. Always FCM. Always FCM. Always FCM. Am I clear? And with respect to special persons at this point, not only applicable for government, sir, this is also applicable to Parliament. Sir, these provisions are also applicable to Assembly, Legislature, and also to courts or tribunals. That means in the court premises they are putting up geo tower, for that they are paying rent to the court. Then yes, registered under GST na RCM, unregistered na FCM. Are you understanding this point, Ra? So simple, ma. With this just two flowcharts we have covered entire government services exemptions as well as what? RCM also on government services. We have understood what is taxable, what is exempt, what is RCM, what is FCM. Shall I continue? Respond, everybody, respond, everybody. Ray, your energy is my energy, Ra. Please understand that. That's all. We can finish quickly RCM and then we can move on to composition scheme. So the next one is the renting of again 5AA. Another important one. Entry 5AA. 5B, 5C, you can just ignore them, not relevant for your exam, or just go through them once. Okay, later on you should not say, Vishnu sir, you said not to read, that came in exam. Okay, just go through that once later on. So entry 5AA is nothing but what, sir? Any person renting the residential dwelling, sir, any person renting the residential dwelling to a person registered under GST, sir. Residential dwelling, I can say, for business purpose. For business purpose. So here simple, sir, there is a residential property given on rent for residential purpose. I'll show you the flowchart. Residential building. Purpose is also residence only. Whether the recipient is registered or unregistered, it is exempt under GST. Again, we are touching exemption plus RCM. Okay, so residential building for residential purpose given for registered person or unregistered person, both cases it is exempt. But sir, residential building I am giving it for business purpose, sir. That means I am giving a residential building to a doctor who is putting up his clinic, or I am giving a residential building to a chartered accountant who is putting up his office. So if the residential building is given for office purpose, see, only if it is given for residential purpose it is exempt. If it is given for business purpose it is taxable. So if the recipient is registered fellow, then it is taxable under RCM. Okay, If the recipient is unregistered fellow, then it is taxable under FCM. But residential building given on rent for residential purpose exempt, but for business purpose taxable. Recipient is registered in RCM, unregistered in FCM. That is what the concept. Here RPT means recipient. Okay, so that is what the point. Next, what is next one? So we are done with the major things. So small entries now. The director providing his services. Guys, hope you are clear. What if supplier here is unregistered? Supplier is registered, unregistered, it does not matter. Taxable. If supplier is also unregistered, what will happen? Nobody will be there to pay GST to the government. Supplier is unregistered, recipient is registered na RCM ra. Supplier is unregistered, recipient is also unregistered na. It is taxable only, but nobody is there to pay GST to the government. It's just like you are going to roadside tea stall and having the tea. Taxable only, but there is no person to collect tax and pay to the government. Okay. Next, so director services. Understand, director may be like what? Director may be an employee of the organization or may not be an employee of the organization. If he is an employee of the organization, look at this carefully, sir. Director is an employee of the organization. How do you understand whether he is an employee of the organization or not? Sir, they are deducting TDS under section 192 of Income Tax Act, sir. Then he is employee. If he is an employee, sir, it is neither SOG nor SOS. So no GST only. Example, sir, whole-time director of a company, providing his services to the company, getting salary, neither SOC nor SOS. But understand, you are providing your service as an employee and okay, fine. But you will attend the board meetings and get sitting fees for attending the board meetings. So those sitting fees is paid to you for not an employee because you are a director of the company. That is taxable under RCM. Am I clear? Director, employee na, no GST, no RCM. But director will get sitting fees, a consideration for attending the board meetings. That is RCM. That is taxable and taxable under RCM. Sir, what if director is not an employee, sir? Then it becomes supply. But sir, that director is not an employee, but he is a director of a body established by central government or state government or local authority, sir. Then schedule 3 is there, neither SOG nor SOS. Only in other entities, if he is director, it is supply of service and it will attract RCM. So simple, entire director services, if you just summarize from various concepts, from various provisions, if we understand, we can just come to this conclusion. So director services, director can be an employee, may not be an employee. If he is an employee, no GST, nothing. But if he is not an employee, then we should see whether he is a director of a body established by government or other establishments. If it is a body established by government, again schedule 3 will come into picture. It is neither SOG nor SOS, so no GST implication. But if the director is a not an employee and is not a director of a government body, then it is supply only, sir. Then there comes RCM. Okay. But in any case, like here, even though he is an employee, if he is getting sitting fees for attending the board meetings, that means they are providing services as a director only, not as an employee. So that is taxable under RCA. Clear? Shall I continue? So, and one more interesting, like our recent one clarification, that is nothing but, sir, director will provide some services in his personal capacity, sir, not being the director of the company, but in his personal capacity, sir. What about that, sir? Then RCM straight away will not come into picture. You should see independently whether any other RCM provision will come into picture. But just because he is a director, RCM will not come into picture. I repeat, this is a point for amendment. Actually, this is May 24 related amendment. Okay. What is that? The director providing any services in his personal capacity shall be assessed accordingly, but not straight away under RCM. Hope I am clear. Shall we continue, ma? So that is what the concept. Okay. Next, guys, hope I am clear. Shall I continue? Please give response so that I'll understand my speed, everything is okay or what. Just C letter, type C, that's all. Okay, next, insurance agent, sir. Insurance agent providing services to insurance company. Obviously, the insurance company is liable to pay GST on that. And insurance agents are not employees of insurance companies. That is why you will not be seeing Schedule 3 coming into picture here. So, insurance agent services are taxable and insurance company is liable to pay GST. Same way, recovery agents providing the services to banks, financial institutions, and NBFCs by way of recovering the loans or whatever it is. Then further, they will get some commission that is liable for GST. That is not salary. They are also not salaried employees. So banking companies, financial institutions, and NBFCs are liable to pay GST. Same way, any music composer, photographer, or artist. Here the interesting thing is, sir, they are doing some work, composing music, composing some tunes, or taking a photograph or artist work, all that stuff. For that, they should have got copyright under section 13(1)(a) of Copyright Act 1957, and they are allowing some music company or a producer to use that copyright. For that, these people will get royalty. So that royalty is taxable under RCM, so that music company or the producer will be liable to pay GST, but not the music composer, not the photographer, not the artist. Sir, it comes under RCM, so this music company or the producer is liable to pay GST, sir. That is the concept. Okay. Now, here one more thing is author. Sir, author who is like having his copyright on his original literary, he is allowing the publisher to use it and sell the books. For that, publisher will pay royalty to the author. On that, who is liable to pay GST? Publisher is liable to pay GST. As I told you, for example, I wrote a book called How to Pass CA within 30 days. I am giving the publishing fiction category, so I am giving publishing rights to the boys publishers. They are publishing and selling it, and they are paying me royalty per book sold. They are paying me 30 rupees royalty. Who is liable to pay GST on that? The boys publishers, the publishing company is liable to pay GST. But the interesting thing is, the law has given me an option to go for FCM if I want. So if I want to go for FCM, I should register under GST and I should start raising tax invoice on the publisher. I told you already, only 3 people under this RCM notification has an option to go with either RCM or FCM. A sitting fees under RCM, correct? So the point is, please understand, sir. Only 3 people have got this option of going with either RCM or FCM under this notification. One is GTA, the other is author. Here we have seen, clear. But same story, once option exercised, it will be valid for the entire financial year. You cannot change in middle. Okay. Next, overseeing committee which is appointed by Reserve Bank of India to give advisory services to Reserve Bank of India on various matters. RBI is liable to pay GST on that. Next, individual direct selling agents. What do you mean by that? Sir, there are people who are getting licensed to act as a direct selling agent. Individuals also will get that, partnership firms also will get that, body corporates also will get that, companies also will get that. The point is, if you are an individual and you are providing services as a direct selling agent to banking company or NBFCs, that means you are selling their home loans, education loans, etc., etc. For that, they will pay you commission. And I repeat, you are an individual. If you are a body corporate, partnership firm, or LLP, it is straight away FCM. It will not come under RCM. If it doesn't come under RCM, that means it is under FCM. Am I clear? So you are providing your services as a direct selling agent. So that is the concept, right? Let us move on. Next, please understand business facilitator and business correspondent thing. So generally, just searching for some space. Okay. So if you see business facilitator and business correspondent, see, business facilitator to bank providing their services and business correspondent to bank providing their services. These people might also have agents. Agent of business facilitator providing services to business facilitator and agent of business correspondent providing services to business correspondent. Sir, what are covered in RCM? Na? Business facilitator to bank is covered under RCM. But business facilitator to bank is covered under RCM. But business correspondent to bank is not covered under RCM. That means it is FCM. Agent of business facilitator is not given in RCM entry itself. That means if at all, see, normally business facilitator will not have an agent. That fellow itself is a small fellow. But if he has, it is under FCM. But if agent of business correspondent is providing services to business correspondent, it is given under RCM. Please be clear with this. In the law, I repeat, in the law, they have just given this point and this point. Okay. For your better clarity, I am discussing the other things also. Sorry. So for your clarity, I'm just discussing the other things also. So please remember this carefully, because in the exam, they may just confuse you with business facilitator and correspondent. So these things we have seen. Right. Next. So any person other than body corporate is providing services to a registered person. What is the service? Security services. Security services means supplying the manpower, the security persons. That is the service. It is covered under RCM. But if the supplier is body corporate, then it is FCM. Supplier should be any person other than body corporate. That means, can I say individuals, partnership firm, HUF, LLP, all that. Okay. Recipient, please be careful. Recipient should be registered person, not body corporate. Recipient can be individual also, body corporate also, HUF, anybody. I'll just show you one example. Just go through that later on. Just pause the video and go through that later on. So if you see, I repeat, supplier should be any person other than body corporate. Recipient is not body corporate. I repeat, recipient is not body corporate. Recipient is just any person registered under GST. Supplier is any person other than body corporate. Okay, any of these conditions are violated, then straight away FCM. Okay, so this is the example. You can just pause the video and just cross check the example also. But here the point here is, sir, this RCM will not apply. This RCM will not apply if the recipient is government department registered under GST just to comply with section 51 provision. It is taxable only, but it is not RCM. That means FCM. And if recipient is registered person, but that fellow is opting for composition scheme also, this RCM provision is not applicable. Taxable only, but RCM is not applicable. That means FCM. Are you understanding the point? Recipient is registered person. Recipient is registered person. But if the recipient is these two people who have taken registration only for the purpose of following section 51, or who is a composition taxpayer, these two cases, RCM is not applicable, only FCM straight away. RCM is not applicable, only FCM straight away. Am I clear? I repeat, they are taxable. This is not like GTA. In GTA only exemption is given, not here. Okay, they are taxable, but taxable under FCM. They are taxable, but taxable under FCM. Hope it is clear for you. And the last entry, the relevant one for us in RCM is, sir, any person other than body corporate renting the motor vehicle with the cost, like passenger vehicle actually, okay, which is designed to carry passengers, with the cost of the fuel already included in the consideration. This any person other than body corporate. That means this is a non-body corporate situation. Supplier is a non-body corporate, but recipient is body corporate. If you have understood the discussion, you should be paying utmost attention to supplier and recipient. Sometimes they say body corporate, sometimes they say not a body corporate, sometimes they say registered, sometimes they say unregistered, all that stuff. So you should be really careful with this. Okay, so recipient is a body corporate. Supplier is any person other than body corporate renting the motor vehicles. This is not transportation of passengers, this is renting of motor vehicle. So renting of motor vehicle with cost of the fuel included in that, which is a passenger vehicle, not goods carriage vehicles, or not lorry, truck and all. We are talking about any bus or car, anything like that. So in such case, who is liable to pay GST? Sir, the body corporate is liable to pay GST. Okay, so normally you will be seeing MNC companies will be giving this pickup and drop facility for the employees. Further, they will take some cabs on rent, all that. So in such cases, the cab drivers all are small fellows. We cannot cover like GST from them. So we brought RCM here. So the company will pay GST under RCM. That is what the whole agenda. Am I clear? So that is what the concept, right? Next. The next one is, and here there is one clarification. The doubt is, sir, above we have discussed no RCM. Is it for renting of the motor vehicles or transportation of passengers? Who got this doubt? I don't know. Seriously, the department gave clarification also. They said this is for renting of motor vehicles, sir, not for passenger transportation services. They are not, passenger transportation services are not covered under RCM. They are under FCM only. And one more thing is, difference between renting of motor vehicle and transportation of passengers. If I rent a vehicle to you, sir, that vehicle will be completely at your disposal, Nora. Wherever you want, you can take it. In whichever route you want, you can take it. There is no such predetermined route, all that stuff. So you can take it wherever you want. You can use it however you want, of course, without damaging it. Okay, but that will be completely at your disposal. But if it is passenger transportation, you tell me where to be dropped, at what time you should be dropped. We will pick you up and drop you. Simple. Vehicle will not be at your disposal. So there is difference between them. Clear? So this RCM is applicable only for what? RCM is applicable only for renting of motor vehicle, not for transportation of passengers. With this, we are done with RCM. 9 subsection 4, not that greatly relevant for you. Just you go through that later on. So this is the notes for 9 subsection 4. You can just give a glance to that later on. So let us not worry. Now coming to 9 subsection 5. So we are done with 9 subsection 3. Hope everybody clear. So we are done with reverse charge mechanism under 9 subsection 3. Sorry, I just forgot to mention this renting the motor vehicle. Here this fellow is also having an option like GTA, just like exactly like GTA. Can go with RCM or FCM. RCM means 5%, FCM means 12% GST rate. Just like similar, exactly same like GTA. So option 1 exercise, it is valid for entire financial year. Am I clear with this? So that is what the concept. With this, we are done with RCM. Let us move on to section 9 subsection 5, e-commerce operator. E-commerce operator is liable to pay GST in the section 9 subsection 5. You know, normally, sir, who is an e-commerce operator, sir? Who is facilitating the electronic platform for the suppliers and recipient to get connected? So he is purely an intermediary connecting the supplier and recipient. My everybody with me? Shall I continue? 5 minutes will finish. E-commerce operator. So I repeat, e-commerce operator is liable to pay GST. Sir, e-commerce operator is liable to pay GST, and we are not talking about every e-commerce operator here. Sir, e-commerce operator, first of all, understand, he is not the supplier, he is not the recipient. He is just an intermediary through whom you are supplying the services. And we are not even talking about the e-commerce operator through whom you are supplying the goods also. We are not talking about them. We are talking about only e-commerce operator through whom you are supplying notified services. That e-commerce operator only liable to pay GST as per 9 subsection 5. So I repeat, e-commerce operator is not supplying the services. It is not by it or to it. It is through it. Okay, it is through it. So through the e-commerce operator, if you are supplying notified services, then e-commerce operator is liable to pay GST. Sir, what if the e-commerce operator doesn't have physical presence in India? Then any person representing such e-commerce operator for any purpose in India is liable to pay GST. I repeat, any person for any purpose representing the e-commerce. For example, Uber is doing business in India. Sir, for them, whether physical presence is required in India? No. Without even physical presence also, they can design the app and ask the drivers to download the app and the customers to just go with that app and use it. Simple. In that case, what we will do? We will ask the person representing that e-commerce operator for any purpose in India, no, that fellow to pay GST. Sir, what if they don't have that representative also, sir? Appoint a person in India just for paying taxes. Are you understanding the point? Appoint a person in India just for paying taxes. So if there is no physical presence and there is no such person representing them, appoint a person in India for paying GST. Am I clear here? Sir, I will not appoint, sir. What you will do? You may get that doubt also, sir. I will not appoint, sir. What you will do? If you don't appoint, what we will do? We will block your app in India. Simple. It is easy task for us. Okay. So first, e-commerce operator is liable to pay GST when notified supply of services are done through it. And if e-commerce operator does not have physical presence, then any person representing such e-commerce operator. Number 2, they don't have physical presence and they don't have any person representing them in India, then appoint a person just for the purpose of paying tax. And now the point is, Sir, what are the services notified here for the purpose of section 9 subsection 5? So there are just 4 services notified here for the purpose of section 9 subsection. If those services supplied through e-commerce operator only, e-commerce operator is liable to pay GST. Not all the services, ra. You don't bring AstroTalk where astrologer is providing your services through AstroTalk app. AstroTalk app is not liable for GST payment. Oh, don't misunderstand. So the point is, who are liable to pay GST? E-commerce operator are liable to pay GST. Only the notified services are supplied through them. The notified services are supplied through. The notified services are what? The notified services are, as we have discussed in the class, are transportation of passengers, housekeeping, accommodation services, restaurant service. These 4 services supplied through e-commerce operator only, e-commerce operator is liable to pay GST. Any other services, those suppliers are only liable to pay GST. 9 subsection 5 will not come into picture. 9 subsection 5 will not come into picture. Am I clear? That is the story. Okay. Now, the point is, sir, these 4 cases, every case there is an exception, sir. Every case there is an exception. What are the exceptions? The exception is, sir, I am transporting the passengers by radio, taxi, motor cab, maxi cab, motorcycle, all that stuff. Example, this Ola, Uber, Goibibo, all that stuff. Sir, in that cases, who is liable to pay GST? E-commerce operator is liable to pay GST, sir. But here one exception is there, no? Exception is related to omnibus. Exception is related to omnibus. You transport the passengers, for example, Ola cab you are booking. The driver is the supplier, you are the customer, the recipient, but supplied through e-commerce operator. So Ola is liable to pay GST. But here the point is, if you are transporting them through bike or car, all that stuff, no problem. But if you are transporting the passengers through omnibus and you are listing in e-commerce operator, for example, sir, I am having travels transporting passengers from Chennai to Hyderabad, and I have listed myself in GoIbibo, sir. You can book the ticket in my bus using GoIbibo. If this omnibus is operated by company, that means I have a travels. I told you, no, the travels is a company. For example, let us assume Transformers Travels Private Limited. I have a company. In that case, company is transporting the passengers using the omnibus, and you are booking the ticket through GoIbibo. In such case, company is liable to pay GST. No, sir, I am a sole proprietor, sir. I am having one bus, sir, going from Chennai to Hyderabad, coming from Hyderabad to Chennai, sir. And I have enlisted my bus in GoIbibo app, sir. You are booking the bus ticket from that GoIbibo app. I am transporting the passengers using omnibus, and who am I? Am I a company? No, I am a sole proprietor. So transporter is other than a company. Now who is liable to pay GST? E-commerce operator. GoIbibo only is liable to pay GST. Are you understanding the point, Ra? So look at this example, Ra. Vivard Travels Private Limited is a company transporting the passengers by bus, omnibus, bus. Sir, through this GoIbibo platform, who is liable to pay GST? The Vivard Travels Private Limited itself is liable to pay GST on that. But there is Transformers Travels, a sole proprietor. Transformers Travels, a sole proprietor, transporting the passengers using the bus, but listed in GoIbibo. People are buying, like a passenger is buying the ticket using GoIbibo platform. Who is liable to pay GST here? GoIbibo only, because the supplier is not a company. Supplier is not a company. Supplier is a sole proprietor. That is the reason GoIbibo is liable to pay GST. Okay, so this is the example. You can just take a screenshot or just pause the video and just refer that all that. So that is what all about that. We have discussed transportation of passengers by e-commerce operator. E-commerce operator is liable to pay GST, but there is an exception. That exception is what? Omnibus. Omnibus supplier is company, na? Company is liable to pay GST. Supplier is other than company, na? E-commerce operator is liable to pay GST. That is what the story. Right. Next, housekeeping and accommodation services. Housekeeping and accommodation services you are providing through e-commerce operator. E-commerce operator is liable to pay GST. Best example. Sir, this Oyo, GoIbibo, Agoda, Urban Company, all these things. But there is an exception, sir. What is the exception? The exception is, if that supplier, that is the hotel, or the supplier, the housekeeping, the electrician or plumber, carpenter, whom you are booking all that stuff. Sir, these suppliers are liable for registration under section 22 subsection 1 na? Then the supplier, the hotel itself is liable to pay GST, or the person, the electrician, carpenter or whatever, that fellow itself is liable to pay GST. But if the supplier is not liable for registration under section 22 subsection 1 na, then e-commerce operator is liable to pay GST. So if you can see here, if you can see here, so there is accommodation and restaurant services. One second guys, one second. So the supplier, whether it is accommodation services and housekeeping services, both are having the same exception. Sir, where the supplier is liable to register under GST under section 9 subsection under section 22 subsection 1, then supplier only liable to pay GST. No sir, supplier is not a person who is liable for registration and all, that means other suppliers. Then e-commerce operator is liable to pay GST. Example, you are booking a room in a Taj Hotel through GoIbibo. Taj Hotel is liable to pay GST because Taj Hotel is liable for registration under section 22 subsection 1, that is their aggregate turnover is crossing threshold limit. But sir, you are booking a room in some normal roadside hotel through GoIbibo only, then GoIbibo is liable to pay GST. Same way, you are like booking an appointment of an electrician or a plumber or a carpenter using urban company, and that electrician or somebody are like already having a good turnover, liable for registration under section 22 subsection 1 na, the electrician only liable to pay GST. In other cases, the e-commerce operator, the urban company, is liable to pay GST. So housekeeping and accommodation, these two cases, same exception, we have finished it. Okay, next one, coming to the last one, restaurant services. Restaurant services, best example, Swiggy, Zomato. Okay, time for the dinner, so Swiggy, Zomato. So this Swiggy, Zomato, in that cases, like who is liable to pay GST? The restaurant is only liable to pay GST. But the problem here is there is an exception. The exception is if the restaurant is located inside a great hotel. What do you mean by great hotel? So the great hotel means like where the declared tariff, we are not discussing actually how much they are charging daily basis. We are only talking about the declared tariff. The declared tariff is greater than or equal to 7,500. The declared tariff is greater than or equal to 7,500 per day. Then in such cases, inside such type of hotel, if you have a restaurant, from that, let us take ITC Grand Chola. So there the declared tariff is greater than or equal to 7,500 per day. Inside ITC Grand Chola, there are restaurants. You are ordering food using Swiggy, Zomato from those restaurants. Swiggy, Zomato is not liable to pay GST there. The restaurants are liable to pay GST. Okay. But if you are ordering food in any other restaurant, let us understand, the restaurant can be like a 7-floor building or a 10-floor building, but it is a standalone restaurant, separate restaurant. It is not located inside a hotel where the declared tariff is greater than or equal to 7,500. The restaurant is located separately, no matter how super duper restaurant it is. Who is liable to pay GST there? E-commerce operator is liable to pay GST there. Am I clear? So restaurant services, if you are ordering the food from a restaurant which is located inside a super duper hotel, that means the declared tariff is greater than or equal to 7,500 per day, then that restaurant is only liable to pay GST. In other cases, e-commerce operator is liable to pay. Understand the basic difference between hotel and restaurant. Hotel is where you sleep, restaurant is where you eat. Am I clear? Shall we proceed? So with this we are done with section 9 subsection 5, e-commerce operator is liable to pay GST. 4 cases, and each case we have an exception, and we have discussed all these things. Clear? So with this we are done with e-commerce operator point. So the last topic left in this chapter is composition scheme. So we are moving to the last concept of this chapter, composition scheme, section number 10. Very important composition scheme. So let us start discussing that. Let's proceed. So let us proceed with composition scheme. Sir, composition scheme, you know, composition scheme is a optional benefit or scheme given to small taxpayers. Sir, what do you mean by small taxpayers? Sir, I mean by small taxpayers whose aggregate turnover in the preceding financial year is not exceeding 150 lakhs can enjoy composition scheme benefit in the current financial year. So what is the advantage of composition schemes? Sir, the advantage of composition scheme is they are supposed to pay taxes at composition rates which are very small, that is 1%, 1% and 5%. So they need not pay taxes at normal rates, number one. Next, number two, they need not pay taxes on monthly basis, just quarterly basis is sufficient. Number three, they need not file the returns on monthly or quarterly basis. If they are filing one return for the entire year, that is more than sufficient. Clear? So those are the benefits. For those benefits to be available, if you are eligible for composition scheme, you can opt composition scheme. But who are eligible for composition scheme? Whose aggregate turnover in the preceding financial year, does not exceed 150 lakhs. But if you are in special category states, what is the threshold limit? 75 lakhs. The threshold limit is 75 lakhs. Sir, what are special category states? You know the special category states. What is the code for us to remember the special category states names, sir? What is the code? Do you remember, ma? The code is, sir, 75 lakhs in case of special category states, that is stunning, ma'am. 8 states. So stunning, ma'am. Sikkim, Tripura, Uttarakhand, Nagaland, Manipur, Mizoram, Meghalaya, and this A stands for not Assam, it is Arunachal Pradesh. Remember, stunning, ma'am. Why ma'am is stunning? Because she is watching the sunrise at Arunachal Pradesh. Okay, so that is why ma'am is stunning. So this is the code for us to remember. So these are the special category states. In these special category states, if you are doing business, sir, your threshold limit is not 150 lakhs, it is 75 lakhs. So the concept is simple, sir. In aggregate, in the preceding financial year, if your aggregate turnover is not exceeding 150 lakhs or 75 lakhs, as the case may be, current financial year, you're eligible for composition scheme. Okay. So see, for example, here, sir, I am starting the business in 2021. Okay. And I'm registering under GST, whether I'm eligible for composition scheme or not. Sir, 2021, whether you are eligible or not, that depends upon your aggregate turnover in the preceding financial year 1920. Sir, in 1920, I was not at all doing business. That means your aggregate turnover is 0. 0 is less than or equal to 150 lakhs. Yes, you are happily eligible for composition scheme. So, first year, everybody are eligible for composition scheme. You have the benefit. If you want to take it, take it. Next, 21-22, whether I am eligible. For that, I should see 2021 financial year. The 2021 financial year aggregate turnover is 123 lakhs, sir. So 21-22 financial year, you are eligible for composition. Same way, 22-23, sir, you are eligible or not, that depends upon 21-22 aggregate turnover. Sir, it is exceeding 183 lakhs. So here I cannot go for composition scheme. So that way, if you see, sir, every year you should keep on checking the aggregate turnover in the preceding financial year. So based on that, you are eligible for composition scheme. Am I clear, my everybody? Right, super. The students, like, when I have asked so many questions, nobody replied, or very few of them replied. When I asked what is the code to remember this special category states, now these people, like, especially I have seen, like, all the replies are from boys only. Stunning, ma'am, stunning, ma'am, stunning, ma'am, stunning, ma'am. Unprofessional fellows. Right. So the point is, sir, we will see aggregate turnover in the preceding financial year, and based on that, whether you are eligible for composition scheme or not, we will decide. So every year, this is a process which you have to check. So that means I can say happily, sir, composition scheme is valid only for maximum 1 year. Not 1 year, maximum 1 year. Why maximum 1 year? I'll tell you later. So now coming to the point, sir, this is what the condition. But if you are located in special category states, it is 75 lakhs threshold limit. Now, if you see, for example, so this is the story. See, for example, sir, Vivard Notebooks Private Limited or Vivard Private Limited is dealing with goods registered under GST. They're having 3 branches: Telangana, Karnataka, and Andhra Pradesh. In all the 3 branches, they are registered separately, and they are doing this much of turnover in 22-23. In 22-23. Now, sir, the first question is whether they are eligible for composition scheme. They are eligible for composition scheme in the financial year 23-24. That is the next financial year. That depends upon 22-23 aggregate turnover, sir. What is aggregate turnover in 22-23? Sir, aggregate turnover in 22-23, if you ask me, what should be the answer? The answer is aggregate turnover is not taken branch wise. It is pan India basis with the same pan wherever you are registered, wherever you are doing the business, all that to be added. That means here in this case, I should add Telangana's turnover, Karnataka turnover, Andhra Pradesh turnover. So if you see, aggregate turnover means pan India basis, whatever is the turnover, whatever the outward supplies are there, that I should consider, sir. Here if you consider that, sir, it exceeds 150 lakhs in Andhra Pradesh alone, it is exceeding 150 lakhs. So aggregate turnover, obviously it is exceeding 150 lakhs. So what you should do? You cannot offer composition scheme in 23-24 financial year. Everybody, is that clear till now? You cannot take composition scheme benefit in 23-24 financial year, because in 22-23 your aggregate turnover is exceeding the threshold limit of 150 lakhs. But sir, I have a small doubt. If at all here it is not 152 lakhs, imagine if it is 10 lakhs, then if it is 10 lakhs, then sir, if it is 10 lakhs, then aggregate turnover, if you see 58 lakhs, 76 lakhs, 10 lakhs, all put together, it comes around 144 lakhs. In this case, then aggregate turnover is not exceeding 150 lakhs, it is only 144 lakhs. No, if you see from Telangana, aggregate turnover is 144 lakhs. If you see from Karnataka also, or if you see from Andhra, sir, from any part of the country you see, aggregate turnover remains the same. Please understand that. Any part of the country, if you see aggregate turnover remains same. So now which branches are eligible? All the branches are eligible for composition scheme. Every branch, sir, 3 registrations are there. All the 3 registrations can go for composition scheme. Are you able to understand? But even if one branch becomes ineligible here, or let us assume Karnataka branch says, I don't want to go for composition scheme, I will go with normal scheme. What others should do? Other branches also becomes ineligible for composition. Other branches also will become ineligible for composition scheme. So I repeat, if all the branches are eligible for composition scheme, all of them should go for composition scheme, or all of them should go for normal scheme. Some registrations going for normal scheme, some registrations going for composition scheme is not allowed. And if one branch becomes ineligible for composition scheme, then all the branches becomes ineligible for composition scheme. For example, sir, here it is not Andhra. Imagine it is Sikkim. Sir, if it is Sikkim, sir, what is aggregate turnover here? Aggregate turnover is again, it is 144 lakhs. Telangana is eligible for composition scheme, yes. Karnataka is eligible for composition scheme next year, yes. What about Sikkim? Sir, Sikkim's aggregate turnover, if you see 144 lakhs, Sikkim turnover is 10 lakhs. Sikkim side, if you see aggregate turnover, again I should take from pan India basis, so 144 lakhs. But what is the threshold limit in Sikkim? In Sikkim, the threshold limit is 75 lakhs. But here aggregate turnover is 144 lakhs, no? So Sikkim becomes ineligible for composition scheme. So when Sikkim becomes ineligible for composition scheme, sir, even Telangana and Karnataka becomes ineligible for composition scheme. That means if you have one branch in special category state and other branches in non-special category states, then understand, sir, the threshold limit will fall down from 150 lakhs to 75 lakhs. Are you able to understand? The threshold limit will fall down from 150 lakhs to 75 lakhs. So that is what the concept here. So there are the same questions here. So hope it is clear for you. Okay, the concept is clear. Now, my first doubt is, sir, what do you mean by aggregate turnover? Sir, you are saying pan India turnover, all that stuff. But what should I consider for aggregate turnover? Sir, when you are going for aggregate turnover, please understand, aggregate turnover means important definition. This is aggregate turnover. Yeah. So aggregate turnover is a pan India turnover. So you should take these things on pan India basis. Sir, what and all I should take on pan India basis? Of course, sorry, I have written here all India pan basis or pan India basis, whatever it is. Sir, I should take all taxable supplies, I should take all exempt supplies, I should take even exports, I should take interstate supplies, everything. Sir, interstate supplies and supplies between distinct persons also, or whatever is there, you should consider that. Simple, understand, aggregate turnover means all your sales, all your outward supplies. no matter whether it is exempt or no matter whether it is taxable, all that stuff. Please understand. In your profit and loss account, you tell me, if they ask your turnover, what is the turnover you are going to show? You are going to show only taxable turnover. You will show everything, taxable, exempt, non-taxable, everything. So you please make sure all your, I repeat, outward supplies, the logic remains the same. The logic is all your outward supplies will be covered in aggregate turnover, but please don't add GST taxes. GST taxes are nothing but CGST, SGST, UTGST, IGST, and GST compensation cess. These taxes you don't add. Any other tax you add, no problem. Any other tax, happily you add, no problem. But these taxes you don't add. Am I clear? That is what the concept. And sir, all inward supplies covered under RCM also don't add in you. Sir, that is my inward supply, sir. It is covered under RCM or whether it is covered under FCM. Sir, the point is it is my inward supply. I should not add it in my aggregate turnover, sir. No, people will be like, sir, I am paying GST on that. It is my liability. So I will add it to my aggregate turnover. That way you don't do. The logic remains the same. Aggregate turnover, the logic remains the same. So it is outward supply, not inward supply. Even though you are paying tax on the inward supply, it is not your aggregate turnover, it is somebody else aggregate turnover. Just because you are paying the school fees, the kid will not become your child. Okay, so don't take credit of somebody else. So the point is, inward supplies covered under RCM also should not be included in your aggregate turnover. So that is what the point. So we have discussed aggregate turnover definition also. Am I clear with that? One second. So aggregate turnover definition we are clear. So we should add all our outward supplies, but we should not take inward supplies and we should not take GST. I repeat, any other tax you please add it to the aggregate turnover, but don't add GST. That is one thing. So aggregate turnover we have understood. Okay, sir. If you are going for composition scheme, please understand. Sir, based on aggregate turnover, we'll do that. So here one small doubt I have is, or you have set to hide. Please understand, Mr. Vishnu Vardhan is trader of goods. Mr. Vishnu Vardhan is trader of goods. For the financial year 23-24, what I am doing? I am doing turnover in goods and I am claiming this composition scheme benefit for the next year, that is 24-25. 24-25, I want to take composition scheme benefit. So what I am doing, the moment I touched my aggregate turnover, 149,70,000, I stopped business. Let us assume March 27th, I have touched 149,70,000. If I do business for next 4 days, I will cross 150 lakhs. So what I did, I closed the shop and I am relaxing. Eat 5-star, do nothing. March 31st evening 7 o'clock, unfortunately, I am getting a message from a bank. Interest credited to your account 50,000, like that. Sir, interest is nothing but my income. That means I have provided service to the bank, allowing bank to use my money. So for that I got interest 50,000. That is also actually speaking supply of service. Of course, exempt supply, that's a different story. But it is supply of service. Should I add it in my aggregate turnover? No, not required. Always remember, for the purpose of section 10. For the purpose of section 10. For any situation, any calculation, whether it is calculating aggregate turnover, whether it is calculating GST liability under composition scheme, anything, just ignore one fellow. Who is that fellow, ma? Ignore one fellow, that is interest income. Sir, interest or discount earned by way of extending loans or advances or deposits. So whatever the interest or discount income you have earned by extending loans, advances and deposits, please ignore that for any calculation under section 10. For any calculation under section 10, please understand that. Okay, so that way, if you see here, still aggregate turnover remains 149,70,000. I can happily claim composition scheme in the next financial year as per my plan. That is what the concept. So now, as we are discussing this, I just thought of revising one small point which I forgot. That In composition scheme benefit is available in two subsections mainly, subsection 1 and subsection 2a. Subsection 1 is available mainly for whom? Manufacturers, traders and restaurant service providers. So for manufacturers, what is the GST rate? 1% of the turnover. For traders, 1% of the turnover of taxable supplies. And for restaurant service providers, 5% of the turnover. If you have identified properly, here for trader there is one relaxation that, or one luxury that, he is liable to pay GST 1%, not on his full turnover like everybody here, turnover. In this case, this fellow is liable to pay GST only on 1% of the taxable turnover. That means, see for example, sir, Mr. Anirudh is selling musical instruments. I repeat, 10 subsection 1 composition scheme benefit is available for manufacturers, traders and restaurant service providers. And the advantage trader is having, he is liable to pay GST only on taxable turnover, 1%, half percent CGST, half percent SGST. So Anirudh is selling musical instruments, classical as well as Western. Imagine just example, the classical instruments are exempt under GST, Western instruments are taxable. Now, if Anirudh is opting for composition scheme, sir, his sales during that composition scheme, classical instruments which are exempt 40 lakhs turnover, Western instruments which are taxable that are 20 lakh turnover. What is the tax liability under composition scheme he has to pay? Sir, for that we should see whether Anirudh is manufacturer or trader. If he is a manufacturer, he should pay on the whole turnover, that is taxable as well as exempt, 60 lakhs, 1%, half percent CGST, half percent SGST. Suppose if he is trader, he is liable to pay GST only on taxable turnover, that is 20 lakhs. So half percent CGST and half percent SGST. That is what the point. Okay. Till now clear everyone? Fine. Now the next doubt is, sir, I have opted composition scheme. Now I am availing advocate services. Now see for example, Mr. Jolly LLB advocate is providing services to Mr. Leo, a composition dealer, manufacturer of goods. Sir, he is taking legal services from Jolly LLB advocate 10 lakhs and normally GST rate on them is 18%. But this is a reverse charge mechanism. Who is liable to pay GST? Leo is liable to pay GST under RCM. Okay. Whether Leo can argue, I am a composition dealer, I will pay GST on this at composition rate 1%. No, Rai, you cannot do that, because you should pay GST on RCM purchases at normal rates applicable. Composition rates are applicable only on your outward supplies, not on your inward supplies. Please understand, composition scheme rates are available only on your outward supplies, but not on inward supplies. Whether they are covered under FCM or whether they are covered under RCM, you should be paying GST to the government at normal rates, not at composition rates. Composition rates are only for your sales, not for your purchases. Even though the purchase is covered under RCM, you should pay GST at normal rate. You cannot say, sir, I am a composition dealer, sir, I will pay 1%. No, that is not the case. Okay. So this is another aspect. Now coming to the next one. Please. So now the point is, even though you are a manufacturer or trader, please understand who are under composition scheme. See, I am selling laptops. Can I go for composition scheme? Yes, I can go for composition scheme. I am selling furniture. I am selling electrical appliances. Yes, you can go for composition scheme. But the problem is, even though I am dealing with goods, sir, it is quite obvious when I am doing some business, my customers tomorrow, if there is any problem, they will come to me only. They will come to me if there is any problem in the goods. So obviously, I should provide them some services. But you say under section 10 subsection 1, if you want composition scheme, you should not provide any services other than restaurant services. So they are giving a relaxation to us. I repeat, even though you are under composition scheme under section 10 subsection 1, there was one beautiful MCQ asked in September 2024 exam. Those who are writing that attempt, the MCQ, I don't know whether they have identified that or not. So the point is, we have a discussion in our YouTube channel also regarding the September 2024 MCQ questions. So nice MCQs, actually, I loved them. So solving it. So you also please refer when you have time. Coming to the point, sir, normally if you are providing goods, still incidentally you should provide some small services also. That means you are in composition scheme. Can you provide services? The law has understood, the lawmakers have understood, yes, this fellow should be permitted to provide some services also. So they are giving us permission to provide some small amount of services, marginal supply of services. We call it as marginal supply of services. That means how much, sir? Na? In current financial year, if you are under composition scheme, whatever the turnover you made in the last financial year in that particular state, for every state this option is available for you. 10% of the turnover in the state in the preceding financial year, or 5 lakhs, whichever is higher, that much amount worth the services current financial year you can provide under composition scheme. Now that means, see, for example, in this case we have seen, no, in this example if you see, here you remember, here if you remember, in this case, sir, Telangana 58 lakhs, Andhra Pradesh 10 lakhs, Karnataka 76 lakhs. In this case, the aggregate turnover is 144 lakhs. They are eligible for composition scheme. And 23-24, they are opting for composition scheme. Then what they can do? They can provide marginal supply of services. Yes or no? They can provide marginal supply of services. How much? Sir, in Telangana, 10% of the turnover in the preceding financial year. What is the turnover in the preceding financial year? 58 lakhs. 5 lakh 80,000 or 5 lakhs, whichever is higher. 5 lakh 80,000 worth of services they can provide. In 23-24, when they are in composition scheme also, they can provide 5 lakh 80,000 worth services in Telangana. 58 lakhs into 58 lakh into 10%, 5 lakh 80,000 or 5 lakhs, whichever is higher. So 5 lakh worth of services, 5 lakh 80,000 worth of services they can provide in the current financial year when they are opting composition scheme. Same way here in Karnataka, 7 lakh 60,000 worth services, or 5 lakhs, whichever is higher. 7 lakh 60,000 is higher, so 7 lakh 60,000 worth services they can provide in Karnataka in the current financial year, even though they are under composition scheme. In Andhra Pradesh, 10 lakhs into 10% of 1 lakh, 1 lakh or 5 lakh, whichever is higher, 5 lakhs. That means every state minimum you can provide 5 lakh worth of services. That is not sufficient for you? Of course, sir, it is very much sufficient. Thank you, sir. Okay, so that is how we can do it. Am I clear? Everybody respond, online students. Till now comfortable, ra? Till now comfortable. So that is what marginal supply of services. Marginal supply of services. You can provide 10%, at least 10% of the turnover in the last year preceding financially in that state, or 5 lakhs, whichever is higher. So we have given example also here. So you can just go through that. And I repeat, sir, you can always ignore this fellow. The interest income by way of extending loans, advances or deposits, that fellow you can always ignore. Okay, so please be careful with that. Okay, I told you, for any calculation, marginal supply of services, aggregate turnover, composition, tax liability, everything you have to ignore him. You can ignore him. Okay, now sir, if you see who are not eligible for composition scheme, see, first of all, one more small point, that the disadvantage in composition scheme is you cannot collect tax from the customer and you cannot avail ITC on your purchases. Whatever you are paying taxes, that should be paid from your pocket only. Whatever the taxes you are paying, that should be paid from your pocket itself. Okay, so that is what the point. Now the important thing is who are not eligible for composition scheme. Very, very important, sir. Who are not eligible for composition scheme? Sir, whoever is providing services other than restaurant services and that marginal services, right? Except restaurant services and one second, no? Mm-hmm. Mm. So now services other than restaurant services, or you can also provide this marginal services allowed, correct? Ara? Marginal supply allowed, marginal supply allowed, marginal supply of services allowed. Okay. So if you are doing any other services, that means, see, sir, I am selling laptops also and I am repairing laptops also, sir. Both are an equal amount. I am not able to fit in the 10%, sir. Then what should I do? For you, 10 subsection 1 is not available. Go to 10 subsection 2A. That will help you. But what is the disadvantage in 10 subsection 2A? See, now as the situation came, I repeat, if you are not eligible for 10 subsection 1, happily go to 10 subsection 2A. It will help you to go for composition scheme. So the disadvantage there is your threshold limit is just 50 lakhs. Not 150 lakhs, not 150 lakhs or 75 lakhs. Your threshold limit is just 50 lakhs. And one more disadvantage is the composition rate is not 1%, 1%, 5%. It is 6% of your turnover. 3% CGST, 3% SGST. Guys, understand that taxable turnover relaxation is only for trader of goods, not for anybody else. Okay. So remaining everybody should pay on their total turnover. Manufacturer 1% of turnover, trader 1% of the taxable turnover, restaurant service provider 5% of the turnover. Who are going for subsection 2A? 6% of the turnover. That means 3% CGST, 3% SGST. So I repeat, if you cannot go for subsection 1, go to subsection 2A. Okay, fine. Now coming to the point, sir, these now upcoming conditions all are common for subsection 2A also. You should not be dealing with goods or services which are not liable to GST. So best example, what is the best example we can write here? Our favorite bar and restaurant. So if you are selling liquor, it is non-taxable. You cannot opt for composition scheme for your restaurant. Am I clear? If you are selling liquor, you are providing non-taxable supplies, so you cannot provide. You cannot offer composition scheme for your restaurant. Clear? So that is one thing. Next one, sir, you are making interstate outward supply of goods or services. If you are having customers outside the state, that means you are like doing business in a very good scale. I will not give you composition scheme. Get lost. But sir, can I purchase from outside the state, sir, at least? Yes, sir, that is allowed. Interstate inward supplies are permissible. But interstate outward supplies are not allowed. Inward supplies are allowed. After going through these points, you should not make non-taxable supplies. You should not make interstate supplies. You should get a doubt. Just now you taught, no sir, in aggregate turnover, meaning take all the outward supplies, interstate outward supplies, non-taxable, everything you just add. Now you are saying you should not provide all these things. Guys, understand, in the preceding financial year, whatever you want to do, you would have done that. You might have made interstate outward supplies, you might have made non-taxable, etc., everything. But current financial year, if you go to composition scheme, follow all these conditions. Last year I was selling liquor, I was having liquor license, so I was running a bar and restaurant. I sold a liquor for 120 lakhs, restaurant services for 20 lakhs. What is the aggregate turnover? 140 lakhs. But my liquor license got cancelled last year itself, over expired. What is my aggregate turnover? 140 lakhs. Current financial year, am I eligible for composition scheme? Yes. Can I opt for composition scheme? Yes. Will I make any non-taxable supplies? No, because my liquor license is no more. So I can go for composition scheme. Am I clear? Once you are in composition scheme, you should follow all these things. Now one more small point. What if my friends on my birthday, they are giving me a gift? The gift itself is liquor license one more time. Go and sell liquor so you can run a bar and restaurant. Because if I am having license, those stupid fellows only will come and enjoy now. So they are getting a liquor license to me. Now what should I do? I am already in composition scheme. You tell me, if I am under composition scheme, if I get liquor license, I will say no, I will not do it. Or if I am under composition scheme, I get a customer outside the state, I will say no, I will not sell the goods to you. I am under composition scheme. Now you do that liquor business, or you make outward supplies, interstate outward supplies, and you come out of composition. That is the reason why I told you composition scheme validity is maximum 1 year, not 1 year. So you come out of composition scheme when you violate these conditions under composition scheme, or when your aggregate turnover in the current financial year crosses the threshold limits. That means your threshold limit is 150 lakhs. Current financial year, your aggregate turnover is crossing. Current financial year, your aggregate turnover is crossing 150 lakhs. The moment it crosses 150 lakhs, you come out of composition scheme. Start making supplies under normal scheme, collect tax, avail ITC, pay GST to the government at normal rates. So please understand one small point here for our discussion is, sir, anybody who has opted composition scheme, whether under subsection 1 or subsection 2A, maybe threshold limit 150 lakhs, 75 lakhs or 50 lakhs. Current financial year when they are going for composition scheme, in current financial year, if their aggregate turnover crosses these threshold limits, they will come out of composition scheme. They will start collecting tax at normal rates and start paying tax at normal rates, and they can avail ITC on their purchases also. Am I clear? That is what the concept. So as we were going through the discussion of conditions, who cannot opt for composition scheme? Sir, I repeat, if you are making non-taxable supplies or interstate outward supplies, you cannot go for composition scheme. But you could have done all those things, all that nonsense in the preceding financial year. Current financial year, if you are eligible for composition scheme and if you want to go for composition scheme, don't do all those things. Am I clear? Now, next one. Sir, supply of services through e-commerce operator attracting TCS under section 52. Actually, there is an amendment here, so I just forgot to update this point. So you can make supplies through e-commerce operator. There is no restriction here. The only thing is you have to follow the procedure. So I repeat, you can supply through e-commerce operator, but only condition is e-commerce operator should make sure no interstate outward supplies are made. So now if I am under composition scheme, earlier I cannot sell the goods through Amazon, but now I can sell through Amazon because sir, my only agenda is what I am not allowing you to sell through Amazon, because somebody from outside the state will come and buy with you. Now what the law says, the law is giving responsibility, fixing responsibility on the e-commerce operator. The e-commerce operator, make sure this fellow is not making interstate outward supplies. Okay, sir. So I will sell through Amazon also, even if I am under composition. Clear? So that is what the concept. Next, sir, if you are a manufacturer, only manufacturer, but if you are a trader can take, trader is eligible only if you are a manufacturer of ice cream, pan masala, tobacco, manufacturing any tobacco substitutes or aerated waters, fly ash bricks or fly ash aggregates, fly ash blocks, bricks of fossil meals or similar, siliceous earths or building bricks or earthening or roofing tiles, bricks, that's all. So if you are manufacturing all these things, so understand, we are not targeting ice cream in the sense, we are not targeting this Arun ice creams or quality walls, all that stuff. We are targeting our local ice creams that during summer all these people will be bringing that small cart and selling the ice creams, the local manufacturing ice creams. We are targeting them. We are not targeting aerated waters, means this Coca-Cola, Pepsi, all that. We are not targeting those manufacturers. Of course, they are not eligible for this composition scheme because of their turnover. We are targeting the local goli soda, all these people, and this tobacco substitutes, pan masala, all this. We are not targeting Vimal, Bolo, Juba, Kesari, all these people. We are not targeting ITC, all that companies. We are targeting the local gutka, pan masala manufacturers, all that stuff. No, so that local tobacco manufacturers, all these people we are targeting, because already they are like evading taxes so much, and we don't want to give any other luxury for them of composition scheme. So that is what the composition scheme all about. And here, as I told you, if one person also becomes, and one more thing, small point, casual taxable persons, non-resident taxable persons are ineligible for composition scheme. And as I told you already, if one person doesn't want to go for composition scheme, all other fellows will not go for composition scheme. Everybody go for normal scheme, or everybody go for composition scheme. Abu Ajmal, no. Hope it is clear, huh? So that is what all about composition scheme. There are some small points which you can just go through this material. So rule 5, all that intimation procedural things, you can just manage them. Same conditions, everything applicable for section 10 subsection 2a also. So for you, the next duty is take the screenshot and try these questions. 1 second, I'll just solve them. Wait, I'll just finish it off. So now listen, I'll just solve this. See, now look at this example. Mr. Suresh Raina started business on auspicious day 2nd June 2023 in Uttar Pradesh, restaurant business. Now what has happened now? One fine day, another auspicious day, 2nd September, he has exceeded his aggregate turnover 20 lakhs. For the entire financial year till 31st March, if you see, so he 2nd September, he became liable for registration and he registered. So till 31st March, he made a turnover of 153 lakhs. Now the doubt is next financial year whether he is eligible for composition scheme. Why I got this doubt? Now my only doubt is his aggregate turnover 153 lakhs. This includes 20 lakhs during when he was not registered. 133 lakhs when he is registered. Okay. So now my doubt is should I consider this 20 lakhs also in my aggregate turnover? The answer is yes. Sir, aggregate turnover means from 1st April to 31st March, whatever you do, that is your aggregate turnover. During that period, whether you are registered or not, whether you are a taxable person or not, it doesn't matter. Aggregate turnover means the entire turnover what you have done from 1st April to 31st March. 1st April to 31st March. That entire turnover will be added. So here what is the turnover, aggregate turnover now? Yes, 153 lakhs. So obviously it has exceeded threshold limit. So he is not eligible for composition scheme. He is not eligible for composition scheme. Am I clear? Everybody respond. Am I clear? Okay. So same next, if you see next example 38. Sir, Vishnu Vardhan is registered under GST. He is a trader of goods in Tamil Nadu. Financial year 22-23, he has made an aggregate turnover of 143 lakhs. 23-24, he has opted for composition scheme. 23-24, his aggregate turnover is 183 lakhs. What is his GST liability for 23-24, in which he has opted for composition scheme? Normal GST rate of the goods is 12%. Sir, his aggregate turnover in that year is 183 lakhs. He is opting for composition scheme. He went for composition scheme and opted and did the turnover 183 lakhs. And you understand, aggregate turnover till it touches the threshold limit, that is 150 lakhs, only he can enjoy composition scheme benefit. After crossing 150 lakhs, so till 150 lakhs, he can pay GST at composition rate 1%. But after crossing 150 lakhs, balance 33 lakhs, he will pay GST at normal rate 12%. So his total GST liability in that financial year 23-24 is 5,46,000. Okay. This is the answer. Now, one last question for the discussion. So that is my suggestion is those who are watching the lecture in YouTube, pause the video and try the answer for this, then continue and check the answer. Pause the video and check try this and then check the answer. You online students, tell me the one. Yes, Suga, correct. So in the previous one, this 150 lakhs I will pay from my pocket. This 3,96,000 I will collect from customer and pay to the government, correct? And during payment of this 3,96,000 I can also use ITC if at all, if any I am having. Clear? Okay, what is the answer for this? Sir, here please understand, this financial year only I have started business. This financial year only I became liable for registration, and I have opted for registration, and I have opted composition scheme also, and I have made 183 lakhs turnover. So understand, aggregate turnover till it touches 150 lakhs only I can enjoy composition scheme benefit, correct? I have made 183 lakhs turnover, correct? I have started from 0 and went up to 183 lakhs, but I can enjoy composition scheme benefit till 150 lakhs. But in this 150 lakhs also, up to 20 lakhs I am an unregistered person. Up to 20 lakhs I am an unregistered person. I repeat, from 0 to 183 lakhs I have made the turnover. I can enjoy composition scheme benefit until my aggregate turnover touches 150 lakhs. But sir, during this period I was unregistered up to 20 lakhs. That means this period, even though you add this 20 lakhs, I repeat, even though you add this 20 lakhs for aggregate turnover, you will not compute any tax there, and tax liability is 0. But while calculating the composition scheme benefit availability, the aggregate turnover includes the 20 lakhs. But the 20 lakhs, you would have not paid any GST because you are not a taxable person. Not a taxable person. This 130 lakhs, this 130, you can happily enjoy composition scheme benefit. So on this you will pay 1%, and balance 33 lakhs you will pay 12%. So the previous question and this are not same. In the previous question you are already registered in the last year, you have been like doing some turnover. This year you are taking composition scheme benefit and doing. In this question the difference is, this year only you started business, this year only you became liable for registration, this year only you took registration and opted for composition scheme also, and what is the tax liability in that particular year itself we are calculating. So it is different. So you have one past exam question also, or RTP question I guess, but it is based on section 10 subsection 2a. So the threshold limit will be 50 lakhs. Here 150 lakhs you are seeing threshold limit and doing the problem, but that problem will be with the threshold limit of 50 lakhs, right? So that is what all about composition scheme, my dear friends. Is that clear, online students, everybody? So with this we are done with composition scheme. So we'll end this. So okay guys, next after the break we'll go with place of supply provisions. So finish your dinner and let us meet after the break. So yes guys, let us move on to the next chapter, that is place of supply. So place of supply we are going to discuss in this video. So quickly we can revise place of supply because easy chapter. So first of all, here in this chapter we are going to deal purely with the sections of IGST Act. And IGST Act sections, if you see, section 7, section 8, section 9, section 10 and 12 is what we are going to cover in this syllabus. So section 7 and 8 are all about interstate supply and intrastate supply. So what is interstate supply? Intrastate supply, you already have an idea, that deeply not relevant for your inter level also. We'll just quickly go with that. And section 9, simple one. Section 10 and 12. Section 10 and 12 actually talks about place of supply. So section 10 talks about place of supply of goods, 12 place of supply for services, right? So there are 11 and 13 also other provisions of place of supply, but they are dealt in CA final level, as I already told you in the class. Section 11 and section 13 are dealt in CA final, right? So that is what the point. Now coming to the concept. So what is interstate supply? You know, interstate supply is nothing but location of the supplier and place of supply are falling in two different states or two different union territories, or one state and one union territory. Suppose Tamil Nadu, location of supplier, place of supply is in Karnataka, or Lakshadweep, location of supplier, and Tamil Nadu is the place of supply. Same way, like two different states, two different union territories, one state and one union territory, whatever the combination, then that is called interstate supply. Okay, so this is not relevant for your CA Inter. I just kept it copied from CA final book and just kept it here. So leave it, ignore it. And others, see here for you the important point is this point number 2: supplies to or by a unit in SCZ or developer in SCZ. Whenever you see about SCZ, please understand SCZ there are two things. One is developer of SCZ, the other is unit in SCZ. Developer or unit in SCZ, if they make supply made by them or supply made to them, both are what? Both are interstate supplies only. That means if you make a supply, if you are a special economic zone unit or developer, you make a supply, it is interstate supply. Sir, I am making supply to my SCZ unit, another SCZ unit next to my building only, sir, next to my office only. We both are located in same SCZ, but still we call it as interstate supply. Clear? That is important for you. Please remember it. So that is what the point. So any supplies made by special economic zone unit or developer or to a special economic zone unit or developer, it is to be read as interstate supply. Okay, simple. Now coming to intrastate supplies are obviously simple ones, sir. Intrastate supply, location of supplier, place of supply, both are falling within the same state or same union territory. Okay, so that is what the point. So suppose if location of the supplier or place of supply, any of these things are falling in the territorial waters, what should we do, sir? Then that location of supplier or place of supply shall be deemed to be the coastal state or union territory which is located to the nearest point of appropriate baseline. But suppose if the location of supplier is suppose in Bay of Bengal, from Bay of Bengal is providing the services. So our place of supply is falling in Bay of Bengal. Sir, what is the state I should take? Whatever is the nearest thing there, sir, the nearest point of the most appropriate baseline, which state is located or union territory is located, that will be taken as place of supply, or that location of supplier, that state will be considered, right? So all these things keep aside. Now coming to the point, sir, place of supply, the main discussion is section 10 and 12. See, for determining whether the transaction is intrastate supply or interstate supply, two things are very, very important. One is location of supplier, the other is place of supply. Location of supplier you can understand, there is no big deal. What is place of supply? The place of supply, already department has understood various scenarios. In this scenario, this is the perfect thing to take as place of supply. Like that, they have decided already and they have framed the rules. Here, this chapter is just like your mathematics formulas. You know the situation, you know the provision. That's all. There is no concept, nothing involved here. It is purely in which circumstances, what is the place of supply. Okay. So section 10, 11, 12, 13. These four sections are dealing about place of supply. 10, 11, 12 and 13. But 11 and 13 we'll see in CA final. So this also we'll see in CA final. So we'll be discussing section 10 and 12. 10 is with respect to goods other than exports and imports. 12 is with respect to services where both supplier and recipient are in India. So please understand 10 and 12. Coming to 10. Sir, I am supplying goods, sir, not exports, not imports. Place of supply is purely based on section 10. And if you see section 10, sir, in section 10, there are 6 scenarios, including the latest amended one, clause CA. Okay. So now, sir, what we have to do to determine place of supply for goods is, you see whether movement of goods is there or not. If movement of goods is there, for example, I am sending goods from one location to another location, the movement is there. In this place of supply, first thing you should be very careful is, we have given so many examples in this. First, after you see this video, go through complete all the examples. I will try to reduce the discussion of examples here so that you invest your time and read them and you go through the examples so that you will develop a better understanding over that. So our time of discussion also will be reduced here. So section 10 subsection 1 clause A says, sir, first of all, supply of goods, movement is involved or not. First case, movement is involved, sir. Let us assume I am sending the goods from Chennai to my factory go down to Mumbai, your factory go down. Movement is involved. What is the place of supply? Where is the destination of the goods? That is place of supply. Suppose movement is not involved. You are going to a mobile shop and buying a mobile. There is no movement of mobile from one place to another place. In such case, In such case, there is no movement of goods. In such case, what is the place of supply? The place of supply is where the goods are located at the time of delivery. Where the goods are located at the time of delivery. Am I clear? Where the goods are located at the time of delivery. So that one second now. So movement is involved now. Where the goods are delivered, like the destination. Movement is not involved now. Where the goods are located at the time of supply. Sir, imagine I am buying goods from you and I want you to deliver it at a particular location, not to me but to a different person. So you are delivering the goods. From you, the goods are going to a different person. Based on what? The movement is involved, but movement is from you to another person based on directions of the third person. That means me. From one person to another person, the goods are being moved on the directions given by third person. Third person in the sense here, the buyer, actual buyer. Actually, they are talking about third person from the delivery point of view. From one person to another person, the goods are being moved. In such case, based on the directions given by third person, what is the place of supply? The place of business of the person who is giving the directions. For example, I am in Chennai, you are in Mumbai. I am buying a goods from you in Mumbai and I got a customer in Pune. I am asking you to deliver the goods to Pune. You are delivering the goods to Pune, but place of supply is Chennai, because goods are being moved from Mumbai to Pune based upon the directions given by the person in Chennai. So place of supply is Chennai, the place of business of the person who has given the directions. Am I clear? This we call as build to ship to model. Build to Vishnu, who is located in Chennai. Ship to Vamsi, who is located in Pune. So this we call as build to ship to model. Am I clear? So in that case, the place of supply is place of business of the person who is giving the directions. Yes, Raviplor, thank you. So that is what the point. Shall I continue? Next, sir, we have seen movement involved, not involved, movement involved on the directions given by the third person. Now, sir, what if an unregistered person is going to any place and buying certain things? The place of supply. Unregistered person traveling to various places, buying various things, and he is giving his address there. Then the address is recorded in the invoice. That will be the place of supply. If address is not given by the unregistered person, then the location of the supplier. So here please understand, 10 subsection 1a says, sir, when a supply of goods is made to an unregistered person, place of supply shall be address of the unregistered person recorded in the invoice. And if it is not recorded in the invoice, obviously what is the place of supply? The place of supply is location of the supplier. Here, when we say address of the unregistered person, we are talking about just name of the state. That is sufficient. He need not give his door number, street name, landmark, all that stuff. If he has given just the name of the state also, that is more than sufficient. If it is given, then that particular place will be the place of supply. If it is not given, obviously location of the supplier itself will be the place of supply. This is new one. This is an amendment for May 24 exams also. So yes, latest provision, but not that very latest for your Jan exams. Okay. This is May 24 amendment. May 24 amendment. Am I clear? So 10.1 CA says, sir, place of supply is location which is the address recorded in the invoice. If it is not recorded in the invoice, location of the supplier only. Here address implies just the name of the state is sufficient. Just the name of the state is sufficient. That is next situation. Sir, okay sir, what if I am buying goods where the goods need some installation or assembly? In such cases, what is the place of supply? In such cases, the place of supply is, understand, where the goods are actually assembled or installed. That will be the place of supply. For example, I am buying AC. Sir, I am placing an order of AC in Chennai. to my house located in Tirupati, Andhra Pradesh. Okay, so I am placing an order and the AC has been delivered by a person from Gujarat. Location of supplier is Gujarat. Place of supply is not where Vishnu is located. Where Vishnu is situated. Vishnu is situated in Chennai. Placing order from Chennai. Billing is done from Chennai. Payment is done from Chennai. But where it is installed in Tirupati, Andhra Pradesh. That will be the place of supply. Are you understanding the point? So, if the goods involves any assembly or installation, where it is installed or assembled, that will be taken as place of supply, not anything else. Right? Sir, what about I am traveling in train or I am traveling in an aircraft, and there in the aircraft during the journey I am purchasing some snacks or any packed drinks or packed food items, all that. Then what is the place of supply for that? There you cannot ask the pilot, Bhaiya, flight ruko, so stop the flight. Let us wait for 5 seconds and check the location. All these things you cannot do. So, sir, here the place of supply is where the goods are taken on board the conveyance. That means this goods, whatever you are supplying in the train or aircraft or vessel or whatever it is, sir, these goods in which place they have taken on board? They have been taken on board in Bengaluru, sir. Bengaluru will be the place of supply. Sir, they have been taken on board in Delhi, sir. Delhi will be the place of supply. Clear? So that is what the concept. That is what section 10. Section 10 simple. Movement involved in destination. Movement not involved in location of the goods at the time of supply. Next, movement is involved on the directions given by the third person. Location of the place of business of the third person. Next, goods involves installation and assembly, na? Then location where they are assembled or installed. Next, if it is goods supplied on board or conveyance, na? Then where the goods are taken onto the board, that will be the place of supply. And finally, clause CA, the latest one. If any goods are supplied to an unregistered person, the address recorded in the invoice itself will be treated as the place of supply. Address in the sense here, state name is also sufficient. But if the address is not available, then location of the supplier itself will be the place of supply. With this, we are done with section 10. So we are just left out with now section 12. So now moving on to section 12. Guys, I repeat, section 10 is applicable only for supply of goods other than exports and imports. So where the goods are sent outside India or where the goods are coming from outside India, section 10 is not applicable. Section 11 is applicable. That will be there in your CA final, right? So I'll be waiting to teach section 11 also to you people. Next, place of supply for services, where location of the supplier and location of recipient both are in India. Both are in India. If any one fellow is outside India, then obviously section 13 will come into picture. That is also there in CA final, right? Now, section 12, if you see, section 12 is having 14 subsections. Subsection 1 will say place of supply shall be determined as per the following subsections. Subsection 2 says, if you cannot find out place of supply from subsection 3 to subsection 14, then you come to me. So section 12 subsection 2 says, come to me only when subsection 3 to 14 are not applicable to you. So I can say that section 12 subsection 2 is general rule. Okay, so this says, sir, any services for which subsection 3 to 14 place of supply is not applicable, for that place of supply will be, if it is a B2B supply, that means the recipient is registered. Recipient is registered, na location of such registered person. No, sir, recipient is not registered. Recipient is not registered. Then, if you have his address, then that will be the place of supply. No, sir, I don't have his address. Then your address only will be place of supply. I repeat, general rule 12 subsection 2 says, if you are supplying services to any registered person, then such registered persons, that is the recipient's address itself, is the place of supply. If he is unregistered fellow, if it is a B2C transaction, then if you have his address will be the place of supply. If you don't have his address, then your address itself will be read as place of supply. Clear? You have the examples, you can go through that. Next, 12 subsection 3. 12 subsection 3 purely is talking about immobile property. Any service which is directly connected to immobile property, architect, interior decorators, real estate agents, real estate brokers, whatever you call. I have given here, see, architects, interior decorators, surveyors, engineers, and other related experts, estate agents, grant of rights to use of immobile property, everything related to immobile property. Okay, so services directly related to immobile property or accommodation in the hotel, including boat or vessel. Boat or vessel, yes, they are movable only, but still we are covering them here. So including boat or vessel, that is important here. So any service directly related to immovable property, lodging or accommodations in hotels also, in boat and vessels also. Okay, that is also covered here. And accommodation for any events. I mean, you are taking a hotel hall on rent for some business meet or for any cultural event or program. So for that we are taking that on rent. So first of all, anything related to immovable property. Second one, accommodation in the immovable property. So you stay there. Number three, sir, you take the immovable property on rent for conducting any events, maybe marriage halls or any other business exhibition halls, etc. All that. So these things. For all these things, what is the place of supply? Place of supply is nothing but the location of such immovable property, sir, or location of the boat or vessel, sir, if they are located in India. But sir, if it is located outside India, if it is located outside India, the place of supply is what? Place of supply is location of the recipient, not outside India, because we don't want, when both supplier and recipient are in India, we don't want place of supply falling outside India. Okay, so the point is, sir, related to immovable property, listen carefully, listen carefully. You go through the examples, please. First, listen carefully. Immovable property, anything which is directly related to immovable property. Hotel, lodging, accommodation. Next, taking this premises on rent for conducting any events, all that. For all these things, you are dealing with immovable property. For all these things, place of supply is location of immovable property or location of that boat or vessel. But if that immovable property, boat or vessel, they are located outside India, then place of supply is location of recipient. Location of recipient. And you understand here, supplier and recipient both are in India only. So if the immovable property is falling somewhere outside India, don't take it as place of supply. Take recipient's location as place of supply. Simple. Enjoy. Okay. So that is what the concept. Now here the problem is, sir, what if the immovable property is located in more than one state? You are like, sir, how immovable property will be located in more than one state? They understand, you got a contract to construct a road, highway, going through, let us assume, Karnataka and Telangana, or Karnataka and Maharashtra. Road is an immovable property, going to be located in two different states. So such type of things, and there are some other examples also here which you can go through, no problem. So if immovable property is located in more than one state, every state is a place of supply. Every state is a place of supply. So if the immovable property is located, or boat or vessel, suppose you are staying in a boat is traveling through backwaters, Karnataka backwaters and Kerala backwaters, it is crossing, then it is staying in more than one state, correct? So in more than one state, then what happens is, sir, it is deemed that the supply is made in each such respective states. That means each state is a place of supply. Each state is a place of supply. Each state is a place of supply. Am I clear? Each state is a place of supply. Okay. But sir, for how much value I should take Karnataka as place of supply, and for how much value I should take Maharashtra as place of supply or Kerala as place of supply? Each state is a place of supply, but for what values I should apply? Place of supply as Maharashtra, place of supply as Karnataka, place of supply as Kerala, place of supply as Tamil Nadu. What should I do? I should apportion that value. No, on what basis I should apportion? If they told you, for the road to be constructed in Karnataka, this much consideration will give you, and for the road to be constructed in Maharashtra, this much consideration will give you, and the road to be constructed in Tamil Nadu, this much consideration will give to you, like that it is already mentioned in the agreement, then go as per the agreement. Go as per the agreement. So the proportion amount of the value shall be as per the terms of the contract. Sir, but we are unprofessional fellows, sir, we never entered into such contract. Then don't worry, for unprofessional people like you only, we have rule 4. Rule 4 says, I repeat, if something is mentioned in the contract, go as per the contract, how to proportionately take the values, and for how much value, which state to be taken as place of supply. But if agreement is not there, then what you should do? If agreement is not there, sir, if it is accommodation in hotels or guest house, all that, based on number of nights stayed, sir, you apportion that. Sir, any other service, based on area of the immovable property. Okay. Hmm. Sir, if it is related to accommodation in a houseboat or a vessel, how much time you have spent in each state, how much time the boat was there in the Kerala, and how much time the boat was there in Karnataka, all that. So that way, clear. So for everything examples are given, please go through that. I repeat, if immovable property is located in more than one state, each state is a place of supply. How do you proportionately divide that value? Sir, we will divide that in the proportion of the agreed amounts in contract. But if nothing is mentioned in the contract, if it is for hotel accommodation, based on number of nights stayed. If it is boat or vessel, based upon the amount of time spent in each state. And if it is in any other case, based upon the area. Okay, that is what the category based on which you proportionally divide the value. 12 subsection 4. So 12 subsection 4, restaurant or catering services, personal grooming services, fitness services, beauty treatment, healthcare services, for all these things, including cosmetic and plastic surgery services. For all these things, the place of supply is, sir, where these services are actually performed, sir. That will be the place of supply. I repeat, place of supply, no concepts, nothing involved, just what is the situation, what is the place of supply. So subsection 4, these are the services. Place of supply is where actually the services are performed. And if it is training or performance appraisal services, if it is training or performance appraisal services, if it is training or performance appraisal services, sir, if it is a B2B supply, what I should do? Sir, location of the registered person. If it is a B2C supply, where the services are actually performed. For example, like an audit firm is asking me, Vishnu sir, you come and give GST training to our article students who are going for an audit of a company. I am in Chennai, Tamil Nadu, and the audit firm is in Delhi. So they are registered. Now, whether I give them training in Delhi or Chennai or whether in Mumbai, for me, place of supply will be Delhi. But if it is a B2C supply, but if it is a B2C supply, that means if they are unregistered, if I am providing training in Mumbai, Mumbai will be the place of supply. If I am providing training to the staff in Chennai, Chennai will be the place of supply. That way we have to consider. Okay. So examples are properly given. Okay. So examples also given here for that. So examples and flowcharts given for everything. Ma. So 12 subsection 3, 12 subsection 5, for all that stuff. You just go through that. Next, 12 subsection 6. 12 subsection 6 is what? Admission to an event. Guys, understand 12 subsection 6 and 12 subsection 7. What is the difference? Na? Here we are talking about admission to an event. That means we are talking about in 12 subsection 6 entry ticket. Okay. Here in 12 subsection 7 we are talking about consideration for organizing the event. Consideration for organizing the event. Okay, both are different. So for example, there is a music function or award function happening. We got a contract to conduct that event. For that we are getting consideration. Let us assume 10 crores. What is place of supply for that? That is subsection 7. For that award function, they have given an entry ticket 1000 rupees. What is the place of supply for that? That is subsection. Am I clear? Subsection 6 is admission to an event. Place of supply is where that event is actually held. So now Navaratri is going on. You are purchasing this Navaratri event ticket somewhere here and there. All there, like all the dance events, etc., are happening. For that, you are purchasing the ticket. What is the place of supply? Where the event is actually held. But sir, for conducting the event, I got a contract. Who is asking me to conduct that event? Let us assume a person registered under GST. So let us assume JK Shah class has their 40-year celebrations. So JK sir is asking me to conduct an event in Mumbai. JK Shah classes is registered under GST. So place of supply for me will be location of the registered person. But sir, whether the event is held inside India or outside India, that will be a provision. But if at all any person unregistered is asking me to conduct an event, then what is the place of supply? Place of supply will be where the event is actually held. But if the event is to be held outside India, if the event is to be held outside India, then place of supply will be location of the recipient. Okay, just like the 12 subsection 3 movable property case where we have seen. Okay, so if at all location of immovable property is outside India, place of supply will be the location of recipient. Same here also, if the event is to be held outside India, place of supply will be location of recipient only. Hope I'm clear with that. So I given a flow chart also here for that. Now the point is, sir, now the point is, if this event is organized only in one state, no problem. So the provisions what we have discussed will hold good. But the problem is, if the event is held in more than one state, if the event is held in more than one state, in such cases, sir, every state will be taken as place of supply. Every state will be taken as place of supply. And how do you apportion the value, sir? For example, JK sir is asking me to conduct 40-year celebration event in 10 states, where and all we are having the branches of JK Shah classes. Then, sir, each state will be place of supply. How do you apportion the value? It is already agreed in the agreement, we know that. So based on that, we are proportionately dividing the value. So nothing is mentioned in the agreement. Then what should we do? Follow gap. That is generally accepted accounting principles. How much you are spending in each state, based on that some reasonable basis, you please make sure you are proportionately distributing the value and charging place of supply each state for that respective value, right? So that is 12 subsection 7. 12 subsection 8. 12 subsection 8 is transportation of goods, including mail and courier, all that stuff. The transportation of goods by mail and courier, when you are doing, please understand what is the place of supply. Place of supply is, place of supply will be, tonight only run Nikhil Karthik, don't worry. Place of supply is that if the recipient is registered fellow, the recipient is registered fellow, place of supply will be the location of recipient registered. If it is unregistered, I repeat, transportation of goods, for transporting the goods, you are sending the goods through courier. So when you are sending the goods through courier, sir, the transportation charges you will pay, no? Sir, what is the place of supply for that? Recipient is registered na, location of the recipient. Unregistered na, where the goods are handed over, where the goods are handed over to the courier agency or the transport company. Okay, so earlier there was a point, if the goods are destined to outside India, then the destination will be the place of supply, all that. Now there is no such provision. Listen carefully. If the supplier is supplying to a recipient who is registered, B2B case, recipient address will be the place of supply. If it is unregistered person, then location of the goods when they are handed over to the transportation, for the transportation, so that will be the place of supply. Am I clear? Shall we continue? Now, now 12 subsection 8, when you are spoken about transportation of goods, you should also speak about transportation of passengers, correct? So coming to transportation of passengers, the transportation of passengers, if you see here, in transportation of passengers there are two things. One is transporting the passengers, selling the ticket and getting the consideration. The other is issuing the right to passage. That means the pass, whatever it is, you can use it. It is not a ticket and you can use it for a particular duration of time, all that stuff. Now, sir, if it is for transportation of passengers, I am traveling in Vande Bharat train, or I am traveling from Chennai to Mumbai in flight. Sorry. I am traveling from Chennai to Mumbai in flight. So I am a registered person. So I am registered in Andhra Pradesh. Now, what is the place of supply? Place of supply is Andhra Pradesh. Even though I am traveling from Tamil Nadu to Maharashtra, Place of supply is Andhra Pradesh. Okay. So even though I'm traveling from Tamil Nadu to Maharashtra, the place of supply is Andhra Pradesh because I'm registered there. Next, sir, what if it is a B2C supply? Suppose you are traveling from Chennai to Mumbai. Sir, you are unregistered person. Sir, what is the place of supply? The place of supply is the embarking point of that journey. That means the starting point of that journey. The starting point of journey is Chennai, so place of supply will be Chennai. So, transportation of passengers, recipient is registered na, location of such registered person. Unregistered na, wherever the journey starting point is there, that shall be the place of supply. Hope it is clear for you. Shall I continue? Oh, sorry. Right. Suppose coming to the issue of right to passage, that is the passes, all that stuff. What is the place of supply? Place of supply, sir, if it is B2B, location of the recipient. If it is B2C, you know the address of the recipient, that will be the place of supply. You don't know the address, then your address will be the place of supply. That is the supplier address will be the place of supply. This is nothing but exactly ditto same like general rule section 12 subsection 2. Exactly similar to section 12 subsection 2. Exactly ditto same. Okay, so that is what the concept here. Section 12 subsection 9. We are done with that also. Now section 12 subsection 10. Section 12 subsection 10 is, sir, you have seen when goods are supplied on board of a conveyance, we have seen in 10.1e. Here we are seeing 12.10. Services are supplied on board conveyance. So you are traveling from Delhi to Chennai in a flight. So when you are traveling from Delhi to Chennai, sir, during your flight journey you have taken a movie on rent from the airlines and you have paid some 100 rupees or 500 rupees something. What is the place of supply for that? The place of supply is the first scheduled point of departure. The first scheduled point of departure. That is what the place of supply. Shall we proceed? Next, 12 subsection 11. 12 subsection 11 is regarding telecom services. So telecom services, if you see, so 12 subsection 11, telecom services. Telecom services. See, when we are talking about telecom services, we are talking about both this internet connection, mobile connection, all that stuff. If this telecom services what you are providing involves fixed line, that is setting up this antenna, DTH, all that stuff, then location where those things are installed, that will be the place of supply. Okay, sir, suppose if it is postpaid mobile and internet services, postpaid mobile services or postpaid internet services means the place of supply will be the billing address of the recipient. What if the billing address is not available? Ayyo, 1 second ma. So in case of postpaid services, mobile and this internet services, sir, the location billing address of the recipient will be the place of supply. There is no such scenario if the same is not there is no such point. So there is no such point. Actually, postpaid connections, mobile and internet connections, billing address of the recipient, because billing address, obviously without billing address you will not give them the connection. So billing address will be the place of supply. Okay, sir, what if it is prepaid connection, sir? What if it is a prepaid mobile or internet or DTH services? If the prepaid, suppose if you remember in like few years back we will purchasing that recharge coupons or recharge cards, Nora. Of course now we are not doing all this stuff. So this prepaid mobile or internet or DTH services, all that stuff, if they are being done through selling agents or resellers or distributors, address of that selling agent, no sir, by any person to final subscriber, then where the prepayment is received or place of sale of those vouchers, when payment is made through electronic mode or any other cases. See, understand, first one, through agents they are selling, address of that agent. Which one? Prepaid, I am talking about prepaid. Through agents they are selling, location of the agent. Next, anybody else to final subscriber they are directly selling, the company itself directly selling to the final subscriber. Then where the payment is received, that will be the place of supply, or where the vouchers are sold, that particular place will be the place of supply. Sir, if it is through electronic mode or any other cases, the place of supply will be the location of recipient, and if it is not available, location of the supplier, that will be the case. Clear? So we have examples here, please go through that. And next, here they have given rule 6, not relevant at your level, just once you just go through that. 12 subsection 12 and 13. 12 subsection 12 and 13. 12 is regarding banking services, right? Banking companies providing banking services and financial services, and including stockbroking services. In this case, the place of supply is purely based upon whether the recipient address is available or not. If it is available, recipient location. If the address of the recipient is not available, then location of the supplier. Here there is no such thing called B2B or B2C. It is purely you have the recipient address, that will be the place of supply. You don't have the recipient address, your address, that is supplier address itself, will be the place of supply in case of banking, financial and stockbroking services. I repeat, all the examples are lifted from ICA study material, all that stuff, very good examples. Please make sure you are going through that. Okay, so this is an exhaustive coverage of ICA study material, the entire, like whatever the revision notes, the quick revision notes we are having, completely exhaustive coverage of ICA study material, and in a very crispy manner, summarized manner, to the extent required for exam and before the exams, just to revise the entire subject quickly. I have just made this, so please go through that without fail. Now coming to the next one, insurance services. Or suppose if you are not having this now, right now also, you can go through ICA study material, place of supply examples at least. Please make sure you are going through that. Coming to insurance services, B2B. B2B means straight away registered person's location will be the place of supply. B2C, insurance business, banking business, banking services, there is no such point. The point is only recipient address you are having or not. Coming to insurance business, sir, the place of supply is purely based upon whether it is B2B or B2C. If it is B2B, recipient's address. If it is B2C, you have his address, then his address. If you don't have the recipient's address, supplier address. Location of recipient of services available in the records. Sorry. Here, whatever the address available in the records, that will be the place of supply, because insurance cases, we will not give insurance without his address with us. So there won't be any scenario where we don't have the address of the recipient. I'm sorry, I repeat, insurance business, B2B na location of the registered person, B2C na address of the recipient which you have in your records. There won't be a scenario where you don't have his address, because without having his address, we will not give him the insurance. Okay. Next, advertising services. If you remember, sir, advertising services, these are provided to governments, or normally we'll be seeing the government schemes and all, they will be advertising through hoardings. You go to any cinema theaters, in the cinema theaters they will be advertising that particular state government schemes or central government schemes, all that stuff. Or on trains you will be seeing the central government schemes, or some railway tickets, or some internet, also through internet or SMS, all that stuff you will be getting the advertisement of government. So advertisement services are provided here not to everybody, it is provided to government. Sir, if it is provided to government, sir, it is not provided in one state. If it is provided in one state, that particular state is place of supply, but it is provided in multiple states, so each state is a place of supply. Each state is a place of supply. But how do you apportion that, sir? How do you apportion that, sir? Based on the agreement. If the agreement is absent, then, sir, if it is newspaper, we are advertising in newspapers, how do we apportion the value? Sir, we apportion the value based upon the amount payable for all the editions in that respective state, sir. For example, in Tamil Nadu, there are 7 editions. For that 7 editions for Tamil Nadu, how much we have to pay? For 14 editions in Andhra Pradesh, how much we are supposed to pay? Again, 10 editions in Telangana, how much we have to pay? In that ratio, the amount payable for all the editions in each state, in that ratio, will accordingly proportionately divide that value, and each value will have the place of supply, that respective state. The same way, if the advertisements is through printed materials like pamphlets, leaflets, all that, amount payable in each state. If it is through hoardings, number of hoardings in that particular state. Advertisement on train na length of the railway track in each state. and if it is based on like back of any utility bills like gas bill or any electricity bills, all that stuff, number of consumers in that state. If it is printed, the advertisement is printed on railway tickets na, number of railway stations in each state. If it is in radio stations, we are advertising the schemes na, based upon number of amount payable to the radio stations in that particular state, all that stuff. So television, internet, all these SMS, sir, will be going through the viewership or internet subscribers or telecom subscribers. If you see viewership, all that stuff, see, viewership data will be published by an agency called BARC. Internet subscribers you will get through TROI, and SMS also you will get through TROI. So these are the things. 12 subsection 14 just not that greatly relevant for you, don't worry about that, just go through some examples here and there, sufficient. So that detailedly they won't test you 12 subsection 14, all that stuff. Okay, so that is what regarding place of supply. We are left out with one clarification here ma. So the clarification is all about this is May 24 amendment. I think there was a question also in past. I don't remember exactly whether it was in CA inter or CA final question paper I have seen, but I don't remember it. So there was one question regarding this they have tested, I think in May 24 exam itself. So now the point is, sir, place of supply for services regarding advertisements. Here what is happening now? See, there is a party called vendor and there is a party called marketing or advertising agency. Advertising or marketing agency, or we call it as advertising agency only, not marketing. This is not appropriate word. So advertising agency and there are clients for this advertising agency. Imagine one client, let us take example Honda company. Honda company wants to advertise their newly launched Honda Elevate car. So Honda company cannot go and keep on searching the hoardings, all that stuff, where and all the hoarding is available, contact numbers will be written, there will advertise all that. So Honda company cannot do. Honda company is approaching this advertising agency. The advertising agency is taking responsibility of advertising Honda Elevate car. So this advertising agency is providing advertising services to clients. For this service, place of supply, how do you determine? Sir, 12 subsection 2 we will use and determine. There is no doubt about that, because advertising to governments is given in 12 subsection 14, but any other advertising services are not covered anywhere. So 12 subsection 2 general rule will proceed. But now the point is, these vendors, who are these vendors now? Sir, these vendors are the owners of these hoardings. These vendors are the owners of these hoardings. Now the point is, what about the transaction between the vendors and advertising agency? As an advertisement agency, I am going to the vendor and asking, sir, I need this hoarding to advertise various brands. What the vendor is doing, vendor is completely giving control over the hoarding. That means I can change morning Santur soap advertisement, afternoon Honda Elevate advertisement, evening MRF tires advertisement, whatever I want I can do. I will just pay rent for the hoarding every month. That means, sir, for this transaction, how do you determine place of supply, sir? 12 subsection 3, yeah. 12 subsection 3. Sir, for this I am I am calculating place of supply based on 12 subsection 3, because this is purely renting of immobile property. Any service directly related to immobile property, place of supply shall be determined as per 12 subsection 3. Clear? Or there can be another variety where vendor only will have control over the hoarding. Another type of variety is vendor has not given control over the holding, not given control over the holding. Vendor is saying, you tell me sir which brand you want me to advertise, I will advertise that, but holding will be fully under my control. You don't touch the holding. Like that vendor is saying. That means what vendor is doing? Vendor is renting the holding to us. No, vendor is not renting the holding to the advertising agency. Vendor is purely what? He is also providing advertising services to advertising agency. Vendor is saying, you tell me sir which brand you want me to advertise, I will advertise that. Pay me this much. That means vendor is providing advertising services to advertising agency. So what is the place of supply? So place of supply is based on 12 subsection 2. Tanua, are you able to understand? Place of supply is based on 12 subsection 2. That is what the concept. Am I clear? So this is what the clarification. And one more recent latest amendment for you is for January 25 amendment. I have not placed in that material. I'll just explain to you here. So the amendment is, sir, a supplier is supplying goods to a recipient, but this recipient is unregistered fellow. And you are supplying the goods, supply of goods through e-commerce operator, Now this fellow billing address is Chennai, Tamil Nadu, but shipping address is Tirupati, Andhra Pradesh. That means when unregistered person is buying certain goods where billing address is different and delivery address, the shipping address is different, what shall be taken as place of supply? In such case, what shall be taken as place of supply? They have clarified that the place of supply will be the delivery address. Am I clear? The place of supply will be the delivery address. And place of supply is the delivery address, Nora. Now, if supplier wants, supplier can record the delivery address on invoice also. For his convenience if he wants. So I repeat, when the unregistered person is buying some goods through e-commerce operator, the shipping address is different, billing address is different. What shall be taken as place of supply? Please take delivery address itself as place of supply. And for your convenience, the supplier, you can also mention the delivery address itself in the invoice also for determining the place of supply. All the stuff need not mention the billing address alone. Okay, that is the clarification given. This is the latest Jan 25 amendment which is given in your statutory update. With this, we have finished place of supply concept fully with amendments applicable for your Jan 25 exams. Right. So see you all in the next video, and we'll update you the timings also, all that stuff. So the material, everything, the link will be below the description, in the description, all the stuff, so you can go through that. So please make sure you are going through various concepts. I have uploaded all the playlists in the YouTube, so whatever the topics you have any doubts, you can just watch those videos, and of course even you can share with your friends also, right? So thank you everybody for supporting so much, and wishing you all the very best. See you in another video. Jai Hind. So hello students, this is your Mr. GST CMA Vishnu Vardhan, and in this video we are going to see the chapter value of supply. and in this video quickly we'll be revising value of supply, and here and there some small problems and adjustments I'll discuss. So with the help of that conceptual clarity, you can go with any problems or any question bank you are carrying, or institute ICA study material questions or past exam questions, RTPs, MTPs, whatnot. So our whole agenda is to be conceptually clear in this video, and here and there I will just cover some 2-3 problems from ICA study material or the sources, right? So that is what the target in this video. Without wasting much time, let us move on to this particular chapter, value of supply. So value of supply, in this chapter we are going to see section 15. Section 15, value of supply. Why we need this value of supply? Sir, GST is a rate of tax, and this rate of tax of GST, we have to impose this on a value. How do you determine that value? At CA Intermediate level, it is very easy for you. In CA Intermediate, they are not complicating the things. They are just telling you whatever the transaction value. What do you mean by transaction value, sir? You and me, like we are dealing with something, like let us assume you are selling a camera to me. You are selling the camera to me for 1 lakh rupees. That 1 lakh rupees, whatever we are transacting, that will be taken as value of supply. That means section 15 says take transaction value as value of supply. Sir, what do you mean by transaction value, sir? Transaction value means actually whatever the price has been paid or payable by me to you in this example, right? So simple, value of supply. What is value of supply as per section 15? Section 15 says take transaction value as value of supply. Sir, what do you mean by transaction value? Whatever the price paid by the recipient to the supplier or payable, that will be transaction value. That itself you take as value of supply. But you tell me, for the department to believe the transaction value, sir, we should have some conditions, yes or no? The conditions are, first condition is the supplier and the recipient. These both people should not be related persons. So if supplier and recipient are not related and price is the sole consideration. What do you mean by price is the sole consideration? That means we are only talking about only monetary consideration. Only monetary consideration. So if that is the case, that means you and me, the supplier and recipient, are not related and price is the sole consideration. That means purely it is all about money. In that case, we will take transaction value as value of supply, right? So then the transaction value shall be taken as value of supply. So what are the conditions? Supplier and recipient are not related and price is the sole consideration. That means purely monetary consideration. Now the doubt is, sir, what do you mean by related, sir? What do you mean by related? That is the reason we have seen already in related person discussion, like in schedule 1, if you know, like you would have read related person meaning. That is just as an explanation below section 15 they have given for this purpose, and we are using it there also. So related person meaning, already, officers are directors of each other's business, employer, employee, partners, or common ownership, common control, all that stuff. So you should not be related. Sir, what if I am related? For you this provisions will not be applicable. We have to see the valuation rules, which is not there in your syllabus. It is there in CA final. So if supplier and recipient are related, you don't worry. For you, that is not there in syllabus. Sir, price is not the sole consideration. Sir, I am giving some non-monetary consideration also. Then what should I do? Then also you don't worry, that is not there in your syllabus. And one thing, listen carefully, everybody, important or interesting one. If any of these conditions are violated, it is not there in your syllabus. So in the question, if they are giving anything, the transaction between related person, or transaction between distinct persons, or supply without consideration. But here we are discussing there should be monetary consideration. If the supply is without consideration, or there is some non-monetary consideration, whatever it is, if these conditions are violated, in the question they will only give you, this is the value under section 15, like that. They will only give one number. That number you take as value. Simple. I repeat, if the conditions, supplier and recipient, are not related and price is the sole consideration, if these conditions are satisfied, then only, sir, whatever the transaction value is there, that we will take as value of supply. But by any chance in the question, if they say supplier and recipient are related or price is not the sole consideration, whatever it is, then that is not there in your syllabus. So in the question, they will give you what is the value under section 15. Only thing it should come to your mind, okay, they only give value under section 15, let us take it and use it, because value is determined under section 15. But in section 15 there are 5 subsections, only 3 are there in your syllabus, 4 and 5 is not there in your syllabus. So that is what the story of section 15. So I repeat, section 15 subsection 1 says take transaction value as value of supply. Now the only thing is, in section 15 itself, subsection 2 and subsection 3, subsection 2 itself is telling, sir, there are 5 points, sir, there are 5 inclusions, sir. These 5 inclusions, you please add it to the transaction value. You please add it to the value of supply, and on them also you charge GST. Like that, 15 subsection 2 is giving 5 inclusions, and 15 subsection 3 is giving 1 exclusion. So I repeat, it is 5 inclusions and 1 exclusion. So 5 inclusions and 1 exclusions. It is like Pandavas and Draupadi. 5 inclusions and 1 exclusion. Okay. So you remember, for your exam purpose, you just have to remember what are those 5 inclusions properly and what is that 1 exclusion properly. Then that is more than sufficient for you to do the problems. Okay. Right. So now coming to the point. Sir, what are the 5 inclusions? Simple one. What is the first inclusion? I repeat, we are discussing transaction value is given, but we are going to add certain things. For example, I am selling you a camera, 1 lakh rupees. You asked, sir, give me some customized packing, sir. Pack it in a proper way where I can gift it to my girlfriend on Valentine's Day. So I'm packing it in a customized way according to your request, all that stuff. I am charging 500 rupees extra. Whether it should be added to the value of supply. And I am delivering the goods to your location, and I am charging delivery charges. Should it be included in the value of supply? Camera cost is 1 lakh rupees only, but I am charging 500 rupees extra for delivery, or I am charging 500 rupees extra for packing. Whether these things to be added to the value of supply or not, that we have to see, right? So that way they only gave in the law 5 inclusions. We need not worry. What are the 5 inclusions? First inclusion, very 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 important. First inclusion, whatever the taxes, any tax, whatever the taxes charged separately. Please understand here, one important thing is that should be charged to the recipient. If supplier is paying the taxes, in the question they will say supplier is paying so and so taxes, but not charged to the recipient. If it is charged to the recipient only, then you should add it to the value of supply. Otherwise, don't add it to the value of supply. But any tax you see in the question, mostly they will be giving some municipal taxes, etc., etc. Whatever the taxes they give, that should be added to the value of supply. Hope it is clear for you. But you should not add GST taxes. You know, GST means always whenever we say GST, 5 things: CGST, SGST, UTGST, IGST, and GST compensation cess. Sir, these things if you are paying, then it will not be added to the value of supply. Sir, we are calculating value of supply itself to charge GST, and how can you add GST to the value of supply again? So GST should not be added. One more important thing is, and TCS imposed under Income Tax Act. So please understand what is the inclusion here. All taxes, but other than GST and other than TCS under income tax. But I repeat, all these taxes should be added. All these taxes should be added. 1 second. So all these taxes, any tax, any. So I repeat, any taxes, whatever the taxes we are paying. So all these taxes should be included in the value of supply. Other than GST, all these taxes should be included in the value of supply, provided it is charged to the recipient. If it is not charged to the recipient, you should not add it to the value of supply. And one more thing, GST you should not add to the value of supply, and TCS under income tax you should not add it to the value of supply. So that is first inclusion. So 5 inclusions we are done with. Inclusion number 1, right? So the next inclusion is whatever the payments, actually the liability of the supplier, but recipient is going and discharging it. So the payments made to the third parties on behalf of the supplier, which are paid by the recipient, to the third parties. So here the condition is, sir, it should be the contractual liability to make payment of whom? The supplier, and that payment is also should be related to such supply. But who is going and making the payment? The payment is made by the recipient. That should be added to the value of supply. Now see, for example, the supplier is charging 10 lakh rupees for the value of supply, and supplier has to incur some payment to the raw material vendor for that. So raw material vendor, sir, he has to buy the raw material and do the manufacturing and sell to us. For raw material vendor, he has to pay 2 lakhs to supplier. But this 2 lakhs, recipient is going and making the payment. Whose obligation it is, sir? Sir, the obligation is of supplier, sir. Why he has to buy this raw material, sir? Because I placed an order for some goods, sir. For that, supplier has to buy the raw material, manufacture it and give to me, sir. But to the raw material vendor, supplier's raw material vendor, I am going and making the payment, sir. 2 lakh rupees. Why are you doing that overaction, sir? I am doing, sir. Okay, fine, no problem. Add it to the value of supply. So supplier's obligation is discharged by recipient means that should be added to the value of supply. Am I clear? So here now if you ask me, sir, what is the value of supply? I paid to the supplier 10 lakhs and I paid to raw material vendor 2 lakhs. So total the value of supply will be 12 lakhs now. So I repeat, any obligation of supplier in connection with this supply, supplier has to make some payment. That payment he is not going and making, I am going and making that payment. That also will be added to the value of supply. Okay, right. So that is what the next one. Here examples also given in this, so you can just go through that later also. Next, the concept is simple. Supplier's obligation, recipient is discharging. Okay. Next, what is the next one? Third inclusion. I repeat, 5 inclusions. Number 1, we are done all the taxes charged to the recipient other than GST and TCS. Next one, obligation of the supplier discharged by the recipient. Simple. Okay. Next one, the third one, incidental expenses. Simple. Whatever the incidental expenses incurred by the supplier at the time of supply or before the supply, and later on what he is doing, he is recovering it from the recipient. Best example, as we were discussing, commission, packing, inspection, certification charges, installation, testing charges, etc. Whatever it is, the supplier is incurring the expense at the time of supply or before the supply, and later on that supplier is recovering it from recipient, then it will be added to the value of supply. Right. So is it clear now? So the point is, incidental expenses, whatever the expenses incurred by the supplier and he is later on recovering it from recipient, so that will be added to the value of supply. Example we have discussed here. So even transportation charges, see here there is something called ex factory basis. What do you mean by that? Sir, buyer is paying the outward freight and insurance. Buyer is only coming to your factory gate, buying the goods, taking the goods to his location. Sir, transportation, insurance, everything he is only incurring. Who is incurring? Buyer is incurring. Then why we will add it to the value of supply? Which should be added to the value of supply only when supplier incurs something and that is recovered from the recipient, that should be added to the value of supply. Here, because the buyer himself is incurring them, we are not going to add them. That will not be included in the value of supply. Hope it is clear. So 3 inclusions are done. So now let us move on to the next inclusion. The next inclusion is interest, late fee, penalty for delay in payment of consideration. Now please understand here, when you talk about interest, we have already seen in that previous chapters also, you would have discussed or you would have understood interest. Why you give interest to anybody? Sir, I give interest to the seller. Why you are paying it to seller? Why you are paying interest to seller? Because he allows me to make late payment, then please add it to the value of supply. Please add it to value of supply. No sir, the seller is not charging interest. Sir, some other person is charging interest. So let us assume others. Why they are charging interest? Because they have given me loan or advance. Loan or what ma? Advance. Loan or advance. So because of that they are charging interest. Na? That is also supply of service, but it is exempt under GST. It is exempt under GST. Are you understanding the point? I repeat, interest. Sir, whatever interest is there, interest is given to seller, the seller of goods only, because he is allowing us to make late payment. Then such interest will be added to the value of supply and we shall charge GST on that. Please be careful. We shall charge GST on that. Am I clear? But if somebody is giving you loan, they are not giving you time to make payment. If somebody sells goods, if somebody sells services to you and they are giving you time to make payment and further they are charging interest, then no problem. That should be added to the value of supply. But if somebody is giving loan, allowing you to use their money and charging interest, then it is supply of service, but it is exempt under GST. Just like interest on home loan, interest on housing, like a car loan, all that stuff. Clear? So that is what the point. Here, what is that, ma? Here we are discussing. We are discussing interest, late fee, penalty by whatever name called. For what? For delay in payment of consideration. Because I am paying the consideration late, this fellow is allowing me to pay it late but asking me to pay interest. That will be added to the value of supply. For example, you are buying goods from me. You said, Vishnu sir, we will pay it after 3 months. I told, if you are paying immediately, pay 10,000. 10,000 is the value of the goods. But if you take 3 months time, I need 3,000 extra payment. That is what I call late fees for paying it late. Okay. So now the value of supply is not just 10,000, it is 10,000 plus 3,000 the late fees for payment of consideration. I repeat here, interest is of two types. One is interest late fee penalty for delay in payment of consideration, that will be added to value of supply. Next, number two, interest charged for extending loans, advances, deposits, that is exempt under GST. Okay, so that is what the flow chart I have written here. Shall we proceed? Everybody comment in the chat box. Yes, type the letter. Yes, that's all. Right, super. So last inclusion. So we are done with 4 inclusions. So the last inclusion is subsidy. If you remember in supply discussion, I told you consideration definition when we are discussing, we will discuss about subsidy in value of supply chapter. So subsidy, please understand subsidies. If you are getting any subsidy, and because of that subsidy, listen carefully, one is you should get subsidy. Number two, that subsidy should be directly linked to the price of the goods. And it should be received from anybody other than government. 3 conditions. Number one, subsidy received, which is directly related to the price of the goods, linked to the price of the goods. Number 3, it should be received from any person other than central government and state government. So subsidy received directly linked to the price from anybody other than central government and state government. That subsidy should be added to the value of supply. So if central government is giving you subsidy, because of that subsidy, the price of the product, earlier it was 100 rupees. See, the price of the product is 100 rupees and I am getting subsidy. From central government, rupees 20. Then what is the value of supply? Value of supply is still 100 rupees only. Whatever subsidy I get from central government or state government, I will not add it to the value of supply. Suppose if the subsidy is received from an NGO, which is not central government, which is not state government, then I am receiving subsidy from NGO 20 rupees. Then the value of supply will be 120 rupees. But this subsidy should be directly linked to the price. That means it is not like some blanket subsidy or something, the incentive given by the government. You come and start your factory here, come and start your business here, will give the land at subsidized cost or plant and machinery at subsidized cost. All these things. No. That is not the point we are discussing here. Anybody giving you any subsidy that is directly linked to the price, then such subsidy will be added to the value of supply, but that should not be given by central government, state government. If it is given by central government or state government, we will not add it to the value of supply, we will just ignore it. So these are the 5 inclusions. So what are the 5 inclusions? 5 inclusions. Number 1, and regarding subsidy treatment, see, now coming to the point, as we are discussing here, when you see subsidy concept in the question, when we see subsidy concept in the question, they will say the word after considering subsidy, and there can be other word after including subsidy. Please understand, if they have used the word after considering subsidy, the price is after considering subsidy, means the subsidy is not included in the price. Please understand, the subsidy is not included in the price. Please understand that. That means if they say the list price, is 100 rupees after considering subsidy rupees 20, what do you mean by that? This 100 rupees does not include this 20 rupees. Please don't misunderstand. Here they are not saying after including subsidy, they are saying after considering subsidy. That means I know that I will get this 20 rupees subsidy, and still after considering that I am putting the list price 100 rupees, means I want that 100 rupees also, I want this 20 rupees also. So what should be the tax treatment here? What should be the tax treatment here? Sir, that subsidy, whatever is there, this should be added to the value of supply, the list price 100 rupees. So now the total value will be rupees 120. Suppose if that subsidy is received from government, suppose if the subsidy is given by government, then value of supply will be just 100 rupees. You ignore it. Am I clear here, everybody? When you are doing the problems, in your problems, most of the cases, this is the adjustment you would have come across, or this is the adjustment you see. Sir, subsidy, when they talk about subsidy, they will say after considering subsidy. After considering subsidy means subsidy is not included in the price given. While fixing the price, they are saying, I know I will get this subsidy, still I want this much price. That is what they are trying to tell. Am I clear? So this is one thing. After including means, obviously, sir, it is included in the price. Now what you should do, you should see whether, sir, if it is included in the price, if it is received from anybody other than central government, state government, obviously it should be included, and it is already included. What you should do? Eat 5 star, do nothing, because it should be added to the value of supply. They only added that. You need not do anything. So here, don't mug up the things like plus minus. There is no such thing. You should see whether it is to be included or excluded. Sir, it is to be included. What you should do? Add that. Sir, already it is added in the price only, sir. Then you don't do anything. Simple, leave it. Sir, it is to be excluded, sir. What you should do? Exclude it. Sir, it is already excluded, sir. Then you don't do anything. Am I clear? Everyone, just respond here. Am I clear? So, after including, this can be another point. And there can be another wording also we have seen in problems. Net of subsidies. They will give the word net of subsidies. Sir, what do you mean by this net of subsidies, sir? Whether the subsidy is included in the price above or not included in the price? Respond, ma. Respond in the chat box. Whether it is included in the price or not included in the price, sir. Net of subsidies means, you see, normally when we say gross rupees 100 minus something, let us assume rupees 30. The rupees 70 is called net. This is the net value. You know, gross profit and net profit. From gross profit, all the indirect expenses we delete and we get net profit, correct? So when they say net of subsidies, so when they say the word net of subsidies, what does it mean? Sir, the subsidy is not included in price. Subsidy is not included in price. Am I clear? Not included in price. Net of subsidies means the subsidy amount is not included in the price. It is removed. It is removed. So now what you should do? You should see, sir, if it is received from central government and state government, yes, it should not be included. It is not included, ignore it. But if it is received from anybody else, then it should be added, but it is not added. You please add back that. Clear? So what are the 5 inclusions we have seen? So the 5 inclusions are nothing but simple. Number 1. What are the 5 inclusions? Number 1, all taxes but other than GST and TCS under income tax. Yes or no? Number 2. Number 2 is obligation of supplier paid by whom? Paid by recipient. Next, number 3. What is number 3? All the incidental expenses incurred by supplier and recovered from recipient. Number 4, interest or late fee, penalty, whatever you call. For what? For delay in payment of price. There is the consideration. Yes or no? Last one, what is the last one? The last one is subsidy directly linked to price. received from anyone, received from anyone received from anyone other than, received from anyone other than central government and state government. So all these five are nothing but the inclusions. Yes or no? Simple. All these five are nothing but inclusions, right? So these things to be added to the value of supply. These things to be added to the value of supply. Hope it is clear for you. Now coming to the last one. Exclusion. Sir, what is exclusion? Exclusion, you know, obviously exclusion is what? What is exclusion? Only one exclusion. What is the exclusion, ma? One exclusion. The exclusion is discount. The exclusion is what? Just discount. But the problem is, sir, when this discount is given, I repeat, discount should be excluded from the value of supply. But sir, the discount is given at the time of supply. If the discount is given at the time of supply, then what we can do? If the discount is given at the time of supply, sir, you please exclude it, sir. You please exclude it from the value of supply. Exclude from value of supply. But what is the condition? The condition is it should be shown in the invoice separately. Sir, this 30% is the discount, sir, 40% is the discount, sir, 20% is the discount, sir. Like that, it should be shown in the invoice separately. Am I clear? This is simple one. So discount, when we are going and buying the things, MRP 1000 rupees, they said 30% discount. So show in the invoice MRP 1000 rupees minus 30% discount. So remove that from the value of supply. Simple. Okay. But sir, what if the discount is given after the supply was made? Sir, after the supply was made, who will give discount, sir? That will be our thought process, because we'll be thinking only from B2C point of view. But think about B2B perspective. Sir, I'm regularly purchasing some from manufacturer and I'm a distributor. Because I have met some targets, they are giving me discount. Something like that. After the supply, they are giving me discount. That is possible. That is possible. So that is possible. So the point is, after the supply was made, the discount is given. Now, sir, whether it should be excluded from the value of supply or not, please understand that will be excluded from value of supply. Excluded from value of supply, provided three conditions are satisfied. Provided three conditions are satisfied. What are the three conditions? Number one, you are giving this discount, no? You are giving this discount, no? This discount should be as per the terms of agreement, as per the terms of agreement which was existing at the time of supply. When we both entered into the supply, at that time itself we know, sir, regarding this discount. I'll give one example also. Just listen. As per the agreement, and it should be linked to an invoice. It should be invoice wise, not some bulk balance discounts, all that stuff. It should be linked to a particular invoice, the discount what is given, and recipient should reverse. Recipient shall reverse proportionate ITC. Proportionate ITC. That's all. Then it will be excluded from the value of supply. Now imagine. Now listen carefully. Right. So listen. So the point is, sir, if you look at this example, Vishnu is making a supply to Mr. MSD, and I am making this supply for 10 lakh rupees. I am making this supply for 10 lakh rupees. One second. I'm making this supply for 10 lakh rupees. GST is 1,20,000 on 25th June 2023. I'm making 25th June 2023. And while making the supply itself, I told clearly to MSD, the credit period is 90 days. But if you make the payment within 30 days, I will give you 10% discount. That means this discount I am going to give after the supply. And about this discount, we already know at the time of agreement, number one. Number two, this is linked to the invoice. So tomorrow, see, first of all, when we are making the supply, we don't know whether MSD will make payment within 30 days or not, because he may have money, he may not have money. But if he makes payment within 30 days, I'll give him 10% discount. So generally, we don't know whether he will make payment or not, but still I told him this is an option available for you. So now he has purchased the goods, went. I am filing my GSTR1 and I will give all these details, pay GST fully on 10 lakh rupees. MSD will get that 1,20,000 in his GSTR 2B. He will take full 1,20,000 ITs first. Later on in the next month, within 30 days, he is coming and making payment. But this is happening in next month. Sir, when he is coming and making payment within 30 days, obviously he will ask me what? Obviously he will ask 10% discount. So he's asking the 10% discount. So when he's asking the 10% discount, yes, I'm giving 10% discount out of 10 lakh, 1 lakh discount we are giving. So balance on that only we should charge GST 1,08,000. Now, sir, 10 lakhs is the value of supply. Discount is given after the supply 1 lakh. Should we reduce that 1 lakh in GST also and give impact, and should we adjust that or not? Further, the condition is, as we have seen already, this is as per the terms of the agreement. This discount is linked to the invoice. The only requirement is we should ask MSD, sir, you are eligible for discount 1 lakh. No, that means the GST is only 1,08,000. No, but you have paid GST 1,20,000 and you have taken ITC 1,20,000. So actually you have to take 1,08,000 ITC, sir, but you have taken 1,20,000. But now you are giving me, paying me GST 1,08,000 only. I have paid to the government 1,20,000. Please understand, I have paid to the government 1,20,000. Now I should ask the government back 12,000. So what should I do? I should ask MSD to reverse this proportionate ITC. That means MSD has taken ITC of 1,20,000, but he is claiming discount after the supply. So proportionate, how much amount? 12,000 proportionate ITC he should reverse. That means he has to pay back to the government. That is the condition. Let me just summarize. What is the concept here? Sir, if the supply is made and discount is given after the supply, such discount you can exclude it from the value of supply. But there are three conditions. Condition number one is that discount should be as per the terms of the agreement already, which has been entered at the time of supply. Number two, that discount should be linked to the invoice. Number three, that recipient who is claiming the discount now and claiming the benefit now, if he has availed full ITC earlier on the full value, proportionate ITC he should reverse. Proportionate ITC he should reverse. If he is doing that, then that is more than sufficient. He can claim discount, and that discount will also get benefit in GST. But what if these conditions are not satisfied? If these conditions are not satisfied, don't worry. You give discount in your books of accounts, you give discount as per your financial terms, all that stuff. But in GST, I will not give you any benefit. In GST, this shall be the value of supply and this shall be the GST, everything. You may give the discount, no problem. I'm not stopping you to give discount. But in my GST records, I will not give you any benefit. But if you follow the conditions in GST also, I'll give the adjustment so that your GST liability will come down. Right? So that is what all about the exclusion. That is what all about the exclusion. Right? So with this, we are done with the main things of value of supply. Here, one small concept regarding deliquidatory agent is also there that we have to finish. So apart from that, everything is done, and one small clarification of no claim bonus is also there that we will finish. So we have discussed regarding value of supply, the inclusions and exclusions, and understand discounts can be of various types. Discount, they can call staggered discounts, where you buy more and you save more. That means you do shopping for 5,000, you get 10% discount. You do shopping for 10,000, you will get 20% discount. You do shopping for 15,000, you will get 30% discount. That means the more and more you buy, the more and more discount you are going to get. So this is, however, discount given at the time of supply only. No, sir, exclude it from the value of supply, no problem. Just show it in the invoice separately. And next, volume discounts offered by the supplier to their stockist. That means, sir, I am buying goods from the manufacturer regularly and I am selling them. Manufacturer, at the time of buying itself, he told, Vishnu, during Diwali, if you do so much of turnover, on your next purchase, I will give so and so discount. That means, while making this supply itself, he told, I will give you discount in the particular invoice if you just achieve the targets, all that stuff. That means discount is given after the supply. Discount is given after the supply, but we know about the discount earlier. and it will be linked to an invoice. And proportionate ITs, if at all I have taken, I will reverse also. So if these conditions are satisfied, obviously we will exclude it from the value of supply. This is another type. And there is one more thing called secondary discounts. What is this secondary discounts? The secondary discounts are nothing but, please understand, the secondary discounts are, see, I have purchased certain things and there was no discount, nothing. Later on, maybe the goods are not moving, the goods are not being sold, etc., etc. To motivate me, my manufacturer is saying, Vishnu sir, I'll give you further discount. Please push the products into the market. Please sell these goods. Like that, he is trying to motivate me. So whatever he is saying, but the discount is given. Yes, Suga, correct. I'll take ITC in another 20-30 minutes, Mahesh. Okay, listen. So now the point is, sir, at the time of making the supply, we never discussed anything about discount. But later on, somehow, after the supply, the discount is given. Secondary discounts are not given at the time of supply. We don't know about that. Simple, whatever the name, you just ignore that. You just see when the discount is given. At the time of supply, whether after the supply. At the time of supply, na, just show it in the invoice separately, claim the benefit of exclusion. But after the supply, if it is given, what you should do? You please make sure you are following the 3 conditions. Those 3 conditions satisfied, now you exclude. Secondary discounts will not satisfy the conditions, so they will not be excluded. It will be included in the value of supply. Clear? So some small examples which are there in ICST metal, same things we have just discussed here. So nothing to worry. We can proceed. So now the concept is regarding delivery agent. Let us discuss this. So till now, value of supply, guys, problem related things we have discussed everything. Delivery agent and value of supply alone we have to see. Shall we proceed? Everyone clear? Ra? Respond in the chat box, ma. Everybody clear? Right. Delivery agent. Now please understand. First, what do you mean by delivery agent? The delivery agent is a person. First, what do you mean by delivery agent? The delivery agent means a person who is acting as my agent. I will consign the goods to him. He will sell the goods from his particular place, and he will give me the guarantee or assurance of collection of the sales. The sales collection, whatever the amount to be collected, that he will collect. That means he will give me assurance that, sir, there won't be any bad debt, sir. You don't worry, you relax. Am I clear? So for that, I will pay him extra commission. You know that obviously you would have studied in consignment. Delivery agent is the agent who takes the responsibility of credit sales, the collections. Now the point is, listen carefully, everybody listen carefully. Sir, there is a principle. There is a delivery agent and there is the customer. So now, principal, look at this carefully, ma. Look at this carefully. Principal will send the goods to delivery agent. Delivery agent will give the goods to customer. Now, who will raise invoice to the customer? Listen carefully. Who will raise invoice to the customer? Who will raise invoice to the customer? Sir, invoice can be raised to the customer by principal only. Raises the invoice. Sir, who is raising the invoice? Who is raising the invoice? Principal only raising invoice to the customer. Principal only raising invoice to the customer. That means, understand here, when principal is raising the invoice, for example, Vishnu is the principal, MSD is the delivery agent, Virat is the customer. To customer, that is to Virat, Vishnu is only raising the invoice. The principal is only raising the invoice. Then we should understand various things here. Sir, there is movement of goods between principal and agent without consideration. Can we call it as supply? Can we call it as supply? Everybody, can we call it as supply? No, because schedule 1 para 3 will come into picture only when the agent raises the invoice in his own name. But here, who is raising the invoice? Principal is raising the invoice. The agent is not raising the invoice. It is principal is raising the invoice. So schedule 1 para 3 will not come into picture. Am I clear? So what and all happening here? Number one, sir, there is a supply between Vishnu and Virat. There is a supply between Vishnu and Virat. Number one. Number two, MSD is providing agency services to Vishnu. Okay. And number three, that is what the main important for us, the discussion here. Number three is delicatory agent is giving loan to Virat. Delicatory agent is giving loan to Virat. For what? Because delicatory agent has the responsibility of collections, correct? So Virat is not having money to make the payment on time. If that is not done, MSD's commission will be lost because he took the responsibility of what? Cash collection, the credit sales collections. So Virat paying on time is the responsibility, is the headache of MSD. Virat is not having money. So what MSD is doing? MSD is giving loan to Virat. So Virat is making the payment. This is the third transaction. This is the third transaction. Now you tell me, everybody listen carefully. Vishnu made a supply to Virat. MSD gave a loan to Virat. Who is the seller? Who is seller to Virat? Who is seller to Virat? Sir, for Virat, seller is Vishnu. Is Vishnu charging interest from Virat? Is Vishnu charging interest from Virat? Please respond. Is Vishnu charging interest from Virat? No, sir. MSD is charging interest from Virat. Why MSD is charging? Because MSD has given loan. Just now we have discussed interest charge for loan is exempt under GST. Okay, exempt under GST. You need not worry about that. That interest portion is exempt. Should that interest portion be added in the supply between Vishnu and Virat? Why you will add it, sir? Vishnu is charging that interest. Then why you will add it? You cannot add. So you will not add it to the value of supply. Number one. Number two, at least that interest portion is taxable in GST. No, sir, because MSD is not selling the goods and giving him time. MSD is giving him loan and asking him to repay with interest. That is exempt under GST. Till now comfortable, everyone? Everyone respond. Till now comfortable? Now, sir, respond, everybody just type the letter yes. What is there in that? Right. So listen, now what is the second possibility? Sir, the second possibility is in previous case Vishnu raised invoice to Virat, correct? But in this case we are going to see MSD is raising invoice to Virat. Guys, listen carefully. MSD is raising invoice to Virat. Now see what and all transactions will happen now here. Number one, sir, Vishnu and MSD will come under principal agent relationship as mentioned in schedule 1 para 3 because agent is raising the invoice in his own name now. So the goods moving from Vishnu to MSD without consideration will be supply as per schedule 1. This is one transaction. MSD sells goods to Virat, second transaction. MSD provides his services as an agent to Vishnu and charges consideration commission. This is third transaction. Am I clear? And now MSD will give loan. MSD will give loan to Virat for making the payment on time. But here understand, can you technically call it as loan? Can you technically call it as loan? No, sir, because here MSD is only seller and MSD itself is like himself is what? Giving time to Virat for making payment. Are you understanding, my everyone? Here, who is the seller? MSD. He is allowing Virat to make payment even after some due date and charging interest. That means that interest will be added to the value of supply, between MSD and Virat. Are you able to understand? The interest charged by MSD now will be added to the value of supply between MSD and Virat because MSD is the seller now in this case. MSD is allowing Virat to make payment late and is charging interest for that. On behalf of Virat, MSD is only going and paying amount to Vishnu and he is closing the account with Vishnu. And he is allowing Virat, okay, you pay late, no problem, but pay me interest. That interest will be added to the value of supply between MSD and Virat. So that is what the concept here. So here what are the possibility? What is the second possibility, sir? Agent himself, delicatory agent himself is raising the invoice. In that case, sir, Vishnu and MSD also, principal and agent also will become covered under schedule 1. Between them there is one supply happening. Next, agent is providing his services to Vishnu and charging some commission, that is second supply. Third supply, agent is selling goods to Virat, third supply. There is third supply. Fourth one, agent is allowing time, giving time to Virat to make payment later, and is charging interest that will be added to the value of supply between MSD and Virat. Hope it is clear for you. So the notes is clear. If anybody wants to take screenshot, please pause the video and take screenshot of this. Please pause the video and take screenshot of this if you want. And possibility 1 also. You can just pause the video and take screenshot and copy later on. Right. So next, possibility number 2, this one. So these are the inclusions and exclusions. If you want to take a screenshot of this, you can just take a screenshot of this. So everything is covered in this flowchart, inclusions and exclusions of value of supply. Right. So let us move on to the next last clarification. There is a clarification, guys, actually. So the clarification is regarding no claim bonus. What is this no claim bonus? Now please understand. For example, sir, I am buying a car and with insurance company I am taking insurance. One second, ma. Okay, this is better, I guess. So with insurance company I am taking insurance. First year I have paid premium. I have paid premium of 50,000 first year. And now, sir, next year when I am going for the renewal of the premium, they have seen first year Vishnu sir has driven the car so well and he did not come to us for any claim. So there was no scratch, no accident, nothing. So everything went properly. So I did not claim any insurance policy there. So because of that, what they are doing in the second year when I am going to pay the renewal premium, they are giving me a bonus called a no claim bonus. No claim bonus means last year you have not claimed anything from us, sir. So for that I am giving you some reward, like that. They are appreciating my driving skills. Okay. So the point is, sir, they are giving me no claim bonus, but they are not giving no claim bonus in monetary form. They are giving a benefit to me. What is that benefit? Now next year premium I'm paying, no, the second year premium. In that second year premium they are giving me a discount. So that discount itself, like the no claim bonus itself, is given as discount in the second year premium. Sir, what is the tax treatment for that? There was a doubt and the department has clarified. It is nothing but just like a discount given. So you exclude it from the value of supply. Simple. So I repeat, no claim bonus is just like a part of discount, and you exclude it from the value of supply. On balance amount what you are paying, on that only you charge GST. That is more than sufficient. That is what the point there. Clear? So with this we are done with value of supply, theoretical discussion, everything. So we have revised value of supply quickly. Okay, so there the video ends and we will see the problems in another video. If you want to see the video, then you just refer the video. Otherwise, the conceptually this is what value of supply chapter. Right. So coming to the next chapter, the very important chapter of your CA inter syllabus. Of course, as CA final syllabus also, this is the main thing. So input tax credit. So without wasting much time, let us proceed with this chapter, input tax credit, and we'll discuss the provisions also. Of course, we'll see some 1 or 2 problems in the discussion also, but mainly the agenda is in this video to cover the concepts. So you will have a conceptual clarity which will help you to solve the problems, right? So shall we proceed, everybody? Others respond. Those who have not responded till now, please respond in the chat box. Show some energy. Right. So now, in this chapter, please understand, you have only 3 sections: section 16, 17 and 18. Of course, there are various other sections which are regarding utilization of ITC, the rules, all that stuff, that also we'll discuss. Now, simple. First, section 16. ITC chapter, purely we are going to discuss conceptually, and we are going to quickly revise the provisions. Listen carefully. Without knowing the provisions, you cannot do the adjustments in the problems. Now, sir, section 16. 16 is having 4 subsections. Subsection 1, very small subsection. It says, sir, when you are eligible for ITC, sir, you are eligible for ITC if you are a registered person. And whatever you are buying, you are using it for business or you have intention to use it for business, then you can take ITC. Obviously, you know, when we buy something, we can take ITC, but you should be registered under GST when you are buying, and whatever you are buying, that you should be using for business or you should have intention to use it for business. The word intended to be used, the relevance is, please understand, when you purchase 1000 kg raw material, you need not spend entire 1000 kg raw material immediately in the production. Even though you have used 1000 kg, out of 1000 kg raw material, you have used 200 kg raw material and 800 kgs is lying in stock, still you can take ITC for entire 1000 kgs, because 800 kgs whatever you have kept in stock is for intention to use it in business you are having, correct? So they are intended to be used in business, so happily you can enjoy ITC. Am I clear? So you are a registered person using it for business or you have intention to use it for business, happily you take ITC. Clear? That is 16 subsection 1. Simple. With this we are done with this first subsection, 16 subsection 1. Right. So with this we are done with section 16 subsection 1. Am I clear, my everybody? So that is what 16 subsection 2. Next, let us move on to 16 subsection 2. 16 subsection 2 is regarding conditions for availing ITC. Conditions for availing ITC. Sir, what are the conditions for availing ITC? Sir, I am a registered person, sir. To claim ITC, even though you are a registered person, even though you are using it for business, we have certain extra conditions for you to satisfy to claim ITC. So what are the conditions? Let us see. 16 subsection 2 says that to take ITC, you should be having the tax invoice with you, sir. You can call it as tax invoice or you can call it as debit note, or you can also call it as tax invoice issued by supplier, tax invoice issued by recipient. When recipient will issue tax invoice, in case of RCM supplies, if the supplier is unregistered, or if you are having debit note or bill of entry revised invoice document issued by input service distributor, this is your CA final syllabus. Sir, you should have the relevant document in your hand to claim ITC. Simple. Possession of tax invoice, or I can say possession of documentary evidence, you should have to claim ITC. But here the important thing is, listen carefully. In the questions, you will get some adjustments. In the adjustments, they will say you have ITC of 10 lakh rupees, but out of this 10 lakh rupees, whatever the invoices are there, some invoices are missing. 1 lakh worth invoices are missing, on which GST paid is 1 lakh. That much worth the GST of invoices are missing. Can you take ITC? In the question, there will be like 10 lakhs GST paid, but out of that 1 lakh GST paid invoices are there? No, they are missing. Can you take ITC? Means no. That means how much ITC you can take? You can take ITC only for 9 lakhs. So I repeat, simple. When you are availing ITC, you should have the documentary evidence. This is first condition. And the documentary evidence will be any of these things. Okay. Now, sir, the another condition is, of course, everybody here, you should be knowing that, sir, supplier first will file his GSTR1. And that supply, the sale, outward supply, the sale should be reflected as purchase to the recipient in his GSTR 2B. Sir, whatever the sale has been made, if it is reflected in the GSTR 2B of the buyer, then only you can avail ITC, otherwise you cannot avail ITC. There can be some questions where you will be seeing some purchases you have made are not reflected in GSTR 2B. Can you take ITC? Guys, please remember, if it is not reflected in your GSTR 2B, you cannot take it as ITC. Please understand that. Am I clear? You can understand. You can just remember this. No ITC is available if it is not reflected in GSTR 2B. There are some old laws where that will allow 10% of ITC or 5% of like that, 20%, all that. If you see any question with that answer, that is a old provision and old answer. Now the current, the latest one, the only one is nothing but, if you see the purchase in 2B, then only you can take ITC, otherwise you cannot take. So what is the condition here? Your supplier should have filed his GSTR 1 and it should be reflected in your GSTR 2B. Then you can happily enjoy ITC. Then you can happily enjoy ITC. Hope I am clear. Okay, this is the next condition. Now, sir, department gave me some notice, sir, because I have committed some fraud or I have committed some willful misstatement or suppression of some facts. Because of that, I did not pay some GST taxes, all that stuff. Now they gave a notice. And because of that notice, because of that demand they made, I have paid GST, sir. Can I avail that as ITC? Hey, stupid fellow, how can you take it as ITC? You cannot take it as ITC, Ra. Are you able to understand, ma? Because you have already made some fraud, willful misstatement, or suppression of facts, and they are asking you to pay GST. You are like, okay, sir, I will pay GST, and later on I will take ITC. That is not possible. Okay, any taxes paid because of demand, because of fraud, willful misstatement, or suppression of facts, you cannot take it as ITC. That is what the point. Next, as we have already discussed this point, in section 16 subsection 2 clause AA, and in the rule they have given that. So that is nothing but, again, that supplier should have filed his GSTR 1 and the same thing should be reflected in his GSTR 2B, then only recipient can avail ITC, right? So we have seen these conditions, guys. We are discussing conditions for availing ITC, section 16 subsection 2, along with some rules. Okay, so first you should have some documentary evidence with you. Next, we have seen the supplier should have filed his GSTR 1 and the recipient should have got it in his 2B, then only you can take ITC. And incidentally, we have seen in the rule, sir, any taxes you have paid by willful fraud or willful misstatement or fraud or suppression of facts, because of that any demand notice you got, and because of the demand notice you are paying taxes, and that taxes whatever you have paid because of the demand notice, that cannot be taken as ITC. Next, the next condition is very important condition. Actually, guys, all these conditions will be used as adjustments in the problems. Please be careful. Actually you should have received the goods or services, or both. Sir, I have purchased the goods or services, sir, I have made the payment, sir, I have got the invoice, sir, that fellow filed GSTR 1, I got that in my GSTR 2B. All these things I don't care whether you have received actually the goods, actually the services, or not. That is what another triggering factor. That means apart from all these conditions, you should also satisfy this part also. What is that part? The part is nothing but you should have actually received the goods or services. Suppose I am placing an order for a laptop and I have made the payment, I got the invoice, and I got that reflected in 2B also, but I have not taken the delivery of the laptop. That is not in, like, that is still in transit. I have not taken the delivery. Can I take ITC? The answer is no, you cannot take ITC. The law says you can take ITC only when, only after the receipt of goods, then only you can take ITC. That is what the point. Now there will be a doubt, sir. The doubt is, what if I am receiving them in lots or installments? Remember, all the goods which are covered under single invoice, all the goods which are covered under single invoice coming in multiple consignments, only after the receipt of last lot or last consignment you can avail ITC. Otherwise you cannot take ITC. I repeat, the condition is all the lots when you receive, then only you can take ITC after the receipt of last lot. In the questions there can be a situation where they say that goods are still in transit, or out of 4 lots 3 lots have delivered and the last lot will come in the next month. So this way they will be testing in the questions. So you should be careful only after the last lot. But one triggering word is they should be covered under single invoice. Please understand that. The 10 consignments, 10 lorries are coming, sir, but for all the 10 consignments we have 10 different invoices. Then this provision itself is not applicable. 4 lorries delivered, 4 invoices goods, then take ITC. 6 lorries yet to come, they are related to another 6 different invoices. For them this provision is not applicable. Please understand, single invoice coming in multiple lots. Okay, then only this provision, only after the last lot or installment you can take ITC. Clear? So parallelly I am teaching you how the adjustments will be given in the question and how to approach that. Okay, next, what is next one? Yes, here we are. Okay, 16 to BA. So what is that next one? ITC reflected in 2B has not been restricted under section 38. That means understand this is something crazy actually. Sir, if it is reflected in 2B, you cannot take ITC straight away. If it is reflected in 2B and if it is not restricted, if it is not restricted under section 38, then only you can take ITC. What do you mean by that? In section 38, they have made the provisions in such a way. I repeat, in section 38, they have made the provisions in such a way. If you are buying the goods from a new registrant, or if you are buying the goods from a person who has defaulted in paying taxes, I repeat, you are buying the goods or services from a new registrant, or you are buying the goods or services from a person who has defaulted in paying taxes, or you are buying the goods from a person whose tax liability in GSTR 1 is more than tax liability in GSTR 3B. That means output tax in GSTR 1, what he has filed is greater than 3B, because in filing GSTR 1 there is no need to pay taxes, while filing 3B only how to pay tax. While filing that return, your seller, all his sales details he has disclosed honestly in GSTR 1, 100 lakh sales, sir. But while filing GSTR 3B, he just have shown, he forgot 10 out of 100 lakhs, he is showing just 10 lakhs. That means GSTR 1, the output tax liability is on 100 lakhs. GSTR 3B, the output tax liability is only on 10 lakhs. That means the output tax is more in GSTR 1 compared to GSTR 3B. From such fellow you have purchased the goods or services. That means understand here, sir, we are punishing the buyer because of the mistakes of seller. What and all mistakes? Sir, he has shown output tax more in 1, sir, less in 3B, sir. Or he has availed ITC more than what is there in 2B. In 2B, we are not talking about us, we are talking about our seller. We have purchased it from a person who has taken more ITC than what has reflected in 2B. Sir, how can I verify all these things? Don't worry, till date this is just in section, this is not been implemented. I mean, the rules regarding this has not been yet framed and implemented as of now. Don't worry, but if these provisions comes into effect, please understand, if they frame the rules, all that stuff, you have to verify the background of the seller. Just like when somebody is going to get married, they will do background verification, right? The same way, when you are going to buy something from any person and pay GST, you should do the background verification. What is the background of this fellow? That means the compliance background, whether he is filing the GST returns properly or not, paying the taxes properly or not, taking the ITC properly or not, all that stuff. Don't ask me how can I go and verify his account, sir. Government will come up with a way. Let us wait for that. Next, he has defaulted in discharging the tax liability as per rule 86B. I repeat, all these are nothing but the defaults committed by your seller. So these are the defaults of seller, sir. These are the defaults of the supplier, and because of that, what will happen? And the ITC for recipient gets restricted because of this. Are you able to understand? Because of the defaults made by the supplier, we are punishing the recipient. You cannot take ITC, Ra. Why, sir? Because your seller is a new registrant, sir, new fellow, Ra, in GST. So let us wait and see how this fellow behaves. Or your seller from whom you have purchased, that fellow is not paying taxes properly. From that fellow you have purchased. Or your seller from whom you have purchased, that fellow is showing output tax more in GSTR 1, less in GSTR 3B. Or your seller from whom you have purchased, that buffalo is claiming ITC more than what is there in 2B. At least you go and teach him. So because of that, I am punishing you. Am I clear, ma? Am I clear, everyone? So that is what the concept. So that way, what is the condition they are trying to tell here? GSTR 2B, whatever is there, yes, you can take ITC. But in the same time, it should not be restricted under section 38. Okay, that is another point. So what is the next condition? The next condition is, sir, your supplier has filed GSTR 1. You tell me, first we will file GSTR 1. We will file the sales. And we will check our GSTR 2B. And we will find our purchases. And finally, what we will do, Ra? We will file the 3B. Pay the taxes. This is how the GST return filing works. Correct, Ra? Sir, your seller, listen carefully. Your seller has filed this, filed by supplier. Now, for recipient, this is reflected. So, what recipient will do? Recipient will take ITC. Correct? Now, who should pay tax here on this GSTR1, whatever the taxes has been paid? The supplier should pay this tax, yes or no? The supplier should pay the taxes, yes or no? Are you able to understand? Your supplier cleverly what he is doing? He is not paying the taxes, he is not filing 3B, then what should I do? So that is what they are trying to tell here. Sir, section 16 subsection 2 clause C says the tax should have been actually paid to the government by the supplier, sir. Then only we give ITC to the recipient. But generally what happens? GSTR1 will be filed by the supplier. It will get reflected in the 2B of recipient. Recipient will enjoy ITC. Recipient will enjoy ITC. But the problem is, sir, this whatever the supplier has given in GSTR1, supplier should file his GSTR3B and pay taxes. What if he has not done that? For that only this particular point has been placed in picture. That is, one second. So what is this concept all about now? They are saying supplier will supply goods to the recipient, and imagine 10,000 worth goods, 1200 GST, 2nd June it has been supplied. So this is happening in which month? June 2023. Supplier is filing June month 2023 GSTR1, but that fellow is not filing GSTR3B. Because supplier has filed his GSTR1 of June 2023, recipient will get that in his GSTR2B, correct? He will get reflected in his 2B, so he has taken ITC. But sir, unfortunately what happened, this supplier has not filed his GSTR3B and has not paid taxes on this. The rule is what? Supplier should have paid tax to the government to take ITC for the recipient. But the supplier has filed GSTR1, not filed GSTR3B. What should I do? So the law is saying, recipient, you please check the GSTR3B filing status of your recipient. Sir, any financial year, whatever the ITC, whatever the invoices, debit notes belonging to any financial year, for that they would have given in one GSTR1. No, the GSTR1 has given you ITC in GSTR2B. You check now supplier has filed GSTR3B or not, whether your supplier has filed his GSTR3B or not. Suppose if he has not filed his GSTR3B by the next succeeding financial year, September 30th. That means I should keep on seeing this fellow has not filed GSTR3B of June month 2023. Let me see, July at least he will file, or whether he will file in August, or whether he will file in September, October. Like that I should keep on seeing. Next financial year 30th September till 30th September of 2024, I should keep on seeing. No, he has not filed. Now the government is asking, Vishnu, you have taken ITC because you got that amount in 2B. But your seller from whom you have purchased, Mr. Virat, has not filed his GSTR1. He has not paid taxes to us, but we gave you ITC benefit. So you please pay back that ITC amount to us. Like that government will ask us. I repeat, supplier Virat has, imagine Virat and Vishnu is the recipient. Virat has sold something to me and Virat has filed a GSTR1. So government has thought Virat will file GSTR3B and will pay taxes. Like that government has assumed, and government straight away gave Vishnu ITC. Vishnu, you enjoy ITC. Like that government gave me 1200. But unfortunately my seller Virat has not paid any tax to the government. Now government will say, Vishnu, don't worry, I am not going to harass you. Wait for some time. Till next year 30th September, you wait and see whether Virat will file his GSTR3B. If he is filing his GSTR3B by 30th September of the succeeding financial year, that is 30th September 2024, you are like, enjoy your ITC, continue. But suppose if Virat has not done that, I will give you 2 months extra time. That is till 30th November, I will give you time. Till 30th November, I will give you time. You pay back that ITC, whatever you have taken, without any interest. But if 30th November, before 30th November, if you don't do that, after 30th November you are doing, no, then Vishnu, I will ask you to pay interest also. That means government will ask me, the buyer, to reverse the ITC along with interest. Till 30th November, they are giving you time. Without interest, you can happily pay the amount. When your supplier has not filed his GSTR1 by 30th September of the succeeding financial year, you should reverse that ITC. That means repay that to the government by 30th November of that succeeding financial year. That means 2 months time they are giving you without interest. If you don't pay that ITC back, then after 30th November, if you are doing it, you are also being punished that you should pay interest. Okay, that is what the story here. Now, sir, what if my seller Virat is filing his GSTR 3B somewhere in the month of Feb 2025? Before 30th November 2024 itself, I have reversed ITC without interest and I just fulfilled my duty. But what if my seller Virat later on, if he files GSTR 3B, possibility is there? No. If he files later on, now you take ITC, you now re-avail ITC. For re-availing ITC, sir, there is section 16 subsection 4, no sir, time limit for availing ITC. That 16 subsection 4 is not applicable here, don't worry. That 16 subsection 4 is not applicable here, don't worry. I repeat, sir, supplier, listen carefully, supplier filed GSTR1 but not filed GSTR 3B. Recipient, it is your duty to check before 30th September of the succeeding financial year whether the supplier will file his GSTR 3B also or not. If he is not filing, recipient, what has to be done, what you have to do, recipient has to reverse the ITC what he has taken by 30th November of the succeeding financial year only. That means 2 months time has been given to you. Without interest, you pay it. Suppose if you pay it after 30th November, recipient, you have to pay interest on that amount. What amount? ITC amount. Okay. But if your supplier has filed that GSTR 3B later on, after some time, after you reversing the ITC, all that stuff, so later on in future, I will allow you to re-avail that ITC. And for re-availing ITC, 16 subsection 4 time limit is not applicable. Understand carefully, 16 subsection 4 time limit is applicable only for availing ITC, only for availing ITC. But here you are not availing ITC, you are re-availing ITC. Okay, that means already availed ITC, then reversed, and now re-availing. So now that 16 subsection 4 time limit is not applicable. Am I clear? So for re-availing ITC, no time limit applicable. That is what the concept. Am I clear with this, ma? So we have discussed section 41 along with rule 37A. This is what the concept we have discussed along with the example, using the example. Clear? Shall we proceed? Everybody respond. Okay, respond more, respond. The chat box is all yours. Okay, the next concept, let us move on to the next concept, another important one, the proviso below section 16 subsection 2 and the rule 37. You are already aware of this rule 37. What is this rule 37 all about? The rule 37 is all about supplier will file GSTR1, recipient will get that in his 2B, even though it is cash sale or even though it is credit sale. Irrespective of that, recipient will see that ITC amount in GSTR 2B, so automatically he will take ITC, correct? Even though it is credit sale, he will take ITC. So what the law is doing, law is trying to protect the supplier. The Vishnu, you have purchased goods from Virat and you have to pay consideration to him. You have not yet paid, you have taken it on credit, but Virat is paying GST to the government without waiting for the money from you, correct? Please understand, if you remember time of supply provisions, time of supply will make you liable the moment you raise the invoice. So even though it is credit sale, supplier is going and paying GST to the government without waiting for the payment, So now law is saying, the recipient, now you are supposed to pay the value and tax both to your supplier. The recipient, you should pay to your supplier both your value and tax within 180 days from your birthday, my birthday, invoice birthday. So within 180 days from the date of issuance of invoice, you should make payment to the supplier, not just a tax payment, but also the value. That means if you have purchased goods worth 10 lakh rupees, GST 1,20,000, you should pay total 11,20,000 to the supplier within 180 days from the invoice. Sir, I will not pay, sir. What you will do? If you are not making the payment, then if you are not making the payment, please understand, you have to reverse the ITC. The recipient has to reverse the ITC along with interest. Are you able to understand? You have to reverse, that means pay back the ITC taken by you, the recipient, along with interest. So the concept is simple. Recipient should make payment to the supplier within 180 days, both the consideration plus GST. Within 180 days, if the recipient is not making the payment, the recipient has to reverse the ITC after the expiry of 180 days. From the date of utilization of that ITC till the date of payment, he will be paying interest. Okay. Now the doubt is, sir, what if only part payment is made? Only part payment is made. I should pay total value plus GST. If I am not paying total value plus GST, I should reverse ITC, fine. But I have paid part of the amount, sir. Part of the amount is pending. Then what should I do? Proportionate ITC to be reversed. For that, I will show you one example. See here. Sir, supplier made a supply to recipient. Value is 1 lakh. GST is 18,000. So credit sale. Supplier has filed his GSTR 1. That has been reflected in recipient GSTR 2B. And the recipient is also availing ITC also, that 18,000. But being credit sale, 1 lakh plus 18,000 both should be what? To be paid to the supplier within 180 days. If not paid, what will happen? If not paid, what will happen? If not paid, sir, the recipient should reverse the ITC along with the interest. Clear? If that is not, if that payment is not done within 180 days. But sir, if I have made part payment, what should I do? So what if like only 60,000 I have paid, sir? Total how much you should pay? 1,18,000. You have paid only 60,000. Please understand, if you have paid only 60,000, balance amount is how much? The total 1,18,000 to be paid. 60,000 is 1,18,000 is payable. Sorry, 1,18,000 is payable. Only 60,000 is paid. Then 58,000 is payable. Correct? 58,000 is including GST. So you do the reverse calculation and extract the GST from that and reverse that amount. Are you able to understand? So if 1,18,000 is not paid, you will reverse 18,000 ITC. But sir, 60,000 is paid, sir. Only 58,000 is balance. This 58,000 is both value and GST, Nora. So now you do the reverse calculation. 58,000 into 18 divided by 118. 18 because GST rate is 18 here. Because GST rate is 18 here, sir, we are doing this way. We are doing the reverse calculation. 58,000 is including GST. So we want to know how much GST is involved there in the balance payment. That much amount you have to reverse. That much amount you have to reverse. So we are reversing it. So how much we should reverse here? We should reverse here 8847 because sir, total 1,18,000 payable, sir, but 60,000 paid, sir. 58,000 is only balance unpaid amount. In that balance unpaid amount, how much GST is there inside? That much GST amount you take out and you have to pay back to the government along with interest. So 58,000 into 18 divided by 118, we will get this amount. This amount should be paid to the government along with interest. Along with interest. Okay, that is what the point. Clear ma this one? Sir, what if I am repaying, sir, everything is done. Later on, supplier is asking me, Vishnu, you have to pay the balance 58,000 and I am paying in future the amount, sir, full amount. Can I re-avail the ITC, sir? Yes, same story everywhere. If you have made the default, you reverse the ITC and later on what? Sir, if you are making the full payment after some 300 days, 400 days, whatever it is, whatever the ITC you have reversed, you can take ITC. Interest, you cannot take ITC. Please understand that interest is, that's all, that is for punishment, and interest you cannot take ITC. Whatever the balance amount is there, GST, that amount you can take as ITC. I repeat, interest portion you cannot take ITC. Only the GST component you can take ITC. Suppose after some 300 days you are making the payment, 300 days, 400 days, 500 days, whatever it is, section 16 subsection 4, time limit, again here it is not applicable because you are re-availing ITC here. You are re-availing ITC here. So for re-availing ITC, 16 subsection 4, time limit is not applicable. Hope it is clear for you. Please respond in the chat box, my everybody. So is it clearer? So the point is what? Simple. Supplier is giving goods or services to you, you should repay him the consideration plus GST both within 180 days. If you are not doing that, you have to reverse the ITC along with interest from the date of utilization of that ITC till the date of payment. If you have made part payment and balance payment, whatever is there, should be considered including GST and calculate it in a reverse calculation and see how much ITC to be reversed. Okay, later on in future, if the recipient makes the balance payment, no matter, like maybe after 190 days, 200 days, 300 days, whatever it is, when he repays, recipient again can re-avail ITC, but interest whatever he has paid, he cannot re-avail ITC. He can only re-avail ITC of the GST component. But for re-availing ITC, 16 subsection 4 time limit is not applicable. Wherever we are talking about re-availing ITC, 16 subsection 4 time limit is not applicable. Clear? So with this, we are done with 16 subsection 2 along with the proviso. First proviso we are done, second proviso also we are done, and sorry, in the second proviso, yes, whatever we are discussing, this 180 days time limit, this 180 days time limit concept is not applicable in 3 cases. It is not applicable in 3 cases. That means whether you are paying in 180 days or not, reverse ITC, all that stuff, we will not ask you to do all this nonsense if it is supply covered under RCM. If it is supply covered under RCM, I will not ask you to pay the amount to the supplier within 180 days, the taxes, all that stuff. We will not bother you. Okay, you enjoy, you are having the freedom now. Or the supplies without consideration, supply itself is without consideration, sir. You will say pay the consideration within 180 days, sir. What is the consideration? Consideration is 0, paid, sir. Okay. And next one, if you remember, like in case of value of supply, just now we have discussed, sir, value of supply, whatever the obligation of the supplier, recipient is going and discharging. That example you remember, I told 10 lakhs and 2 lakhs, 12 lakhs will be the value of supply, like that I discussed. Obligation of the supplier, recipient has went and already discharged. Imagine in the invoice value is 10 lakhs, but supplier obligation I have discharged worth 2 lakhs. So total value of supply will becomes 12 lakhs now, plus GST I should pay. Now you tell me, within 180 days what I should pay? Within 180 days what I should pay? I should pay this 10 lakhs and I should pay this GST. This 2 lakhs I need not pay. For this 2 lakhs, 180 days limit is not applicable because the 2 lakhs has already paid by recipient to some third party. Supplier obligation discharged by the recipient. Supplier obligation discharged by the recipient. That is the reason why it is been added to the value of supply. That is the reason it has been added to the value of supply. But sir, this is already paid. So now 180 days time limit is applicable only for this 10 lakhs and this GST portion, not for this 2 lakhs portion. Am I clear? Everybody understood that? We are discussing that 180 days concept is not applicable for 3 cases. What are the 3 cases? Number 1, the supply is covered under RCM. And number 2, supplies without consideration. Number 3, where the addition is made because recipient has made the payment on behalf of the supplier. Please respond. Clear with that? Clear with those things? So those are the 3 points where 180 days time limit is not applicable. So the condition of payment to be made within 180 days is not applicable in these cases. Okay, please be active in chat box. Why are you just behaving so lazy? So many of you there in live session and you are not responding in chat box. Like and you. Okay, so next, the last proviso, as I was telling already, that payment to supplier within 180 days, we are not doing that and we are reversing ITC. No sir, after 180 days if I make the payment, can the recipient re-avail the ITC? Can the recipient re-avail the ITC? Yes, recipient can re-avail the ITC. Whether section 16 subsection 4 time limit is applicable? No sir, 16 subsection 4 time limit is not applicable. That we have already discussed. Okay, that we have already discussed. Right, so that is also done. So with this we are done with section 16 subsection 2. If you see, section 16 subsection 2 is all about conditions for availing ITC, and each condition is being tested as an adjustment in the problem, so please be very careful, right? So now let us move on to section 16 subsection 3. 16 subsection 3 is simple one. Sir, when you are buying a capital goods, for example, for 100 lakhs you are buying a capital goods, you are paying GST 12 lakhs. You can take ITC of 12 lakhs, correct? But if you take 12 lakhs as ITC, only 100 lakhs should be your cost, and only in future you should claim depreciation only on 100 lakhs, because 12 lakhs already benefit you have taken as ITC. Or no sir, I don't want this 12 lakhs as ITC, then entire 112 lakhs you add it to the cost, you treat it as cost only, don't take ITC, and you claim depreciation on 112 lakhs. I repeat, GST paid on capital goods, you have 2 options: either take it as ITC and whatever the cost is there, on that only you claim depreciation, or whatever the GST portion is there, that you add to the cost itself and claim full depreciation, don't take ITC. Simple. Either depreciation benefit or ITC benefit. I'm only talking about the GST component on capital goods, not about the price. Clear? So that is 16 subsection 3, a small one. Now let us move on to 16 subsection 4. So next 16 subsection 4, and 16 subsection 4 is nothing but time limit for availing ITC. Sir, what is the deadline for availing ITC? See, any invoice or even a debit note which is belonging to a respective financial year, what you should see is, sir, for example, the invoice related to 23-24. Invoice is related to this financial year. No, I forgot to take ITC on this invoice, sir, this month. Let us assume this is something related to August month. I forgot to take ITC in August month. Can I take in September? Yes. October? Yes. November? Yes. December, January, February, March, like that. Any invoice or debit note belonging to a particular financial year, for that, what is the deadline till when I can take ITC on that? Sir, you can take ITC on that till 30th November of the succeeding financial year, or actual date of filing annual return of the relevant financial year. Here, interesting thing is, or the important point is, this is succeeding financial year, here it is relevant financial year. That means that invoice belonging to financial year 23-24 means next financial year 30th September 2024, or actual date of filing annual return of 23-24 financial year, when you are filing that actual date. Out of that, whichever is earlier, before that you should have availed ITC on that invoice or debit note. Okay, and here one interesting thing is, sir, see, I have raised an invoice on 28th March 2024. On that, GST is there 1 lakh rupees. So I have purchased that. So GST component 1 lakh is there. I can take ITC. What is the deadline to take ITC of this GST 1 lakh rupees? Sir, this invoice belongs to financial year 23-24, sir. This invoice belongs to 23-24 financial year. So the time limit is 30th November 2024. Within that, I can take ITC on this 1 lakh, or whenever I file actually the annual return of 23-24 financial year, whichever is earlier, within that time I should take ITC on this 1 lakh rupee. Okay, that is the deadline. Okay, now, sir, the point is, for this invoice I'm also getting a debit note. So we have seen some mistakes in the invoice, or the with respect to the quantity or value, all that stuff. So what we are doing, we are getting a debit note on that invoice also, but the debit note is given on 2nd April 2024. 2nd April 2024. On that, GST is at 12,000. Here now the doubt is, sir, while calculating 16 subsection 4 time limit, here should I take debit note financial year 24-25 into consideration and see succeeding financial year, or should I see the invoice, actual invoice is there, no, that financial year, and calculate 16 subsection 4 time limit? That means for the debit note, what is the relevant financial year? The relevant financial year for the debit note is the invoice financial year or debit note financial year. Which one I should take? You have to take debit note financial year only. So here invoice is belonging to 23-24 financial year, debit note is belonging to 24-25 financial year. While calculating the time limit for debit note, we should see what? We should see debit note financial year only from that succeeding financial year 30th November, or actual date of filing annual return of relevant financial year of the debit note, whichever is earlier. So debit note enjoys its independence. You should see debit note financial year, not the invoice financial year to which this debit note belongs to. Okay, hope it is clear for you. With this, we are done with section 16 along with like all the subsections. So the conditions, the eligibility, the depreciation, and the capital goods, all that stuff, and also this time limit for availing ITC. With this, we are done with section 16. Hope it is clear for you. Now let us move on to the very important concept, blocked credits. Okay. Right, so everybody, we are done with blocked credits, and we have seen section 16 also, and the other in the other videos. Now we are moving into the other parts of section 17. Section 17, the balance parts are like very simple one in your syllabus. So 17, if you see 17 subsection 1 and 2, the analysis I have written here in the flowchart. Simple, nothing but when you are purchasing something, you purchase something and use it for business purpose, you can take ITC. You purchase something, use it for non-business purpose, you cannot take ITC. So you purchase something, part of it business purpose, part of it non-business purpose. Whatever you purchase for business purpose, enjoy ITC. Whatever you have purchased for non-business purpose, you cannot take ITC. This is obvious, you know. And sir, when we are talking about business purpose, the interesting thing is whatever you buy, you should use it only for making, the business should be making taxable supplies, including zero rated supplies. That means you buy something to sell something taxable, then only you can take ITC. I told you various times in class also, like when you are eligible for ITC means, sir, you should have first output tax in your hand, then only I will give input tax in the other hand. So if you are making taxable outward supplies, then only whatever you buy, I will give you ITC. Simple. Not only that, but also if you make zero rated supplies also, that means if you are making exports or if you are making supplies to special economic zone also, you buy something for making these exports, you buy something for making the supplies to special economic zone, I will give you. Clear? So this is the point. So if you are purchasing certain things for making wholly exempt supplies, I am buying something to make exempt supplies, I am buying something to make non-taxable supplies, I am buying something to make nil rated supplies, I am buying something to make RCM supplies. So please understand here, all these are called as exempt supplies for the purpose of 17 subsection 2. That means if it is wholly exempt also, or if it is non-taxable also, if it is nil rated also, if it is supply covered under RCM also, if I am making these supplies, I will not have any output tax in my hand. So because I don't have any output tax in my hand, when I buy something, I cannot take ITC. So for example, if I am a doctor, I am making wholly exempt supplies, healthcare services. So in my hospital, I am buying AC, I cannot take ITC. I am a lawyer, my supplies are covered under reverse charge mechanism. So whatever I supply, I don't have output tax in my hand, my supplies are covered under RCM. So as a lawyer, I purchase anything, I cannot take ITC. Clear? So that is what the point. But if you are buying something for making taxable supplies or including zero rated supplies, that is exports and supplies made to special economic zones, then you can happily enjoy ITC. Clear? So that is what section 17 subsection 1 and 2 together we have discussed to the extent relevant for your level. Now, sir, if you see 17 subsection 4, it says 17 subsection 4 says for banking companies, financial institutions and NBFCs, they are buying various things and making taxable supplies as well as exempt supplies, taxable supplies as well as exempt supplies. So they can go with 17 subsection 2, whatever is proportionately used for taxable, they can take ITC. Whatever has been used for exempt, they will not take ITC. But in 17 subsection 4, we are giving an option to them. What is that option? I repeat, they can either go with 17 subsection 2 or 17 subsection 4. In 17 subsection 2, it says, to the extent it is related to taxable supplies, whatever you have purchased, you can take ITC. To the extent it is related to exempt supplies, whatever you have purchased, you cannot take ITC. So that is what section 17 subsection 2 says, along with rule 42-43, that is not there in your syllabus, it is CA final concept. Now, for them we are giving an extra option, that extra option is 17 subsection 4. What it says now, for banking companies, financial institutions and NBFCs, whatever you buy, you take ITC on them, but flat 50% only I will give. I will not give you 100% ITC. So if you see the analysis of 17 subsection 4, simple. If you are a banking company, NBFC, financial institution, if you opt 17 subsection 4, if you buy anything which is given in 17 subsection 5, 0% ITC, block the credits, you cannot take ITC. But if you purchase anything else from outsiders, again, I will not ask you the question whether you are using it for taxable purpose or whether you are using it for exempt purpose. I will not ask any such question. I will give you flat 50% ITC here if you are purchasing anything from outsiders, or if you are purchasing anything from your own distinct persons. DPs means in the sense here distinct persons. That means Urta Punjab National Bank is taking the services from Urta Punjab National Bank Mumbai branch. So Chennai branch is taking services from Mumbai branch. So it is distinct person. From those people, if you take anything, of course there is GST schedule 1, para 2, supply between distinct persons without consideration. So there, in such cases, I will give you full 100% ITC. That means what is the analysis of 17 subsection 4? You are a banking company, financial institutions, NBFCs, opting 17 subsection 4 option, 0% ITC will give you on 17 subsection 5 purchase. If it is purchase from anybody else other than 17 subsection 5, anybody else, outsiders from them, if you are purchasing something, I will not ask you any question how much you are using for taxable purpose, how much you are using for exempt purpose. I will not ask any such questions. I will give you flat 50% ITC. And if you purchase anything from your distinct persons, I'll give you 100% ITC, enjoy. So that is what 17 subsection 4. If you feel 17 subsection 2 is beneficial for you, go with that. Or if you want 17 subsection 4, you go with that. But this option is available only for banking companies, financial institutions and NBFCs. Clear? And options once in a financial year only you can exercise. So once it is exercised, it is applicable for the entire financial year. That is what it is. Clear? This is 17 subsection 4. So with this we are done with section 17. Simple one. Okay ma? Right. So let us move on to the next section, section 18. There is one small question also on this 17 subsection 4. Small example. So you can just go through that. You can pause the video and go through that. A simple question just for your understanding. That's all. Okay. So you can just pause the video and go through that. Right. So with this we are done with section 17. Subsection 1, 2 and 4. 3 is not relevant for you. It is a bit complicated thing which is there in CFNL. At your level it is not relevant, so don't worry about that. 17 subsection 5 we have already seen in another video, right? So with this we are done with section 17. Let us move on to section 18 in another video. Thank you. So now listen carefully. 17 subsection 5. In this video we are going to see the concept of blocked credits, and very important concept at any level, and of course even in practice also. What is this blocked credits concept, everybody? What do you remember by the word blocked credits? The blocked credits means what, sir? Some purchases, whatever has been given in section 17 subsection 5, the purchases which are given in 17 subsection 5, those purchases if you are making, even though you buy them for business purpose, still you cannot take ITC. I repeat, the goods or services whatever has been specified in this section 17 subsection 5, for you ITC is not available. Even though you are satisfying all other conditions for availing ITC, you cannot avail ITC here. I will not give you ITC because it is given in 17 subsection 5. Okay sir, what are the purchases? Simple, the first one is motor vehicles are not eligible for ITC, and not all the motor vehicles are motor vehicles whose seating capacity is less than or equal to 13. If you buy such motor vehicles, even though you buy it for business purpose, you cannot take ITC. That means, for example, for company we are purchasing a car for the use of the company, for the use of the director. Can you take ITC? No sir, it is less than or equal to 13 seating capacity. No, you cannot take ITC. Please understand, here not all motor vehicles covered, only the motor vehicles which are transporting the persons with seating capacity less than or equal to 13. But first, sir, what do you mean by motor vehicle, sir? That will be one doubt for us. First of all, we have understood, sir, motor vehicle which will carry persons, not goods. That means lorry is not covered here. Sir, motor vehicles with greater than 13 seating capacity not covered here. Are you understanding that point? So you cannot avail ITC if motor vehicles less than or equal to 13 seating capacity. If you buy for business purpose also, you cannot take ITC. But the interesting thing is there are some exceptions here. The exception says if you are buying anything for transporting the goods, motor vehicles for transportation of goods like lorry, trucks, all that stuff, you can take ITC. Sir, my business itself is travels business, sir. For that I am buying Innova car or some Honda City car for transporting the persons, transporting the passengers, sir. For that, can I take ITC, sir, if I buy a car which is less than or equal to 30 seating capacity? Yes, you can do that. So goods transportation vehicles straight away not given in 17 subsection 5, you can take ITC. But passenger transport vehicles which are less than or equal to 13 seating capacity, if you are buying it for your business, which business? Business of transporting the passengers. Guys, understand, here the exception is given. You can avail ITC based upon the business. What is your business? Your business is passenger transportation business. That is the reason. Travels business, you are buying a car, yes, you can happily take ITC. No sir, my business is further supply of such vehicles and conveyances, sir. What do you mean by that? Sir, I am dealer in cars. Let us assume you are dealer in cars and you are buying cars. Can you take ITC? Yes, you can take ITC because your business itself is buying and selling that conveyances, so you can take ITC. Yes, you can take ITC. Or sir, I am running a driving school. 1 second ma. So if you are buying the motor vehicles, for what business, sir? For what business? So for imparting the driving skills, sir. Here this flying, navigating should not come actually. So if you are buying the motor vehicles or conveyances for driving, imparting driving skills, that means you are running a driving school. For that you have purchased the car. Can you take ITC? Yes, you can happily take ITC. For example, you are starting a scooty driving school and you are purchasing scooties. Can you take ITC? Yes. But normally, if I buy for my company Royal Enfield bike, I cannot take ITC. If I buy a scooty for my office boy, I cannot take ITC. But here you can take ITC because you are imparting training on driving such conveyances. Okay, so these are the exceptions. So motor vehicles with less than 13 seating capacity, if you buy, you cannot take ITC generally. But if you are buying that for which business, passenger transportation business, or for further supply of such conveyances, that means you are dealer in cars or dealer in bikes, or for further resale you are buying that, then you can take ITC. Third one, if you are buying it for driving school, then also you can take ITC. But in 17 subsection 5, only passenger vehicles they have discussed. So happily, when you are buying any goods transportation vehicles, you can happily enjoy ITC without any restriction. But one interesting thing here is, sir, what do you mean by motor vehicle, sir? What do you mean by motor vehicle? Because you said motor vehicles you cannot take ITC, correct? So we should know the meaning of motor vehicle. Sir, what is the meaning of motor vehicle? Motor vehicle is not defined in GST, but it is defined in Motor Vehicle Act 1988. The same definition we are using in GST also. What is motor vehicle? Let us not worry. It is a vehicle which is like run through motor and which has been getting that energy through whatever the source. It can be petrol, diesel, or electricity, whatever it is. So please don't misunderstand. EV vehicles are not motor vehicles. They are also motor vehicles. The source of energy is different. That's all. Okay. We are not worried about here what is motor vehicle. We are only worried about which are not motor vehicles. Motor vehicle definition does not include vehicles which are running on fixed rails, or vehicles which are specially adapted or specially designed for using them in a closed premises. Inside a factory only we are using that. For that purpose we have specially designed it or specially purchased it. So any vehicles which are they are using only in the airport or only inside the factory for such things, that are not coming in the definition of motor vehicle. And any vehicle which is having less than four wheels. And another thing is, engine capacity is not exceeding 25 cc. That means less than or equal to 25 cc. These vehicles are not falling in the definition of motor vehicles. That means if you buy these vehicles, you can happily avail ITC. Are you understanding that point? You can happily avail ITC on these things because they are not motor vehicles. Yeah? So I repeat, I have discussed motor vehicles which are not eligible for ITC, which are eligible for ITC also. So one is exceptions we have seen, and next one we have seen certain things are excluded from the definition of ITC itself, sorry, motor vehicle definition itself. So they are not motor vehicles, so automatically they will not come under 17 subsection 5. So automatically when you buy those things for business purpose, you can happily avail ITC. Clear? That is the concept. Okay, now, sir, this is the summary. What are the motor vehicles eligible for ITC? Motor vehicles with greater than 13 seating capacity, which are running on fixed rails, special purpose vehicles, vehicles with less than 4 wheels and up to 25 cc. These are eligible motor vehicles which you buy, you can take ITC. And also in exception cases also, if you buy something, there also you can take ITC. Clear? Now, same logic is even applicable for vessels and aircrafts. You are buying vessels and aircrafts, you cannot take ITC, but you are buying them for making further supply. That means again it is for, you are a dealer in aircrafts or dealer in vessels, then you can take ITC. You are buying an aircraft, selling an aircraft, you can take ITC if you buy the aircraft. You are buying the aircraft for transportation of passengers. Your business itself is transportation of passengers. Example, you can take SpiceJet Airlines. Sir, they buy the aircraft, they can take ITC. If they buy the vessel, they can take ITC. But Vishnu Vardhan is a CEO of a company called Vivard Vivard Software Solutions Private Limited, and Vivard Software Solutions Private Limited is buying a chartered flight for its CEO Vishnu. Can the company take ITC? No, company cannot take ITC because aircraft and vessel you buy, you cannot take ITC. But if you are buying it because you are selling it, that means you are dealer in that for further supply, then you can take ITC. Or your business is transporting the passengers and because of that you are buying that vessel or aircraft, you can take ITC. Now, sir, no sir, I am buying it for imparting this flying and navigating skills. Now you are upgrading your scooty driving school to aircraft flying school, all that. So you are buying an aircraft for imparting this flying skill, or you are buying a vessel to impart the navigating skills. Then you can take ITC. Or sir, I am buying aircraft or vessel. For example, FedEx company is purchasing a chartered flight or a flight, sorry, for transporting the goods. Can they take ITC? Yes, because they are buying it for transportation of goods. So the concept is same. Motor vehicles, here everything the same logic. The exceptions also: motor vehicles with less than or equal to 13 seating capacity, vessels and aircraft. These three people, that they enjoy same exceptions, same concept. If you buy them, even though for business purpose, you cannot take ITC. Clear? That is what the point. Now, for such ineligible motor vehicles, for such vessels and aircrafts, you are getting general insurance or servicing or repairs and maintenance. Sir, the company has purchased a car for its director, sir. When it has purchased, it cannot take ITC. That is an ineligible motor vehicle. On that car, if you take insurance, if you take servicing, if you do some repairs and maintenance, you will be paying some GST, correct? That you cannot take as ITC. That you cannot take it as ITC. I repeat, sir, if I purchase any motor vehicle which I cannot take ITC, if I purchase any aircraft on which I cannot take ITC, or I purchase any vessel on which I cannot take ITC, on those things I am getting general insurance service or repairs or servicing, then even though I paid GST on them, I cannot take ITC of it. That is what the concept. Am I clear? But if you are a manufacturer of such vehicles, or you are supplying insurance services, or if you are purchasing eligible motor vehicles, that means, sir, if I buy car, I can take ITC because I have travels business. If I buy car, I can take ITC because I have travels business. On that car, now if I take insurance, happily you enjoy ITC. On that car, if I take repairs and maintenance, I can enjoy ITC. So I repeat, this is only for ineligible conveyances, ineligible aircrafts, ineligible vessels. If you buy them, if you are taking ITC, then if you take insurance on them also, I'll give ITC. If you take repairs on them also, I'll give ITC. If you do servicing of them also, I'll give ITC. Am I clear? So this is the part. We are continuously discussing in this 4 points, even the upcoming point also, entire thing related to that ineligible conveyances only. You buy them, you cannot take ITC, and of course you get general insurance, repairs and maintenance service on them also, you cannot take ITC. Clear, guys? Conveyances, the motor vehicles we have seen less than or equal to 13 seating capacity, vessels, aircrafts, all the three put together I am talking as ineligible conveyances. Shall we proceed? Everybody clear with this? Respond please. Just give me one confirmation. Okay, now the next one is that same ineligible conveyances you are leasing or renting or hiring to others, sir, that fellow cannot take ITC. Okay, he cannot take ITC. I repeat, you are leasing. So you are leasing now. So long we have spoken about from our end, like we are buying the ineligible conveyance, on that we are taking insurance, we are taking repairs and maintenance, we are taking servicing, all that stuff, and we cannot take ITC. But now the concept is such ineligible conveyances. We have a car, we can take ITC or no, we cannot take ITC when we have purchased. That car we are leasing to somebody, we are renting to somebody. That opposite fellow will pay GST to us. Can he take ITC? No, sir. Sir, we have an aircraft, we have a chartered flight. Can we take ITC? No, sir, because it is logged. That chartered flight or aircraft you are renting to a producer for using for some movie promotion. They are paying GST to us. We are collecting GST. Can that person take ITC on that? No, sir. That means if you are leasing the ineligible conveyances, the opposite person who is paying that lease rent plus GST cannot take ITC. Cannot take ITC. But there are two exceptions. What are the two exceptions? Now, he is taking that on lease, that chartered flight on lease, for giving it on lease. Then he can take ITC. Or he is taking the car on rent. Who is he? The employer, to provide it to his employee. Why he is providing to employee? Because of love and affection over the employee? No, no, sir. Statutory obligation. The law is saying to provide. That is why he is providing. In such cases, but these two are the most common exceptions we'll be seeing in block degradeds. Okay, so please be careful. So the point is, sir, we are leasing. We have purchased some conveyancer, maybe motor vehicle or vessel or aircraft, and when we have purchased it, we cannot take ITC because of section 17 subsection 5. that motor vehicle or that aircraft or that vessel we are leasing to somebody or renting to somebody. That fellow is paying us lease rent plus GST. That fellow cannot take it as ITC. That GST portion, that fellow cannot take ITC. Whatever GST is paying on lease rent to us, he is the buyer, no, he cannot take ITC because that is an ineligible conveyance. Suppose if he is taking it on lease to give it on lease to somebody else, then he can take ITC. Or he is taking it on lease, he is an employer to provide to his employees because of statutory obligation, then he can take ITC. In other cases he cannot take. So that is what the concept. Now coming to the next one. So we are done with the ineligible conveyances, all the stuff. So there are examples also here on the things, so please go through these examples. Just if you are watching the video in YouTube, you can just pause the video, all that stuff, and go through these examples. See, in ITC chapter, especially in this block day credits, I have taken all the examples from ICS study method and given here, mainly to make sure these are very much like what helpful for you to address the adjustments in the problems. Can be useful, maybe same points can be taken as an adjustment in the problem in the questions, so please be careful with this. Okay, right, so that is what the concept. So we are done with conveyances part in block day credits. That is the major part. Remaining things and all small things you can understand. Sir, you are buying food and beverages, or you are buying outdoor catering, beauty treatment, healthcare services, cosmetic and plastic surgery, life insurance and health insurance services, sir. If you are buying these things, for example, there is some business event is happening, some new year function in the office, or some company anniversary is happening, we are taking outdoor catering services. The company is taking outdoor catering services from a caterer. We are paying him 10 lakhs plus GST. This is taken for business purpose only, but still you cannot take ITC. I repeat, you buy food and beverages, you buy outdoor catering, beauty treatment, healthcare services, cosmetic, plastic surgery, life insurance and health insurance. Even though you are buying them for business purpose, you cannot take ITC. But there are exceptions. Of course, there are exceptions. What are the exceptions? Now, if you are buying them to provide similar category of outward supply, sir, I am buying outdoor catering service to give outdoor catering service, sir. Or I am buying outdoor catering services to provide to my employees because it is a statutory obligation, sir. If you see, I got a catering contract. In the catering contract, I am providing catering contract services to a company. Company cannot take ITC on this, but I am also giving a subcontract to another fellow who will supply the desserts in that event. So I am buying outdoor catering services to provide outdoor catering service. I can take ITC here, but the company is buying outdoor catering services from me. They cannot take ITC. They cannot take ITC. I repeat, I am buying outdoor catering services to give the outdoor catering service to company. So I can take ITC. But company has purchased outdoor catering service from me. No, they cannot take ITC because 17 subsection. Or, sir, there is one more exception. That is, suppose food and beverages you are buying, you are providing to your employees. Can you take ITC? No. But sir, I am providing the food and beverages or outdoor catering or life insurance, health insurance, these type of things to my employees, not because the love and affection I am having on employees, sir, because the law is saying to provide. I am a mining company. There are so many laborers working under the mines. The law says take insurance on them. So I am taking, sir. So I am paying insurance premium, sir. Can I take ITC of that? Yes, you can take ITC of that. Sir, I am having an industry factory, sir, somewhere in the outskirts of the city. My labor are coming daily early in the morning and starting their work, sir. The factory's act says you should supply food and beverages to them. That is the reason why I am buying food and beverages to supply to my employees as a part of statutory obligation. Can I take ITC of that, sir? Yes, I can take. See, understand? Generally, you buy those food and beverages, outdoor catering, healthcare services, insurance services, everything. You cannot take ITC, but you are buying them to give similar category of outward supply. That means buy them to sell them. Same thing. Similar category of outward supply. You can take ITC. No, you buy them for what? To give to the employees. Why you are giving to the employees? Because you love your employees so much? No, 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 sir. It is just because of statutory obligation. Clear? So then also I can take ITC. Clear? Hope it is clear for you. Next. Membership of a club, health or any fitness center, we will pay membership fees plus GST. Can we take ITC? No, sir. But what is the exception? If you are an employer taking it for your employee as a part of statutory obligation, which laws will say to take membership of a club or health and fitness center for the company? If you know anything, please let me know also. Clear? So that is what the exception. Next, travel benefits you might have read in your income tax. So leave, travel concession, all that stuff. For that, the employer is booking some hotel bookings or travel tickets, all that stuff, and paid GST. Can the employer take ITC? No, he cannot take ITC because he is using them for providing travel benefits or leave travel concession. But if he is providing it as a part of statutory obligation, he can take ITC. Same exception. Clear? So all the examples are there here. You can just pause the video and go through that, or whatever it is, like you can do it. So ICS study material examples only, everything you can go through ICS study material also, no issues. Now, so the next one, the interesting one or important one, I have mixed two entries here because both of them are having same exceptions. We are going to construction related one. Everybody clear till now? So I have clubbed two entries here together because both are having same exception actually. So what are the two entries now? Please understand. First, works contract. What do you mean by works contract? Works contract is both material and labor, both you are giving for construction of an immovable property. So now I am going to a contractor asking him to construct my factory. He is charging 10 crores plus GST. Can I take ITC of that? No. Even though, see for example now, KGF Factories is appointing a contractor, Mr. Rocky Bhai, who is constructing KGF factory. He is only bringing material, he is only bringing labor. You know his labor force. So he's only bringing material, he's only bringing labor, and he's charging 100 crore for the construction, and he's charging 18 crores GST, for example. KGF Factory Private Limited cannot take it as ITC because it is blocked credit. Are you able to understand, ma? Because it is blocked credit. Because it is blocked credit, they cannot take ITC. Hope it is clear for you. Okay. Shall I continue? Shall I continue? Now, sir, the point is there are exceptions. What are the exceptions now? First exception, please understand, first exception, if this is taken, listen carefully, if this is taken for providing the similar category of outward supply. So first one, similar category of outward supply. That means Rocky Bhai is getting works contract services from Garuda. He is subcontracting some portion of the work to Garuda. Garuda is providing works contract services to Rocky Bhai. Why Rocky Bhai is taking the works contract services to provide works contract services. So Rocky Bhai can claim ITC here. Are you understanding the point? You buy that to provide the similar category of outward supply. You buy works contract services to provide works contract services. You can take ITC. Next. Here KGF Factory Private Limited is not buying the works contract services to provide works contractor. They are buying it for their construction of their factory. Even though it is factory, even though it is your company building, you cannot take ITC. Please understand that. Next, sir, the exceptions are to provide similar category of outward supply. Yes, you can do it. Sir, if it is for construction of plant and machinery, then ITC will be allowed. See here, plant and machinery, the definition says it means any apparatus, equipment, machinery fixed to earth by foundation or structural support that are used for making the outward supply of the goods or services or both, and includes the foundation and structural support. Any apparatus, equipment, etc. what you are constructing for making any outward supply of goods or services is called plant and machinery. And not only that, sir, but also it includes the foundation or structural support you are constructing, no, for any plant and machinery, that is also called as plant and machinery. But so for plant and machinery, can you take ITC? Yes, you can take ITC for plant and machinery. If you are taking works contract services for plant and machinery, you can take ITC. But plant and machinery does not include, sir, it excludes land, it excludes building, it excludes any civil structures, it excludes telecom towers, it excludes any pipelines outside the factory. That means these cases, this is not a plant and machinery, so you cannot avail ITC. Please understand that you cannot avail ITC here. Are you able to understand? Are you able to understand? These cases you cannot avail ITC because they are not plant and machinery. Here the interesting point is pipelines laid outside the factory. Sir, what if I lay the pipelines inside the factory? Inside the factory means it is plant and machinery only. Yes, you can take ITC. In the question adjustments, you will be seeing inside the factory, pipelines laid inside the factory, like that you will be seeing. So inside the factory means you can happily take ITC. Am I clear till now? I repeat, we are discussing about works contract services. Works contract means related to immovable property, both material and labor. If you buy, you cannot take ITC. You purchase it for constructing your factory, purchasing that for constructing your company building, anything, you cannot take ITC. But exception number one is you buy works contract service to give works contract service, you can take ITC. Or you buy the works contract service for construction of plant and machinery, you can take ITC. Or the last one is, sir, you take that works contract services which you have not capitalized, you can take ITC. What do you mean by that? What do you mean by that? Sir, that works contract is revenue expenditure, sir, revenue expenditure, then you can take ITC. If the works contract is revenue in nature, you can take ITC. Am I clear? Now you may get a doubt. Now you may get a doubt. Sir, whatever the construction activities we are doing, we will just not capitalize it, sir. We will charge it to P&L. If you do that, your statutory auditor will kill you. So please understand that they are trying to tell here regular repairs or etc. you do to the buildings or any other things. Sir, if it is a revenue expenditure, for such type of things I will allow you ITC. For capital expenditures and all, please don't ask me ITC. Am I clear? Because if I give you ITC here, you keep on adjusting that throughout your life. So much of GST you would have paid there, and that with that ITC you will be like going throughout your life adjusting the output tax. So if it is revenue expenditure only, please ask me, I'll give you it. Clear? Now here the doubt is, sir, if it is works contract, that means I am buying both material also, labor also, then you are doing this. What if I buy labor separately and material separately? That means I will construct it on my own account. I buy the goods whatever needed, I buy the services whatever needed, I take the labor whatever needed, and then I will proceed for construction. So here, instead of giving the works contract to Garuda, instead of giving the works contract to Rocky Boy, here I will only bring the material and I will just pay Rocky Boy for the labor whatever is supplying, any other services whatever needed, I will procure them and I will construct on my own account. Now can I take ITC? Now also you cannot take ITC. That is what the second point here. That is what I told you, a different entry I have clubbed here. Both are talking about the same concept. One is works contract, one is works contract. This is construction on his own account. Construction on own account. That means here in works contract you are talking about both material and labor. Here everything on your own. Material you will separately purchase, labor everything you separately purchase, and you pay GST. Then also I will not give you ITC. Then also I will not give you ITC. Please understand. Works contract also I will not give you ITC. Own account also I will not give you ITC. But exceptions are same. What are the exceptions? Exceptions are same. I repeat, exceptions are nothing but you are buying bricks, iron and steel, cement, everything to supply the construction services to somebody else. Then you can take ITC. You are buying this bricks, iron and steel, labor, all that stuff for what? For construction of plant and machinery. Then you can take ITC. Or I am buying this bricks, cement, iron and steel, all that stuff, labor, everything, all the services which are for revenue expenditure. Then I can take ITC. I repeat, both points are talking about same thing. One is works contract, the other is construction on own account. In these two cases, even though you are constructing your factory building or company building, you cannot take ITC. But the exceptions are similar category of outward supply, plant and machinery, and revenue expenditure. But plant and machinery excludes these things: land and building, civil structures, all that stuff, telecom towers, next to pipelines laid outside the factory. So these three are not plant and machinery. So if you buy them, you cannot take ITC. I mean, you buy the works contract services or some other construction on your own account. For these things you cannot take ITC. Hope this entry is clear. Little bit more technical. So here there are examples for that also. So this is for works contract. And this is for construction on own account. Construction on own account. Okay, that is what the concept. Shall we proceed? Everybody, shall we proceed? Right. So that is the next one. Now the next one is regarding inward supplies. Sir, If you are purchasing something from composition taxpayer, can you take ITC? Ra? If you are buying something from composition taxpayer, you have not paid any tax to that composition taxpayer. Sir, but my composition taxpayer from whom I have purchased the goods, that fellow has paid GST to government. No, sir. You only told GST paid to the government. Now you can take ITC. If you have purchased anything from composition taxpayer, you cannot take ITC. Simple. You cannot take ITC. Clear? Next, if you are a non-resident taxable person, whatever you buy, so purchases made by non-taxable person, purchases by not from purchases by non-resident taxable person. You know, non-resident taxable person who doesn't have fixed place of business or fixed place of residence anywhere in India. That fellow is coming to India to do some business. He is buying some goods or services in India and paying GST. Can he take ITC? No, he cannot take ITC. He can take ITC only on whatever the goods he has imported. On that he can take ITC. Guys, understand, this left side column is full of blocked credits. The right side column is the exceptions. Okay, so if you see, this is full of on which ITC is blocked, and this is full of exceptions. So here no ITC, here you can claim ITC. Okay, so that is what the concept. So now if you are a non-resident taxable person, you cannot take ITC on whatever you purchase except the goods you have imported. Okay, next one. What is next one? Sir, you are buying something, sir, maybe the goods or maybe the services or both. For what? To use them for corporate social responsibility activities. Corporate social responsibility means no output tax generated by you. Why should I give input tax to you? So whatever you buy, goods or services, using them for corporate social responsibility, sir, you cannot take ITC. And whatever you buy for your personal consumption, I am buying a blazer, sir, so that I can attend a meeting, I cannot take ITC. I am buying a watch, sir, so it looks more professional, so to attend the meetings, all that stuff, it gives me some an appealing look, all that stuff. For that I am buying the watch, I am paying GST. Can I take ITC? No, sir. So whatever you buy for personal consumption, you cannot take ITC. Am I clear? You cannot take ITC. Sir, I am buying a laptop for my house, sir. Or I am buying an AC for my house, sir. I am buying an TV for my house. Can I take ITC? No, sir. That is for personal consumption. You cannot take ITC. Am I clear? Next, not only that, this is another important thing: goods lost, stolen, or destroyed, or written off. These things you should be focused not only in this like syllabus, but also when you go for the audits, all that stuff. You should see if goods anything are lost or stolen or destroyed, written off, or disposed of by way of gifts or free samples. You'll be seeing, I'll buy certain gift items during Diwali and give to my clients. I'll buy some stationaries or dairies, etc., etc., and I will be gifting it to my clients on New Year. So whatever I have purchased, I would have paid GST on them, but I'm now giving it as gift or a free sample. ITC is blocked there, so reverse the ITC. So that way, any goods lost or destroyed, maybe some fire accident in the godown, stock has been destroyed, ITC is blocked, so you would have already taken ITC. Now you reverse the ITC. So that is what the concept. So please remember, goods lost, destroyed, or written off, or disposed of, whatever it is, by way of gifts or free samples, you cannot take ITC. That is what the concept here. Clear? And anything, any taxes you are paying under section 74 or 129, 130, which are nothing but related to tax paid because of evasions or upon the determination of goods or conveyances in transit or towards the redemption of confiscated goods and conveyances, that is not there in your syllabus, all that sections. So don't worry, just remember these numbers: 74, 129, 130. Because of that, if you pay any GST, you cannot take it as ITC. You cannot take it as ITC. Hope it is clear for you. Shall we proceed? So with this, we are almost done with block credit, except that small clarifications, all that. Clear? Am everyone comfortable till now? So that is what the list of block credits. Now there is a small clarification. Actually, the clarification is, sir, when we buy some goods, after some time expiry or etc., etc., we'll be returning the goods. No, sir, the time expired goods are returned to the actual manufacturer, all that stuff. So what should I do, sir? What is the tax treatment? Like that, there was a doubt, and the clarification was given by the department, saying that, so if at all anything, any goods you have purchased and you are returning them because they are time expired, all that stuff, when you are returning the goods, treat it like a fresh supply. Raise a new invoice on the opposite fellow. Opposite fellow, what he will do, he will take ITC of it if he is using them for any business purpose, and again just like what using it as raw material, etc., etc., and doing that. But if the opposite fellow is taking them back and destroying, he will not take ITC. For you, what you should do, you are returning the time expired goods. You raise a tax invoice, treat it like a fresh supply. When you have purchased how much ever you have paid, the same amount you charge now in the invoice. The same amount you charge now in the invoice, and you raise a fresh invoice, charge GST and pay to government. Opposite fellow, if he has any use with them, he will take ITC. If he doesn't have any use and he is going to destroy them, obviously he will not take ITC. Simple, clear? That is what the clarification here. And there is some examples like buy one get one offer, all that, samples, gifts, all that stuff. In such cases, what about ITC, sir? Na? Sir, any samples or free gifts if you are giving, for that if you buy anything, obviously you know ITC is not available in such cases. Sir, buy one get one free. In case of buy one get one free offers, sir, what is happening? You say buy one get one free, but for me, for one price I am getting two number of quantities, correct? So in that case, obviously there is GST and you can happily enjoy ITC. There is no restriction there. Buy more, save more, there also there is GST, obviously ITC will come into picture, so you can happily enjoy ITC, no restriction, nothing. Secondary discounts, whatever has been given, please understand, in that cases they are not known at the time of supply. If you remember, we have discussed in value of supply, they are not known at the time of supply, so obviously there is no concession or there is no relaxation in GST for you. So the output tax is there for giving that secondary discounts, etc., etc. Also, whatever you have purchased, you can enjoy ITC because you have generated output tax liability. So simple, understand that you have generated output tax, now you enjoy input tax, otherwise no input tax in these cases. 17 subsection 5 is a scenario where you buy certain things, even though you are buying it for business, I will not give you ITC, but still there are certain exceptions there. Right, so that is what all about blocked credits. You have some good problems also in your ICA study material on blocked credits, you can refer that. So that is what all about this video. We are done with blocked credits. So yes, let us move on to the next one, section 18. Section 18, ITC in special circumstances. In section 18, for us the main important things are section 18 subsection 1, subsection 4 and subsection 6. These three are very, very important things for us, sir. If you see section 18 in section 18, if you see 18 subsection 1 will talk about avail ITC in special circumstances. Subsection 4 will talk about reversal of ITC in special circumstances. Subsection 6 will say that is also about reversal of ITC. Listen carefully. Now, what is 18 subsection 1 talking all about? 18 subsection 1 is talking about, sir, availing ITC in special circumstances. What do you mean by that, sir? Availing ITC in special circumstances. Sir, there are 4 circumstances where you can avail ITC. Clause A, Clause B, Clause C and Clause D. Sir, what is that they are trying to tell here now? See, if you are a person who became liable for registration, and applying for registration. Sir, if you became liable for registration and applying for registration within 30 days, sir, please understand, so long you have been doing business, you have purchased so many things, but you never claimed ITC. But now today you became liable for registration and you are applying for registration within 30 days. So I want to give you one small offer. What is that offer? Now, so long whatever you have purchased, you have not taken ITC. Why? Because you are unregistered person. Today, when you are becoming liable for registration, sir, immediately preceding day, whatever the closing stock is there, I mean, I'm talking about only inputs, not capital goods. I'm not talking about capital goods, I'm only talking about inputs. Sir, whatever the inputs with you lying in stock, lying in work in progress, lying in finished goods, so whatever the inputs are there in stock, work in progress or finished goods, all these things I will give you ITC. So what is the concept here? Sir, any person becoming liable for registration, and that fellow, if he is becoming liable for registration within 30 days, if he apply for registration. Whatever has been held by him in inputs, I repeat, not capital goods, only inputs. We are only talking about inputs. Whatever held by him immediately preceding day of becoming liable to pay tax, okay, that will be eligible for ITC. He can take ITC on them. He purchased them sometime back when he was unregistered, so he was not taking ITC, he was not eligible for ITC. Now I will give him ITC. Clear with that? Now class B is all about. Class A is liable for registration. Class B is all about, sir, that fellow is liable for registration and he is applying for registration. You are giving benefit to him. I am voluntarily registering, sir. I am voluntarily registering, sir. For me, is there any offer like this? Don't worry, for you also the same offer, equally applicable. Same offer, equally applicable. Whatever inputs lying with you in stock, in work in progress, in finished goods, all that stuff, I will give you ITC. Enjoy. Are you able to understand? I will give you ITC. You enjoy. Now the point is, see here the relevant date is important. Here it is immediately preceding day of becoming liable to pay tax, but here it is immediately preceding day of grant of registration. And both the cases no ITC on capital goods. Here also no ITC on capital goods, only inputs. Capital goods not covered. Okay, so I repeat, if you are liable for registration or you are going for voluntary registration, you are liable for registration and apply for registration within 30 days. The date of becoming liable for registration, that preceding day, you became liable for registration on 9th October na, preceding day 8th October. Last September 2024 exam, there was an MCQ on this. Of course, that was on some class C or D, I am not sure. Class C, I guess. Composition scheme to normal scheme, that fellow was coming. So that way, there was one small MCQ question for 2 marks. Sir, became liable for registration, applying for registration within 30 days. Voluntary registration. Both the cases, inputs lying in stock, inputs in work in progress, inputs in finished goods, enjoy ITC. Liable for registration immediately preceding day of becoming liable for registration, but voluntary registration immediately preceding date of grant of registration. That is the deadline for us. Okay, so that will be eligible for ITC for you. So now coming to the class C and D. Class C and D, sir, in class C and D, please understand one important thing is, in class C and D, you are already registered. You should be already a registered person. That is very important, my dear friends. You are already a registered person. So I am giving you one extra benefit here. Sir, if you come out of composition scheme, so long you have been in composition scheme, you have been paying tax from your own pocket, you are not eligible for availing ITC, you are not eligible to collect taxes. But suddenly your threshold limit has crossed the limit, 150 lakhs, 75 lakhs or 50 lakhs, whatever it is. So you are coming out of composition scheme and starting paying taxes at normal scheme. So while coming out of composition scheme, you might be having some stock with you. You might be bringing some capital goods with you. Those things, I will give you ITC, don't worry. But I repeat, inputs lying in stock, inputs lying in work in progress, inputs lying in finished goods. Apart from that, I will also give ITC not only on inputs but also on capital goods. Sir, this benefit is available in 2 circumstances. The class A and B, liable for registration and voluntary registration. Class C and D, class C composition scheme, you are coming out of that and paying tax at a normal scheme. And one more scenario is, sir, you are already a registered person making some exempt supplies. Some of your supplies were taxable, some of your supplies were exempt, so you took GST registration. So now, whatever the exempt supplies are there, for that purpose you are buying something, then you take ITC. No, sir, because I am using them for exempt supplies. So now what I am doing is, whatever the exempt supplies, that tomorrow if they become taxable supply, what should you do? What you will do? Sir, for you I will give you again the benefit. From the date when you have been like in exempt supply, whatever you have purchased, you have not taken ITC. The same inputs now you are bringing and using in normal scheme. The same capital goods now you are bringing and using in normal scheme. Then, sir, the same, see, understand, whatever you have purchased in composition scheme, you have not taken ITC, but you are bringing them to normal scheme and using. Whatever you have purchased in exempt supplies, during exempt supplies, you have purchased them, not taken ITC, bringing them same and using them now in taxable supplies. In such cases, what we are doing is, immediately preceding day, whatever the immediately day of preceding on which you became liable to pay tax at normal scheme, or the immediately preceding day on which your supply becomes taxable, your exempt supply becomes taxable, no, from that relevant date, the immediately preceding date, whatever the inputs lying in stock, whatever the inputs lying in work in progress, finished goods, and also capital goods, So I will give you ITC. Class A and B, here only inputs, but here inputs plus capital goods, inputs plus capital. Here, that is what the concept. Hope it is clear for you. Now the only doubt is, sir, if inputs you take, I have purchased 1000 kg raw material earlier, now I am having 300 kg. Proportionately for 1000 kg raw material, how much I have paid GST that time. Now for 300 kg, how much is related? Proportionately I will calculate and I will take ITC, sir, no problem. What about capital goods? I have purchased an AC during composition scheme. I did not take ITC. I have used it for 7-8 months. Came out of composition scheme to normal scheme. How will you give me ITC? You will give full 100% GST paid as ITC? Yeah? No, Ra, because please understand, I have purchased that during composition scheme and have used it for some period. Now I am coming out of composition scheme to normal scheme. That means I cannot take 100% ITC. I cannot take 100% ITC. So how much ITC is eligible for you? How much ITC is eligible for you? You know that, sir, there is a formula. The rule 40 says, sir, capital goods you have purchased. Generally we'll assume the life of the capital good, no matter how many years you will use, how many months you will use, I don't care. In GST we'll assume the life of the capital good is 5 years. That means 5 years you will use it under GST, so I will give you 100% ITC. This is my thought process. But when you have purchased it under composition scheme, so I cannot give you 100% ITC that time. You started using it and you have used it for, let us assume, some 8 months. Now can I give you 100% ITC? I will give you 100% ITC if you use it for 5 years. But now already you have used 8 months. No. So what should I do? I should minus something. Correct? The 100% GST paid, whatever is the total GST paid, from that I will minus to the extent how much period you have used that capital good already. So what I will do is, sir, 5 years means it is 20 quarters. For 5 years 100% means 20 quarters 100% ITC you are eligible, means per quarter 5% ITC you are eligible. Please understand that per quarter 5% ITC you are eligible. Guys, understand, because this is like a quick revision. I am not discussing deeply the logics, etc. I am just revising the provision, so please don't misunderstand me. So the point is, whatever the GST paid on capital goods, that you can avail as ITC by reducing 5% per quarter or part thereof. That means you should take quarter. What are the quarters available for us? Sir, April to June, July to September, October to December, and Jan to March. You take the quarter financial year wise or calendar year wise, the answer will not change. The answer will remain the same. Okay, so don't worry about that. See how many quarters you have used. It is either full quarter or part of the quarter. In any quarter, maybe in April to June, I have just used 5 days or 10 days or 1 day or 2 days. Still we will treat it as whole quarter, 1 quarter. So every quarter or part thereof, for that how many quarters they have used, you please check, minus 5%. That means 100% GST paid minus 5 quarters used. Now 5 quarters into 5%, 25%. Balance you have to take ITC. Simple. Let us go with this example. Look at this example. Sir, I have purchased a capital good on 28th December 2018, sir. This is coming in Q3, Ama. This is coming in Q3. So I have paid GST 1,80,000 and I am in composition scheme for financial year 18-19, 19-20. So 19-20 financial year, on 6th October 2019, my aggregate turnover has crossed the threshold limit. Now I became liable for registration. Sorry, I became liable to pay tax under normal scheme. Okay, what is the ITC available on capital goods? Sir, for that I have used this in 2018-2019 financial year, 2019 and 2020 financial year. 18-19 financial year I have used Q3 and Q4. Yes or no? I have purchased that on 28th December 2018. 28 December 2018. That means I have purchased it in 2018-19 financial year. I have used it in quarter October to December and January to March. 2 quarters, Q3 and Q4 I have used. So 2 quarters. And when I am coming out of composition scheme, I am coming out of composition scheme on 6th December, October 2019. That means this is again in Q3 next financial year. So next financial year Q1, Q2, Q3, 3 quarters I have used. So totally I have used it for how many quarters? That I have used it for here 2 quarters, here 3 quarters, totally for 5 quarters. So how much GST I can take? Whatever the GST I paid, ITC I can take, whatever the GST I paid, 1,80,000 minus 5 quarters into 5%. Okay, so what is the answer right here? 1,35,000. That means, see, when I have purchased the capital goods, I paid GST 1,80,000, sir. But 100% GST now I cannot take because I purchased this some 8 months back, 9 months back, and now I am coming out of composition scheme to normal scheme. Law will not give me 100% ITC. Law will say how many quarters you have used. For so many quarters, remove 5%, 5%, and take the balance as ITC. So that is what we are calculating. Am I clear? Respond ma, online students, is that clear? Clear? Respond. So the concept is 18 subsection 1, 4 clauses A, B, C, D. A, B says you are becoming liable for registration and voluntary registration. Both the cases you can take ITC only on the inputs. Clause C and D, you came out of composition scheme to normal scheme, or your exempt supply became taxable supply. In these two cases you can claim ITC on both inputs also, capital goods also. Inputs means we can understand, so proportionately whatever the stock is lying with us, we will take ITC on that. But if it is capital goods, whatever the total GST paid, you have used that capital good for some period, so reduce that some portion of amount and take balance amount as ITC. So what is the formula here now? Total GST paid minus 5% per quarter or part of the quarter. So part of the quarter, if you use also, we call it as full quarter, then you should reduce 5% for that. So total GST paid minus 5% of per quarter or part thereof usage, balance amount whatever is there, that much you can claim as ITC. Clear? That is what the concept. There is rule 40 here. There is a procedure to follow that and take that ITC that you can just go through. Clear ma? Respond or be little bit more active in chat box. Getting very few responses. Now one interesting thing is, sir, in 18 subsection 1 you are availing ITC, yes or no? 18 subsection 1 is all about availing ITC in special circumstances. But this ITC we will not give to you for anything like your grandfather or somebody purchased some inputs or capital goods laying with you, and for all those things we will not give you. Please understand, this ITC on inputs or inputs and capital goods whatever is there sorry, on inputs and capital goods whatever are there, we will give you ITC only on the fresh inputs and fresh capital goods. Sir, what do you mean by fresh inputs and fresh capital goods, sir? I mean to say, sir, fresh inputs and fresh capital goods means only those which are purchased not more than 1 year back. That means that 16 subsection 4 talks about time limit for availing ITC. Same way 18 subsection 2 talks about time limit for availing ITC under section 18 subsection 1. See, generally we avail ITC as per normal provision 16 subsection 1 subsection 2, all that stuff. But 18 subsection 1 is giving you luxury to take ITC in some special circumstances. For those special circumstances, you can take ITC only for all that inputs and capital goods which are not more than 1 year old. So from the date of invoice, if 1 year is not expired, then only you can take ITC here. You can just go through this example also. Pause the video and go through this example also, or I'll just explain, sir. Vamsi Krishna started business on 25th June, sir, and he has purchased raw material 2000 kgs, 183 invoice number, and paid GST 40,000. So on 25th June he has purchased. Okay. Now 18-19 he was under composition scheme and continued the same for 19-20 also. On 7th July 2019, his turnover is exceeding the threshold limit and he has a stock containing 50 kgs. Out of this 2000 kgs, he has some 50 kgs purchased with him under that invoice number 183 still lying with him. Can he take ITC of that? So he is coming out of composition scheme to normal scheme. Whatever the stock lying with him immediately preceding day, he can take ITC as per 18 subsection 1 clause C. But understand that this stock whatever is there has been purchased 25th June. For us, we are coming out of composition. That fellow is coming out of composition scheme on 7th July. That means immediately preceding day is 6th July. But that has been purchased 25th June 2018 and this is 2019. This has crossed 1 year. Appa. Everybody, this has crossed 1 year. That means as per 18 subsection 2, you cannot take ITC of this under 18 subsection 1, because 18 subsection 1 ITC if you want, it should be only on the stock or capital goods which is not more than 1 year old. Clear? That is what 18 subsection 2. Hope it is clear for you. Right. So next, 18 subsection 3, 18 subsection 3 just a theoretical aspect, you can just go through that. Simple, nothing but 18 subsection 3 says here two rules are there. Let me just finish it quickly. Sir, 18 subsection 3 says if you are transferring your business to anybody, that means you are selling your business, whatever the ITC balance lying in your e-credit ledger, that ITC balance in your e-credit ledger you can transfer to the person who is buying your business. That means Vishnu is selling his business to Vamsi, means Vishnu can transfer his unutilized e-credit ledger balance to Vamsi. For that I have a procedure to follow. I will fill a form GST ITC 02 and will get it certified by a chartered accountant or cost accountant practicing all the stuff, and I file it electronically. Then my ITC balance from my e-credit ledger, it will be transferred to Vamsi's e-credit ledger. The transfer is e-credit ledger. Clear? That is what the concept. Shall we proceed, my everyone? So that is 18 subsection 3 rule 41, and there is one more rule, rule 41A here. So rule 41A says that, sir, Vishnu is registered in Andhra Pradesh and Vishnu wants to register in Tamil Nadu also, Vishnu wants to register in Maharashtra also, Vishnu wants to register in Delhi also. When he is going for the separate registration, whatever is e-credit ledger balance right now is having in the existing registration, that he can transfer to the new registrations based upon the ratio of assets which are held at the time of registration, based upon how much assets are there in Tamil Nadu and Maharashtra, Delhi, all that. So in that ratio he can transfer that amount. Okay, so rule 41A is enabling. 41 is enabling when you are selling the business, whatever your unutilized e-credit ledger balance is there, that can be transferred to the buyer of the business. That is, transferor can transfer unutilized credit ledger balance to transferee's account. Okay, here in this case I myself I am applying, I am already registered under GST, I am going for another registration. So when I am applying for another registration, for the new registration, whatever the existing registration, in that if I have any e-credit ledger balance, that also I can transfer based upon the ratio of value of assets held by that particular registered units at the time of registration. Okay, so that is what the concept. So 18 subsection 3 is that. So simple. Now coming to 18 subsection 4. Guys, 18 subsection 4 is very simple. 18 subsection 4 is nothing but, you have seen 18 subsection 1 clause C and D, where you are availing ITC if you are coming out of composition scheme to normal scheme, or your exempt supply becomes taxable supply. What if it happens in reverse? You are going from normal scheme to composition scheme, your taxable supply so long is becoming exempt supply. That means in both the cases, understand, you are from normal scheme, you will start paying tax under composition scheme, or your taxable supply now becomes exempt supply. Both the cases, sir, you are enjoying ITC till date, but from now onwards, no, you cannot. So the point is, you might be taking again some inputs and capital goods into composition scheme, or you might be taking some inputs and capital goods into exempt supplies. In this case, just like that time I gave you ITC, no, here I have given you ITC. Here now what you have to do now, in this case you have to reverse the ITC, reversal of ITC. That is what you have to do. Clear? So a registered person who has been paying taxes at normal scheme now goes for composition scheme, or who has been paying taxes and their supplies are taxable, now becomes exempt supply. They have to reverse ITC on the inputs lying in stock, work in progress, or finished goods immediately preceding the date of becoming, like, going into composition scheme, or immediately preceding the date when that fellow's supply becomes exempt supply. Okay, sir, how do you do that? Again the same story. Inputs now proportionate, but what about capital goods? Inputs now, okay, proportionately reverse them proportionately, but what about the capital goods? Capital goods, when I was giving you ITC, availing ITC under 18 subsection 1, proportionately we have calculated quarterly basis, correct? Here what we will do now, we will do it as per rule 44. There we have seen rule 40, here we will be seeing rule 44. What we will do now, for the remaining useful life of the asset on pro rata basis, which is computed on monthly basis, that means what, sir, life of the asset is 5 years. That means how many months? 60 months. Okay, now their quarterly basis we gave ITC, here monthly basis will make you to reverse ITC on capital goods. I repeat, inputs means, sir, in case of inputs what will happen? In case of inputs, proportionately you will understand how much is left and you will calculate how much to be reversed. But capital goods, in case of capital goods, sir, ITC on capital goods shall be reversed on pro rata basis, calculated on monthly basis. You know, for example, Mr. Anil has purchased capital goods and avail ITC 60,000. Why I gave ITC 60,000? Because I believed that Anil will use it for 60 months for generating output tax. But now Anil supply became exempt supply. So what should we do? We should see how many years, how many months he has used. 3 years, 7 months and 22 days. That means fully 3 years, 8 months he has used. That means how many months totally? 3 years means 36 months. And 8 months totally he has used for 44 months. So now balance life, if you see 16 months is the balance life of the asset. For that we have to reverse ITC. Say I gave you ITC assuming you will use it for 60 months for business purpose generating output tax. But how many months you have used? You have used it only for 44 months. So what you should do now? For 16 months whatever is there you should reverse the ITC. For 16 months whatever is there you have to reverse the ITC. That means 60,000 into 16 divided by 60. That will give you 16,000 answer. Just to make the calculations easy, I gave the round figures, all that stuff, so that it will be easy for calculation also. The concept is simple. 60 months you should have used the asset in business, but 44 months you have used. So balance 16 months you will use it under composition scheme, or balance 16 months you will use it under exempt supply. So proportionately reverse that amount and pay to the government and leave. Take that capital good into composition scheme or into exempt supplies. That is what they are trying to tell. So I repeat, their availed ITC, when you go from composition scheme to normal scheme, exempt supply becomes taxable. When exactly reverse scenario happens, you reverse ITC also. That is what government asking. But for capital goods, their quarterly basis you will do, here monthly basis will do. There rule 40, here rule 44. That is the difference. Clear, my everyone? So with this we are done with 18 subsection 1. Of course 2, 3 small one and 4. Now we are moving into the last one, 18 subsection 6. So 18 subsection 6, reversal of ITC on capital goods. Reversal of ITC on capital goods. Okay, shall we proceed, pa? Everybody respond. Right, so the last subsection in this section is 18 subsection 6. 18 subsection 6 is all about the simple 18 subsection 6, same with rule 40 we are going to discuss, but here again it is about reversal of ITC, not availing ITC. This is reversal of ITC. When you are supposed to reverse the ITC, when you are selling your capital goods, you are supplying the capital goods on which you have availed ITC. You are supplying the capital goods on which you have availed ITC. So when you are supplying the capital goods on which you have availed ITC, you should reverse the ITC whatever you have taken on the capital goods. How much you have to reverse now? Same, total ITC availed, there total GST paid, but here total ITC availed, you have already taken 100% ITC. From that 5% per quarter or part thereof, and compare it with for what sale price now you are selling it on. That if we apply GST rate, what amount will be there? Whichever is higher, that much you have to reverse ITC. Let us see a small problem on this. It's simple. Mr. Sanbir Kapoor purchasing capital goods on 2nd June 2023 for 100 lakhs, GST paid 18 lakhs. On 14th Feb, capital goods are sold for 70 lakhs. compute the amount of ITC to be reversed. So now first what we should do, we should see first 70 lakhs into GST rate. 100 lakhs price and 18 lakhs GST means 18% is the GST rate. Wantedly did not give GST rate here. Okay, so that will give you 12 lakh 60,000. Okay, and one more thing what we should see, total ITC availed 18 lakhs is there. From that 18 lakhs, how many quarters you have used, so much of 5% you should remove. I repeat, we are discussing reversal of ITC here. How much ITC you should reverse under 18 subsection 6? It says when you supply the capital goods on which you have taken ITC, when you are selling that, you have already taken ITC on that. How many quarters you are supposed to use it? 20 quarters. How many quarters you have used? Sir, 4 quarters. Then balance for the remaining quarters, you reverse the ITC, no? So total ITC availed 18 lakhs. Sir, I have purchased it in financial year 23-24, sold it also in financial year 23-24 only, sir. Both are happening. Purchase and sale both are happening in financial year 23-24 only. So purchase happened in which quarter? Purchase happened in quarter 1. Sale happened in quarter 4. That means I have used for 4 quarters. So 18 lakhs minus 4 quarters. See, for 4 quarters 5%, 5%, 20% you taking ITC is correct. But you have taken 100% ITC. So reverse that amount. So should I reverse 14 lakh 40,000 or 12 lakh 60,000, whichever is higher means, sir, 14 lakh 40,000 you have to reverse, sir. Am I clear with this, right? 18 subsection 6. When you supply the capital goods, I repeat, when you supply the capital goods on which you have taken ITC already, you should see you have taken ITC and we have given ITC to you, assuming you will use it for 20 quarters, but you have used only for 4 quarters. So balance 16 quarters you should give back to the government. So reverse ITC, but compare it with the sale price. Okay, sale price into whatever the GST rate on that, whichever is higher, the transaction value into GST rate, and this total ITC availed minus 5% per quarter or part thereof. Compare it both, whichever is higher, that much amount you have to reverse. That is 18 subsection 6 for you. Am I clear? So with this we are done with section 18. So dealing with ITC in special circumstances. Subsection 1 is availing ITC in special circumstances. Subsection 4, reversal of ITC. Subsection 6, again reversal of ITC in case of capital goods. Okay, sale of capital goods. Nowadays the institute is testing this section, so please be careful with that. Very, very important section. I repeat, section 18 is important. So nowadays regularly they are testing it at least as an MCQ or some adjustment or the other. May 24 also they have tested a question on this section, and even September 2024 exams also they have tested an MCQ on this question. So please be thorough with this, right? Okay, so with this we are done with section 18, and let us go with the next utilization of ITC balance in the next video. So yes, students, we are going to see in this video the rules for utilization of ITC balance. You know, normally when you have ITC balance, that is in e-credit ledger, you can set off using the e-credit ledger balance GST payable, but you cannot do that however you want. There are certain rules which are to be followed. Okay, so what are the rules to be followed? If you see, what are the rules to be followed? Now, first of all, when you talk about set off of ITC, IGST, CGST, SGST, these are the 3 balances you will be having in your e-credit ledger. And understand, always keep in mind, these 3 are 3 different pockets, your shirt pocket and your pant pockets. Okay, so always think these are 3 pockets. You have money in these pockets, right? You have money in these pockets. You should take money from that pocket and you should spend it. You should not take money from one pocket and keep in another pocket. I repeat, please keep this fundamental point in mind. Sir, you have 3 pockets: CGST, SGST and IGST. ITC balances, that means in these pockets you have money to spend. You should either spend it or you keep it in the same pocket. You should not take money from one pocket and put in another pocket. That means IGST, ITC balance, you should not send it to CGST. CGST, ITC balance, you should not send it to SGST. Leave about set off. I am talking about ITC to ITC itself. Within that, you should not transfer that. You cannot do that. Hope you are clear. Okay, so first keep this in mind. Now coming to the concept, sir, when we are doing the set off of this GST payable with ITC, what are the rules to be followed? The first and foremost rule is, please understand, you should always make sure IGST ITC balance is fully spent. It becomes 0. Without making this IGST ITC balance 0, you cannot touch CGST and SGST ITC balances. I repeat, unless you finish this IGST ITC balance with you, you cannot touch the other pockets, the CGST and SGST pockets. You cannot touch. Am I clear, everybody? You cannot touch these pockets. Clear? So how do I make IGST ITC balance 0, sir? Simple. Use it for IGST payable. After using it for IGST payable also, sir, I cannot 100% utilize this IGST ITC, sir. Still there is balance, sir. IGST payable became 0, sir, but IGST ITC balance still it is there. I told you your agenda is to make it 0. So use it for CGST payable or SGST payable in any order, in any proportion, however you want. Any order, any proportion. But this is the crucial area which you should be focusing. Even though the law says in any order, any proportion you want, please understand you should use that money carefully, effectively, in such a way where your output tax liability becomes as minimum as possible. I repeat, this is the area where you should make sure your IGST ITC balance is more effectively utilized. How that can be done, I will teach you in the example. Clear? So what is the rule here? The first rule is IGST ITC balance should become 0. To make it 0, what you should do? You should use it for IGST payable. After using that also, IGST payable became 0, sir. Still I have balance in IGST ITC. What should I do? Use it for either CGST payable or SGST payable. First CGST or SGST are your wish. How much for CGST, how much for SGST, that also your wish. But here, even though the law says your wish, you should be very careful here, and you should be effectively using that IGST balances for CGST and SGST. Hope it is clear for you. So that way we will make IGST ITC balance utilization. After making it 0, listen carefully, only after, mostly the students commit this mistake. The mistake is, without making this 0, they will start using CGST balance for CGST payable, SGST balance for SGST payable. You should not do that. You are prohibited to touch these balances unless and until IGST ITC balance becomes 0. Are you understanding that point? You are prohibited to touch this CGST and SGST ITC balances unless IGST ITC becomes 0. Once IGST ITC becomes 0, then yes, come start using CGST balances and SGST ITC balance. First, what you do, CGST ITC balance you use for CGST payable. Still you have money there. IGST payable may be there, sir. IGST became 0, sir. IGST payable still there. For that you use. Till you have balance, then you can carry forward. You cannot use it for SGST payable. Same way, sir, SGST payable, SGST ITC, use it for SGST payable. Till there is balance, use it for IGST payable. And the same order what we are discussing, that way only you proceed, then only you will be satisfying all the conditions. Why? Because SGST ITC balance cannot help IGST payable, cannot help IGST payable, I repeat, unless unless CGST ITC balance is 0. That means IGST payable is there. First listen to the rules properly, then we'll see the problem. I repeat, IGST payable is there. Who should help IGST payable first? IGST ITC balance would have helped, it became 0. Then CGST should help. If CGST ITC balance is not there, then only SGST ITC balance can help this IGST payable. So that is what we are discussing here. That is why I'm asking you, follow the same way what we are discussing. First IGST ITC, CGST ITC, then SGST ITC. Like this, the same order if you follow, you will be satisfying the rules. So that way, I repeat, first agenda, IGST ITC should become 0. To make it 0, use it for IGST payable. Till balance is there, use it for CGST payable or SGST payable in any order, in any proportion. Then, if IGST ITC balance became 0, then only start using CGST and SGST ITC. CGST ITC balance can be used only for CGST payable first. Till anything is left out, use it for IGST payable. Till anything is left out, carry forward. Don't use it for SGST payable. CGST, SGST cross utilization not possible. So CGST cannot be used for SGST, SGST cannot be used for CGST. Clear? But both of them will help IGST, no problem. Okay. So now, Sir, CGST ITC balance, okay sir, we have understood. SGST, what you should do? Sir, SGST ITC balance, first you use it for SGST payable. Still if you have any balance left with you, what you should do? You should help IGST payable if anything is there. But if EGST ITC balance is there na, you don't go and help IGST fellow. First IGST fellow should take help from CGST. If CGST cannot help, then let us help. Till then SGST ITC balance should keep quiet. Okay sir, CGST is 0 sir, CGST ITC balance is 0 sir, so I am helping sir. Okay, no problem. Till SGST ITC balance we have, then what we will do? Then we will carry forward. Then we will carry forward. Am I clear? So that is what the rules. Now if you see example. So these are the examples. Sir, we have output tax also, we have input tax also. Now in the exam, what you should be doing, what you will be doing now, you will get the sales, you will get the purchases, some will be taxable, some will be exempt, some will be under RCM, some will be under FCM, all that stuff. By solving all those things, finally you will arrive at these figures. Okay, finally you will arrive at this figures. And how do you set off them? That is what we are discussing. Okay, so what is your first target? Everyone participate, online students, please be attentive, participate. So first, what is our first target? You just keep repeating the answers, assuming that I am hearing you, and you know my name is Vishnu, I am everywhere. Okay, so just keep repeating the answers. Okay, so now what is our first target? Our first target is IGST ITC 0, 1300 I have. I will use this fellow for IGST payable, but IGST payable became 0, IGST ITC still there. And I told you sir, IGST ITC should become 0. Till then you cannot touch CGST and SGST balances, right? So okay, first we should use this 300. For what purpose we can use? Sir, you can use for any purpose sir, CGST, SGST, in any order, in any proportion sir. Okay, now I told you this is the important area. See, always when you are in this particular situation, how you should deal with that now. Please understand, you have 300 rupees in hand and you have two parties in front of you asking for your help, CGST and SGST. Whom you should help? Generally when anybody is asking your help, two members are coming and asking your help, to whom normally you will help? Sir, we will help the person who actually needs the help, sir. Who actually needs the help? So who actually needs the help here? Sir, that how we will understand now. Listen carefully, listen carefully. Sir, CGST payable 300 is there, but ITC 200 is there. That means if somebody goes and help 100 rupees, CGST will be happy, the liability is 0. Clear? Are you understanding? I repeat, CGST output tax 300 is there, input tax 200 is there. That means shortage is only 100 rupees. If somebody gives 100 rupees, CGST will be happy. And same way SGST also, output tax 300 is there, input tax 200 is there. If you help this fellow, if you help this fellow, how much? 100 rupees. This fellow also will be very happy. That means understand, CGST needs 100 rupees, SGST needs 100 rupees. That means both of them together needs how much? 200 rupees. Both of them together needs 200 rupees. Guys, in this way if you are solving, there is no possibility of going wrong anywhere. You will definitely get the perfect answer, because they will not ask in the exam what is the net GST payable. They will ask you net minimum GST payable in cash. That means you should use the IGST balances, ITC balances effectively, so that your output tax becomes less. Okay, so you have 300 rupees in hand. You should see whom you have to help. We are seeing here, this fellow also needs 100 rupees, this fellow also needs 100 rupees. That means both of them needs 200 rupees. And how much we are having in our hand? We are having 300 rupees in our hand. We are having 300 rupees in our hand. So whom you will help now? Hey, you have 300, both of them needs only 100. That means if you help them for 200, almost exactly the answer will be obviously net minimum GST payable will be as less as possible, definitely. So help both of them. After helping both of them also, you'll have 100 rupees extra. That extra amount you give to anybody you want. You give to anybody you want. So now can I say, sir, I'll give both of them 100 I should give. I have 100 rupees extra. That also is split equally to both of them and gives her 150 150. Or I'll give 200 to CGST, 100 to SGST. However you want, you do, no problem. But both of them should definitely get minimum 100. So what I will do, I will use out of this 300, 200 for CGST I will use. That means 100 rupees still will be payable and 200 still here payable. I repeat, for CGST I am helping 200, for SGST I am helping 100. So CGST output tax is still 100 rupees, SGST is 200 rupees. This 300 becomes 0 now. This 300 becomes 0 now. Are you understanding the point? Everybody? Shall I continue? So now the moment IGST ITC became 0, what you have to do? Chakachak. Use CGST balance for CGST payable. CGST payable will become 0. CGST balance still 100 is there. Use SGST 200 rupees balance for SGST 200 rupees payable. So this becomes 0. This becomes 0. What is the final answer? What is the final answer? The final answer is, sir, output tax net minimum GST payable in cash is 0. And we have CGST 100 rupees carry forward. Guys, you make it an answer SGST 100 rupees carry forward. You make it answer CGST 50, SGST 50. You make it answer CGST 99 rupees, SGST 100 rupees. But you should not get the answer IGST carry forward 100 rupees, Ray. Because our target itself only first to make IGST ITC 0. Clear? So that way you solve the set off the liabilities. Am I clear? Everyone? Am I clear, or shall we see one more? So see, if you see here again, we have output tax and input tax. Our first target is make IGST 0. For that, use it for IGST payable. Payable is just 54,000. ITC is 79,000. ITC is 79,000. Okay. So output tax will become 0. Output tax will become 0. ITC will be how much still? 25,000. It will be still 25,000. Yes or no, ma? So it will be 25,000. Okay. Now, what I should do? I have 25,000 in my hand. I repeat the same story, same logic. I'll feel like, sir, I have 25,000 in my hand, sir. I should help two of them, CGST and SGST. The CGST needs how much help actually? Sir, CGST liability is 72,000, sir. CGST liability is 72,000, sir. But it is having input tax itself 75,000, sir. Input tax itself is 75,000, sir. So what should I do? Sir, simple. It doesn't need anybody's help. It is only having some 3,000 rupees extra. Even if you don't help CGST also fine. Okay. SGST, how much help it needs? Its liability is 72,000, but its ITC is only 18,000. Okay, that means this needs 54,000 help, sir. This needs 54,000 help. How much you are having? Sir, I have 25,000, sir. Shameless fellow. Here help itself is needed how much? 54,000. How much you are having in 25 hand? 25,000. Okay, help this fellow fully. Help this fellow fully. So fully help, it is 25,000 to SGST. So 72,000 minus 25,000, till 47,000 is payable. Okay. So now first target achieved or not? You have made IGST ITC balance 0 or not? Yes, sir. Now the moment you do that, use CGST for CGST. So CGST 75,000 I have, liability only 72,000, so liability becomes 0, but I can carry forward still 3,000. Next, SGST for SGST. SGST you have only 18,000 ITC, that becomes 0, but liability is 47,000. So 47,000 minus 18,000, we have 29,000. Are you able to understand? So the liability output tax is 29,000. ITC is CGST carry forward 3,000. That will be the answer. That will be the answer. Am I clear? So you can try the next one. You can try the next one. Okay. So this is how you set off the input tax with the output tax. Clear? And this will be the last step in any problem. Okay. So that is how you utilize the ITC balance. Am I clear? So that is what all about utilization of ITC balances, and see you all again in another video. Thank you everybody, and Jai Hind.